Good morning and welcome. This is NDTV Profit. I am Agam Vakil and you're watching All You Need to Know. Over the next half an hour or so, we will tell you everything you need to know to start the day on the right note. Let's start by taking a look at the headlines. US markets end the day mixed. Dow closes at fresh highs. S&P 500 and the Nasdaq 100 end with gains. And of course, lower respectively, Nvidia overtakes Amazon in market capitalization. And India's CPI inflation falls to a 3-month low of 5.1% in January. Food price inflation declines to 6.3%, while the core inflation falls to 3.6%. And MSCI adds 4 public sector stocks to its index, following a stellar rally in these companies. And the Reserve Bank of India governor says bond yields will soften this year and CPI inflation falls to a 3-month low of 5.1%. And unemployment rate falls to 6.5% in urban areas as labor force participation continues to rise. And Delhi seals its borders as farmers march to the capital demanding minimum support price guarantee. And oil pauses its rally after surging 6% in a week on West Asia tensions. Logistic disruptions continue in the Red Sea as Houthis attacked on American ship in the latest. Now, that's as far as your headlines go. We also take a look at how things have panned out across the globe, and US equities have ended the day mixed. However, the big positive, of course, is that Dow Jones has advanced through the course and in fact closed at a life high. On the other hand, we have seen a little bit of weakness as far as 2 of the other indices are concerned. Overall, the up move continues, at least as far as the US markets are concerned. A lot of that will have to do with the kind of indications that have come through from the Federal Reserve and perhaps some more expectations that the rate cuts that the Federal Reserve has been talking about could perhaps come in sooner than later. That said, as far as your indices go, at least yesterday, as I've suggested, Dow Jones did end with advance of around 0.3%. On the other hand, the other 2 indices were marginally flat. Of course, we also have a little bit of a pause as far as oil is concerned. And speaking of oil, let's take that conversation ahead. We have with us Peter Maguire of XM Australia, who's joining us on the show right here in the studio. Peter, good morning. Thank you so much for joining in.
Good morning. Lovely to be here.
Absolutely. Well, what brings you to India, Peter?
Well, I came down. I always try and make a few visits a year over to India, and it's such a vibrant economy. You know, it's just amazing what we're seeing. And I'm not talking the book up. Yeah. I'm talking fact. And I see incremental change here. If you live and breathe in Mumbai, you probably don't see the changes, but come here every 6 or 12 months and it's sweeping as far as infrastructure and of course what's going on with the dynamic nature of your economy.
Right. Well, Peter, so what kind of conversations are you having with potential investors or traders for that matter, especially in the commodity markets here?
Well, I think they're looking at far as demand picture and what's going on with base metals, naturally with the likes of steel that needs to go into all of these projects, tunnels and roads and bitumen and oil. So the demand picture is very, very strong for internal demand for India. And that's really a conversation in itself. Then you roll across to the likes of gold, and you guys are the strongest buyers globally. So that's very fascinating. And you look at central bank buying, and then the dynamic nature as far as Indian rupee versus US dollar, what's happening as far as interest rate policy and GDP, which is just shooting the moon out.
Right. So let's talk specifics then, Peter. I'm going to start with crude. What are you making of cues coming in from the Middle East? And what are your expectations with respect to crude, at least in the near term?
I've got to look at last week as really a barometer that any market that rises so strongly, like 6% that we saw a shoot to the upside, you can't dismiss that. You don't just say, well, it was 6% last week, and let's just say there's a reason and a cause. So I think that there's probably further upside for the crude market. To the angst of many consumers, the reality of the matter is you've got geopolitical shocks, you've got probably a war premium being built in a little bit as far as tension. and the cost of inflation. Now, ships aren't sailing through the Red Sea, they're naturally to Europe through the Suez, less transport. You've got to go around the Cape of Africa. So all of these concerns naturally cause great hardship and cost naturally to the end consumer.
But at the end of the day, how much has this already translated into actual demand and supply gap?
I look at the picture coming out. You saw what the Saudi Aramco did in the last matter of weeks. They trimmed back from 13 to 12 million as far as production. The other side, of course, is OPEC Plus. They want a higher number, not a lower number.
Right.
And the overall global demand is still very, very strong, rising, and we've got that forecast moving out for many years that it's only going one way, and that's up.
Sure.
So while you have shocks, while you have geopolitical concerns and all of that, the end game or the byproduct of that is naturally price, and that price discovery is what traders trade.
Right. So at the end of the day, I reckon that at least in the near term, we're expecting gold, crude. If it doesn't rise higher, it is likely to remain at these levels.
I would think so. I mean, to go. I'm not saying it's not going to. It's so hard to have no one's a fortune teller that we can look. But the overall picture, the lens that I look through, I would have to say that it's more bullish than bearish.
Right.
And supply shocks, geopolitical, all of these factors create again deal tension for the price.
Right. Peter, you also spoke about your conversations with a lot of participants here with respect to metals. Where is their interest right now? Also, how is it panning out? Do you have any specific names which in fact are looking at good trends coming through?
Well, if I look at the base metal positioning, I mean, it's very, very cheap. If you look at copper to start with, 8,100 a metric tonne. It's been, as high as we know back to 10 and 11,000. So it's very, very I think underwater as far as price at the moment. A lot of those other base metals are. So it's cheap buying.
Right.
And they're all components that go into construction, go into motherboards, go into, copper has got use for nearly, a lot of the electronic world is covered with it. So all of that, silver again. So I think the overall picture is going to be, again, strong demand, and you've had probably one of the major impacts is, I think that is going to wear into the market soon, which is underinvestment in mining across those base metals.
Right.
So again, you're probably going to see price spikes.
Right. And also when it comes to precious metals like gold, how are you seeing things pan out there?
Well, it's 2030, 2050. It seems to be range bound. It jumps to 2070. There's just a short channel or a tight channel that it trades in. We haven't seen that blowout yet to 21.35 that we saw a couple of months back, which was the highest ever intraday. So I think that it's got the potential to probably hit that again. We're waiting to see what goes on as far as US Fed policy with rates, and that plays into it. Though you've got to look at Bitcoin, and I mean, 50,000 now, so you can't shy away from that. What we saw this time last year, 15 and 16,000. So it's explosive to the upside. So there's a level of, I think, interest to the gold market that is very, very strong. And, Indian, it's just mind-blowing what you guys are buying. Yeah.
Well, that's certainly been the case for a very, very long time, Peter.
Yes. Literally millennium.
Yes, absolutely. Well, but, I wanted to take the conversation around the currency forward as well. And you did mention the federal policy, the Federal Reserve, and what they intend to do. Of course, a lot later on in the year, we also have US elections.
Of course.
I'm sure that it doesn't have as much of an impact at the moment. I'm sure there'll be a lot of other factors which will play out. How are you viewing the dollar index right now?
Dollar index still around that 104 mark, and we thought there'd be, if you're putting your mind back to November, certainly it was March was blast off as far as rate reduction, and so the dollar and that fear of missing out rally and all of that, the meat and potatoes that ground that market up, and really it exploded to the upside. The Dow and S&P through 5,000, Dow at record, NASDAQ nearly at 16,000. All of that rally over the last 3 months has been enormous. And everyone thought, well, you'll see a rate cut. Well, that hasn't materialised in March, and they're saying it could be May, and even that's starting to lose a little bit of its lustre. So it'd probably be pushed out to summer. And then, as you mentioned, you've got an election 8 months, 3 weeks away, and who's counting? and it's going to be dramatic, I think, for the political circus and how that plays into Fed policy and naturally inflation and energy prices.
Right, absolutely. Well, Peter, it's absolutely exciting to have you in here in our studio. Thank you so much for joining us and taking us through your views on the markets.
Thank you very much.
Well, that's Peter Maguire for you, and telling us and taking us through what the expectations are with respect to several of your commodities, as well as, of course, the currency. We've spoken about a handful of factors, of course, which could, in fact, influence prices moving in. But we move on, and index providers, MSCI, added 5 Indian stocks to its emerging markets index in its February review. The changes will come into effect from the market close in February 29th. And we have Mahima who's joining us to give us more details on this one. Mahima, good morning.
Good morning, Agam. So as you rightly mentioned, if we talk about the MSCI Emerging Market Index, in the large cap we had PNB and Union Bank as additions, and in the mid cap we had BHEL and NMDC as additions, and GMR Airports Infra was upgraded from small cap to mid cap. If we talk about MSCI domestic indexes, large cap additions include Tata Motors, Macrotech, and mid cap additions include PNB and Canara Bank, and several stocks were upgraded again from small cap to mid cap. They include BHEL, Persistent Systems, MRF, Suzlon Energy, and Cummins India. If we talk about the MSCI Emerging Markets Small Cap Index, IRDA was added to the index, Prestige Estates and RVNL were removed, and GMR Airports Infra was moved to mid cap from small cap. Then talking about MSCI domestic small cap indexes, again IRDA, Vedant Fashion, Cello World added to the index. BHEL, Persistent, MRF, Suzlon were moved to small cap to mid cap from small cap, and Solar Industries India was removed from this index. So a lot of additions and deletions in the small cap index. Top 10 additions include IRDA, Vedant Fashion, Honasa, Cello, and deletions include Persistent, Suzlon, Cummins, MRF, etc. So this is the overall view of the MSCI index data that came out yesterday.
Right, Mahima, thank you so much for getting us those updates. And along with the MSCI, we're also going to keep an eye on what's really happening with the futures and options market. So let's start by taking a look at the kind of play that we have seen yesterday. Let's start by taking a look at what's happening in the index futures. And as far as the Nifty is concerned, of course, that's where we did see a little bit of a come off in yesterday's day of trade, and that weakness should seep in. We should start having that data on the wall in just a minute. There you have it. So we did see about a 0.8% cut as far as the Nifty is concerned, with the open interest increase of around 1.4%. And the Bank Nifty, on the other hand, saw an even sharper cut of around 1.5%, 1.7% to be precise, with an open interest increase of as much as 3.5%. Once again, a lot of shorts building into the system. Have things changed dramatically as far as option markets go? Let's take a look. On perhaps expected lines, we saw a little more writing around the 21,800 core. That's where, and that's also the reason behind the Nifty falling. Of course, in terms of your overall open interest, I reckon that there will be more and more writing around the 22,000 mark. And on the other hand, 21,500 put is the one with the max OI, but remember that open interest there has declined even as the Nifty came off from the levels of around 21,800. Now, of course, it is a Fin Nifty expiry today, so we'll be keeping an eye on that one as well. But now it seems like the action has shifted downwards, 20,000, 20,100 and the likes. Remember, until last week we were playing around at around 20,500. But let's talk about stocks as well. And we have longs building in Astral as well as HCL Technologies. Of course, shorts coming through for Ipca Lab, Bharat Forge and Nalco. In terms of stocks which saw unwinding coming through, let's pull that list up as well and see where there has been short covering in Devi's Laboratories and Escorts, and longs unwinding in SPI, Siemens and United Breweries. So mixed markets coming through, and we're going to continue to keep an eye on the banking index. Of course, the Fin Nifty expiry as well, but a lot of the constituents of the Fin Nifty are also from the banking index as we move in. But talking about and perhaps staying with banking, We also have an update from the Reserve Bank of India Governor Shaktikanta Das, where he says, and he talks about softening of bond yields even as inflation comes in. Listen in.
As we move forward, as inflation has started moderating, now going forward when inflation moderates, logically the final point will be where the bond yields also come down. And in fact, I should say that look at the 10-year bond yield. The 10-year bond yield, I remember in May 2022 when we started this rate increase, the rate hike cycle in May 2022 when we started, the 10-year bond yield was 7.14% or so. Today the 10-year bond yields have again come down to about 7.17, 7.18% in that range. But in between the bond yields had gone up to 7.30, 7.40 and it had remained there for some time. So it is a function of your inflation level and the quantum of liquidity available in the system. If you recall, in the first year of COVID, again due to the efforts of the Reserve Bank and all that steps we had taken, I think that year the borrowing cost was one of the lowest so far as government borrowing was concerned. So therefore, in the intermittent period, the interest payments, as a quantum, it is linked to the bond yields. So therefore, going forward, when inflation is brought under control, I think bond yields will soften and the borrowing costs of government also should come down. Then their 10-year bond yields are in any case they have started softening, and 5-year also. Bulk of the government borrowing are in these two buckets.
And with that, it's time for a quick break, but we'll be right back. Stay tuned in.
फिस्कल डिफिसिट के नंबर को आपने अच्छे से मैनेज कर लिया तो थोड़ा खर्च करने का रूल था, चाहते थे तो कर सकते थे आप, लेकिन वो उस चक्कर में भी या उस लालच में भी आप लोग नहीं आए। मेरा कहना आपके पास स्पेस था, फिर भी क्यों नहीं किया?
सबके मन में ये जरूर एक भरोसा, कॉन्फिडेंस था कि जनता समझ रही है कि जो योजनाएं हम तक पहुंचा और सरकार जो ट्रांसपेरेंट तरीके से किसी लालच में नहीं पड़ा और कुछ लीपापोती करने का कभी कोशिश नहीं किया, ऐसे सरकार जिसका समर्थन होना चाहिए हम देने को तैयार है, ऐसे मूड में देश है।
In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies, for others, kids mean puppies. Some want a home to settle in the future, some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show.
Welcome back, and now it's time to take a look at all the stocks which will be in focus today. We have Anushi joining us with more details. Anushi, good morning.
Morning, Agam. So right off the list, I'll start off with Mahindra and Mahindra, which has come out with its business update, seeing about a 32% increase in its production, while the sales remained up by about 17.7% at 72,000 units. But exports continue to remain muted with about a 42% decline to about 1,746 units here. Moving on to RVNL. So RVNL has emerged as the lowest bidder from the Madhya Pradesh for supplying an installation of a 11 kilovolt of line with an order size of about 101 crore, which is to be executable in 24 months timeline. Again, PSU stocks, especially the railway stocks, have taken a quite a large beating in this 1 week, with the stock being down about 16%. So what needs to be awaited is the positive impact of this news that might be there on the stock today. Next on the list is V-Guard Industries, which has commenced its commercial production of battery in the Hyderabad facility, which required about an investment of about 35 crore, which happened through internal accruals. With this, the manufacturing unit installed capacity is about 3.6 lakh per units annum. Apart from that, the company also plans to open a kitchen appliances plant at Vapi in this quarter going forward. And if you look at the overall, just reiterating the guidance over here, the management has guided for an EBITDA margin of about 9 to 9.25% in Q4 and sees about a blended revenue growth of about 12.5 to 15% for the year. And last on the list is JSW Energy, which has received a letter of award for 500 megawatt of wind capacity project from Solar Energy Corporation, with a further option of about 700 megawatt of green shoe option that will enhance its total capacity by 525 megawatts. Again, the outlook was to have about a 9.8 megawatt of installed generation capacity, but now the company has about a 10.3 of gigawatts of capacity. So these are the 4 stocks that should definitely be in focus today.
Thank you so much, Anushi, for getting us that list. But we also have earnings on our radar, and we have Varsha joining us to give us a fine print. Varsha, good morning.
Good morning, Agam. So let's start with Coal India, wherein if you see, revenue was almost 2% up, but profit did beat estimates, and a margin. So there was a margin expansion of 191 basis points. Now this was due to decrease in a cost of material with respect to revenue. Raw coal production grew almost 11% year on year, while raw coal offtake grew 8% year on year. Board has also declared a second interim dividend of 5.25 per share. Next we have Galaxy Surfactant, where you see earnings have missed estimates. Now this is on the back of Red Sea escalation, which has adversely affected quarterly volumes, and high lead times and freight cost may delay North America recovery. Also, EBITDA per ton has impacted by one-offs. Then we have Skipper Limited, wherein so this was best ever quarter, which was led by strong performance across all major divisions. And also, if you see, infra segment grew 17x, while polymer segment grew 11%.
Right, Varsha, thanks so much for getting us the earnings to focus on today. And from there on, we move on to Bharat Forge, which is also in the spotlight, even as it loses out as much as 14% in trade yesterday. And we had brokerages who have maintained their bearish outlook for the company despite posting above estimate results. We have Mahima joining us to give us more on this one. Mahima, good morning.
Good morning, Agam. So as you rightly mentioned, brokerages have maintained their bearish stand on Bharat Forge. Citi maintains sell and reduces the target price to 800, which was earlier 900. They've said that Q3 results were slightly above estimates basis better gross margins. However, revenue might be less impacted due to business diversification, and subsidiaries continue to be the drag on consolidated earnings basis. And they also mentioned that Q4 FY24 and FY25 could witness momentum in domestic and global markets. Then we also had MK, which has maintained reduce on Bharat Forge with a price target of 1100. They said margin beat in Q3 driven by gross margin expansion. However, there's a mixed outlook in European markets, and the growth outlook for domestic CVs is soft beyond FY24 estimates. So this is what the brokerages are saying about Bharat Forge overall.
Thank you so much for getting us that, Mahima. And we've run out of time on this show, so it's a wrap on this edition of All You Need to Know. India Markets Open is up next. Stay tuned in.
अंतरिम बजट के बाद वित्त मंत्री निर्मला सीतारमण का ये पहला इंटरव्यू है। प्राइवेट नेटवर्क में ये पहली बार हमसे बात कर रही हैं।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the strategy.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
join us as we put the spotlight on 6 stocks.
On your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
You have a missed call. Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish
Hello and welcome to India Market Open. We're waking up when global cues may not be too bad, guys, but it seems like the selling pressure may continue into today's day of trade. I'm just wondering, have we gone from a buy on dips to a sell on rise for the interim?
So the broader market is difficult to say, Samina, but I don't know. Somehow something tells me, I was speaking about this on Countdown as well as yesterday, and who are we to predict? But somehow felt yesterday that some bit of that correction seemed to be overdone. Thoda zyada ho gaya tha, but let's wait and watch. Who knows, frankly.
Yeah, so this was something that Neeraj was saying on the closing show, that maybe we're done with this bout of selling. But nevertheless, if you're looking for any kind of cue from what's happened overnight, then those at least are definitely positive. So let's go through those quickly. There is no breather that the bulls are taking on Wall Street. We're seeing this, every index hitting a new high. Yesterday it was the S&P. Today it is the Dow Jones that has hit a new high, a fresh record high. So you are seeing that kind of an optimism in the US economy and US markets continue. Two very crucial pieces of information that will direct the next leg of this bull run. First, you're going to see Jan CPI data in the US come out later tonight. Remember, the December data was revised downwards, and that's what's given this rally legs, at least for now. You're also going to hear some Fed speak. A clutch of Fed officials are going to be commenting through the next few days, and that's what will be kept in mind. As a result, not too much action on the yields either, because it's a bit of a wait and watch mood. Crude is feeling the pressure because of Middle East crisis, etc., but not really moving this way or that. And very interesting piece I was reading, that's because of the amount of Russian crude India is buying. The quantum of Russian crude in India's basket has now gone up to 36%, beating what we buy from the Middle East. And as a huge buyer or a huge importer, that also is going to continue to have an impact on crude prices. But just Asia is looking good this morning. At least the Nikkei has also hit a record high. Nikkei over 37,000 for the first time. And let's pull up the entire Asia pack, where it's not looking too bad overall. At least Shanghai and Nikkei is okay. Hang Seng a little down in the red. Just a quick look at what happened yesterday. And I know Samina and Neeraj will come to it in a bit of detail. It was the PSU stocks that were selling off. But who was selling off? If you look at the fund flows, no real clues there, because domestic and foreign investors were both buyers at the end of the day. Yesterday, of course, DII is in a much larger quantum. There is no doubt, though, that there was pressure. Now, was it the retailers coming in and looking at, now let's take some of those profits off the table? That's the question, isn't it?
Yeah, and so PSU led downtick yesterday, but it was not restricted. So, frankly, the Nifty was deceptive yesterday, right? Because if you look at the Nifty move, that was not the depiction of what was happening to portfolios. I mean, just speak to 5 people, post-market hours, and everybody was saying that the portfolios got a serious whacking. So the Nifty move yesterday, not a depiction of the pain in the portfolios. And frankly, just looking at levels per se, the max Nifty OI, put OI, is at 21,500. So that one is a key support. And if the index were to take stability at that level, it may well happen, right? Because in some senses, if you look at quant indicators, technical supports and call and put OI, it seems that, who knows, we might find some support there because the world markets aren't doing all that bad, but that may not necessarily be indicative of what happens to individual stocks within portfolios, because frankly, 2 things. One, some of the rallies were overstretched. We've been talking it for a while. So can that extend further? Maybe can. Maybe some bit of buying may not come that easily in PSUs now that people know that the valuations are overstretched, and yesterday was a big crack. And 2, I think the Bharat Forge comment yesterday would set the cat amongst the pigeons when it comes to export-oriented businesses. So not just auto ancillaries, which is of course the key thing, but some of the other exports businesses as well. And for all of you who might have missed it, I doubt anybody would have missed it, but for anybody who's missed it, look at what Baba Kalyani or the management of Bharat Forge has said. They're saying, and this is a repeat, but it is very important. They say that looking ahead, in Q4 and further into FY25, we expect growth momentum to moderate. They are saying that they will outperform, but that doesn't mean anything, because if the growth momentum has significantly come off, outperformance may not necessarily lead to growth. And this morning we don't have the data as yet, but we were looking at yesterday effectively a clutch of these expensive names came off, right? PSUs and some others. Chinmay, we don't have the data right now on the screen, but just before I hand it over to you guys, I asked our research team to just give a collation of some stocks which are trading expensive. So forget the internet stocks like Nykaa, PB Fintech, where the PE may not be the best depiction. But Landmark Cars is trading at an estimated PE multiple FY24, 2024 at some 324 times. This is seriously expensive. Hitachi Energy 214 times. All Cargo Gati 189 times. Mahindra Lifespace some 150 times. These are Bloomberg estimated PE multiples, of course, so they need revision once these actual numbers come into play. But even if you halve them, a lot of these stocks are expensive. So the broader market, some seriously expensive pockets, serious cleansing was needed. We saw the first bout, it may not be it.
Yeah, I think it may not be it. Most people are talking about another 5 to 10% correction, and this is healthy. I don't think we're still in an area where we're concerned. But just to put numbers to the PSU sell-off that we've seen, in the last 3 days, the wealth erosion from PSU stocks alone is to the tune of 3.7 lakh crore rupees. Now, putting this into perspective, if you just take a look at the historical returns, in calendar year 2021, PSU index was up 41%. In calendar year 2022, PSU index was up 23%. In calendar year 2023, we've gone up 55%. And here we are talking about a sell-off. I mean, if you just keep that in mind, what you're seeing right now is a drop in the ocean.
A little shave.
A little shave.
Not really a cut.
But it seems to have hassled a lot of people. A couple of other things. Across the PSU basket, the government, remember, owns 30 to 90% of stake. If I have to talk about what loss every vertical has had, institutional investors have lost 93,590 crores, non-institutions have lost 45,300 crores, and individual holders have seen wealth erosion to the tune of 36,440 crores. So when Neeraj talks about how portfolios beyond the headline number have impacted, that is the erosion of wealth that we've seen. For the last few months, people have been talking about how valuations look stretched, but who's to call it a top or who's to call it a bottom, right?
Exactly.
It's anybody's guess. In retrospect, we can be sitting here and telling you this is what happened and this is why it happened. But like we said, value is like Neeraj and Tamanna discussed, is a Pate Philippe in the Indian market context. But for now, PSU is not enjoying that. Well, I'll move away from that into another important factor. We'll talk about inflation as well, but maybe at a later stage, is earnings. 3 earnings that we had that I have picked this morning. You've had Coal India. Numbers were actually pretty good. Now, whether the markets are going to get excited about this is going to be something we'll have to watch out for. If the sentiment is lukewarm, I don't expect a big positive up move or a rest of sell coming in for Coal India. Profits were ahead of expectations. Revenues were up 2.7%. EBITDA was up by 10%. Margins have also expanded to 31% from 29.53%. Net profits were up around 17%. Key factors is raw coal production has also grown about 10.5% year on year. Raw coal offtake has also grown 8.8%. And of course, for investors, the board has declared an interim dividend of about 5 rupees per share. So a couple of positives. Now, whether that sell-off from yesterday will be arrested on back of these numbers is something we'll have to wait and see. But independently looking at those earnings, they're actually not a bad set of earnings coming in on Coal India. Another one that I did think looked good was Dilip Bilcon. Revenue was up 24%. EBITDA was up massively, 127% to 357 crores versus 157 crores. Margins have expanded to 12.4 versus 6.76, and net profit is also up marginally. A couple of factors you want to keep in mind. While there has been an impact of finance cost was higher by 20%, and that impact you're seeing on profitability, but not on EBITDA. And that's why while margins and top line looks better than what you're actually seeing on the bottom line. Other than that, you also had the order book that's come down from 27 crores peak to 21 crores. So while those numbers don't look too bad on the face of it, when you look a little deeper, the commentary seems a little more concerning at this stage. In good news, they won 4 new projects, and that is a good positive. 100% of the equity divested in the 9 HAM projects and 49% in the 1 HAM project. So those are the few factors you want to watch out for. Could be another rough day for Dilip Bilcon, to say the least. Well, HEG revenues were up 6%, EBITDA was down 34%. Margins have also contracted 950 basis points to come at 15.4 versus 24.9. Net profit was down almost 60% YOY. What they've done is there was a 35 crore write-off of inventory that we saw. In the same quarter last year, there was a write-on of about 110 crores. So the impact you're seeing of inventory is to the tune of about 180 crores, which is impacting the numbers for HEG. So the numbers are not bad, but because of the write-off number, you are seeing that looking a little more distorted than it should. So all in all, I don't think numbers are going to come to the rescue of any of these companies, but nevertheless, they don't look too bad, at least for Coal India to begin with for now.
In note from Nuvama on Coal India, which was quite positive actually. They maintained a buy. They've raised the target price to 561 and have said that Coal India has posted better than expected EBITDA on lower operating expenses. volumes have improved and lower cost to drive earnings. So at least I would say one bright spot in that, government owned companies rainbow that we're looking at. Can't really say the same for SAIL. So Steel Authority of India's Q3 numbers are also out, and imports of steel have been at record highs in India because of construction demand, etc. This has impacted domestic companies. It's been seen on SAIL's quarter, so it's a disappointing quarter. Lower price realizations have hit profits, and this is something that the management has also said. And of course, it's the impact of those high steel imports. As a result, your revenues are down about 7%, your net profits are down about 22% for SAIL. A bit of a margin expansion, very mild, and the EBITDA is also up minimally, I would say about 3%. There is an interim dividend of just about 1 rupee per share. So that's one to watch out for. You might see a negative sentiment, already quite a bit of a crack yesterday in SAIL. Galaxy Surfactants is another one in mind, and remember, it's not just PSU stocks. Specialty chemicals have not had a great time overall, and we're going to be talking to the management a little later in the show. So it's the poor quarter continues. One of the things the management has said in its investor presentation is that the Red Sea escalation has impacted their volumes. We'll ask them how exactly. They also see a delay in North America recoveries, and as a result, you've seen revenues down about 13%, EBITDA down fairly sharply, nearly 27%, and profits down 32%. There is a margin contraction as well. Good news though for Phoenix Mills. Phoenix Mills has had a great quarter. You could even put it down to seasonality to some extent. That was a quarter when people like to shop, etc. So you've seen improved footfalls, improved occupancies at their St. Regis property as well. And they've seen rental growth up 5% in their mall, with overall consumption seeing a 25% increase. So if you were looking for a continuation of that theme, that at the higher end consumption is better, Phoenix Mills numbers definitely underline that. So you've had a pretty strong quarter. Revenues up 44%, EBITDA up more than 43%. Margins are up only at about 26 bips. So with that kind of a top line, still a bit of squeeze, but look at the net profits. You have about 62% up. There were some one-time sort of factors in Phoenix Mills as well, but overall I would say pretty good numbers.
Solid numbers, and the seasonality aspect would be true for the December quarter previous one as well. Maybe it ties in with the urban consumption uptick. So say for landmark cars, Tamanna, which had a slightly iffy quarter, I think all urban consumption themes have done really well, and this is really done really well for itself. So it could be interesting to see what happens to the stock reaction.
All that money you've spent in Phoenix Mills has worked out if you go shopping
No,
there.
but unfortunately now we are going to BKC, right? Because we are right here in BKC, can't go to Lower Parel per se.
And you're only looking at the high end. That's what BKC is.
I'm looking at the high end, I'm not buying that, I must say. But no, but it's a pertinent point. So Coal India, Phoenix Mills, we're looking at good stories. So I'm bringing only good stories today. I'm doing a change, okay? So 3 stocks which have done really well in the quarter. Sansera Engineering is the first one. By the way, at TTM 30 times, Sansera is not the most expensive stock, but look at the numbers. Sales up 27% at 713 versus 560 crores. EBITDA margins expand 140 basis points to about 16.9%. And PAT up 55% at 48 versus 31 crores. It was the highest ever quarterly sales and EBITDA. The order book expanded further as well at 2,040 crores, which is a 36% YOY growth in order book. I think the only question for everything related to aerospace, defense and auto ancillary, which is where Sansera also fits in, is that what Bharat Forge just said yesterday about how their quarterly numbers were very good. They expect quarter 4 to be okay too, but pain beyond that. Could that hold true for a Sansera or some of the others as well? I think remains to be seen. Must say though, this is a far cry from the valuations that some of the others which have corrected yesterday is at. So therefore Sansera could well have a good day today. Let's wait and watch. Slightly better than Sansera was Skipper. Revenues up 80% at 801 crores versus 444 crores. EBITDA up 69% and PAT doing really well for itself as well, about 115% uptick in PAT. So that too, that business has done really well for itself, and you should pay heed to the numbers that This one is posted Skipper. I'm just trying to get you some other details for Skipper, because I think again for Skipper to the best ever revenue quarter led by strong performance across all of the major businesses. Polymer grew 11%, Infra grew 17x or 17%, and the closing order book was very, very healthy. So do watch out for Skipper in the session today. And slightly better than Skipper on the bottom line front or the margin front was Ashiana Housing. Revenue is up 44%, strong, not as strong as Skipper, but look at the margin expansion at Ashiana Housing. 1132 basis points, 17.58 versus 6.25. In these housing companies, it becomes difficult to predict whether it's a one quarter wonder or otherwise, but good quarter, and the PAT up 207%. So very likely that this will react positively too. So top three in my radar after Samina and Tamanna's are these. There are some others, but I'm sure you guys have noted something else too.
Just very quickly, I want to bring in Novelis because those earnings for Hindalco were a big bump up. We will see the reflection of that, but just to take you through that their income has risen to $121 million, which has grown tenfold over $12 million, which was seen the same quarter last year. Remember, Hindalco will also be reporting earnings, so this will be a sort of an indicator what we can expect as it is a subsidiary of the company. Net income has grown 80%, excluding special items. Net sales, though, have actually seen a little bit of a dip. But that's that for you. Another counter we've watched every morning has been Paytm. 197 communication, if you can bring that up on the screen. There was a little bit of relief in terms of what we saw on the stock yesterday. It was left out while the rest of the markets were selling off. Quick one, there's been a downgrade coming in from Macquarie now, where they've slashed the target price to 275 from 650, so a huge cut in their target price on of course Paytm. They've said transitioning to new banks looks very difficult for Paytm. They've said increased loss estimates by 170% and 40% over FY25 and FY26, factoring a 65% decline in revenue that they're expecting the current news flow to have on this entity. They're also assuming 50% cash burn rate and 20 times PE multiples to actually normalize earnings for the distribution part of the business. Lending partners might relook their relationship with Paytm. So those are the factors, and that's what they're very clearly concerned about. I don't think any of us can rule out another day of lower circuit on Paytm on back of that downgrade again.
The fact that Paytm was up yesterday, Samina, is interesting because it was up on the news that their deadline of Feb 29th will be pushed forward. But what the market needs to understand is that, and of course it fell off its highs of the day, but the deadline is being pushed forward for customers to exit, not really as a reprieve for Paytm. And the kind of slash that Macquarie has done in its note 275 is where they look at it. I mean, all right, let's put aside what their earlier target price was, 650, perhaps that was at a different time, but price target of 275 now really, in a sense, underscores the concern about the survival of this payments bank business, at least. Why would anyone come back? Who else is going to come and rescue them? The fact that they say that transitioning to new banks looks difficult is an important factor, really, because as we have reported on NDTV Profit, that they reached out to several banks who did not want to come on board unless there was a very clear mandate from the RBI that whatever mess was allegedly happening in Paytm Payments Bank would not be on their books. There was a comment yesterday from Amitabh Chaudhary of Axis Bank saying once we get the go-ahead, we're happy to help, but they need that clarity from RBI. Harsh joining us in on more details of that Macquarie report. Harsh.
Well, yes, Tamanna. So, it's not surprising because you were going to see a second order impact of this happening. And what Macquarie is really detailing out is with regard to just the number of customers on the Paytm platform, which are 33 crore at the moment, will go down substantially because of a lack of confidence. One, what Macquarie is clearly suggesting is that there will be a fresh KYC required according to their channel checks. They are caveating that, but as per their channel checks, there will be a fresh KYC required for customers, which will basically impact that customer count of 33 crore, which Paytm has on its platform, which will impact the top line of the company by 58% in FY25 versus FY24. So that's a very, very large number in itself. And what they are suggesting is basis their price to sales valuation, which was used for deriving the 650 rupee target price. This impact on top line itself would push the target price to 225 rupees. That's a significantly lower number. So that's the first part. Second, they are suggesting that the lending business will get impacted because lending partners will lose confidence, and they're already doing that. As per their channel checks, AB Capital, which had around 2,000 crore of loans with Paytm, now has reduced that book to 600 crore, and they are expecting other partners to follow suit as well. So all of that will impact the top line as well as the EBIT. EBIT down 71% as per their estimates versus the earlier estimates that Macquarie put out.
Well, thanks for that, Harsh. One line message, muddy waters. It's okay to buy a business 20% higher when the trend changes. Why go out and bottom fish?
Yeah, and a target price of over 50% lower than the current market price. So it's painful.
All right, let's move to another theme that we're discussing today, and it's the kind of crack we're seeing in PSU stocks. We've seen it from the last two trading sessions. If I take in mind, Friday and Monday was truly brutal. If I pull up the Nifty CPSE index, it took a hit, about 4% down. PSU Bank Index was also doing very badly. Nifty CPSE is about 5% down. Ajay Bagga joining us now for more on this. And Mr. Bagga, very good morning. Great to have you on NDTV Profit. The core question really is simply this, that is the pain over? We've been having this sort of mini debate in the studio since morning on whether ज़्यादा हो गया, putting it very simply. Have now some of these PSU counters gone into oversold territory, and what is the biggest concern?
Yeah, I think the second part is easier to answer, Tamanna. Pleasure to be on your show, and I have been now regularly watching your morning segment, and very good, insightful stuff. So I hope you get a lot more market share, which all of you deserve. But coming to your question, I think the biggest issue was valuations had run up much ahead of what the earnings were really showing up. And secondly, the fast and furious increase. PSU Bank Index, if you see over the last 1 year, has given 56% return. Your Bank Nifty is up 13%. Private Bank Index is up 14%. So clearly it was a catch-up after 13 years of underperformance. We saw a catch-up in something like the PSU Bank Index. But last 1 month, if you see what was happening with penny stocks at 90% ownership of government were getting bid up to 5 times, 6 times price to book. When your best banks are running at 2 times, 3 times. And there is no way you could justify 6 times price to book. But just because there was no free float, these were getting manipulated. And I was highlighting that even on the budget day. And now it's coming home to roost. So one was valuation. Second, valuations running much ahead of earnings. And third, some amount of informed buying, which led to some manipulation, which we are seeing now getting distributed in the market. So the retail players are probably left holding these stocks at higher levels. Similar story if you see railways. Normally railways will run up in anticipation of the budget, and then we see a small sell-off in railway stocks. This time the run-up was for nearly a year and a half, and again the valuations are at unjustifiable levels. Same story on PSU Power and Defense. Very good stocks, well-run stocks, good business models, will do well, but probably you have eaten the earnings growth of the next 2 years, and now there is a correction coming in.
Got it. Mr. Bagga, good morning. Neeraj here, and thank you for your kind words, and thank you for seeing our segment. Just one question. I mean, the Zada Ho Gaya comment true for a clutch of other market sectors. Is it true for PSU names? Simply because if valuation concerns is the potent argument, then those concerns are not over despite the 3-day corrective move that we've seen.
I think so, Neeraj. I think it will take time. earnings have to be perceived to take on again. And right now, I think the markets will really look for stability. And if you see, yesterday the numbers were very confusing. DIIs buying, FIs also buying. So who sold was the question. It's the nature of what is happening. In January, if you see, FIs bought about 4,500 crores of IT stocks. I think the money is moving into IT and pharma, which were more under-owned and are showing some amount of stability. Banks are not very favored, but I think we are nearer to the point where private banks will start looking better, Neeraj. I think we are reaching those levels, and a little more correction, and you might see money re-entering private banks. Though banks this year will see falling margins. So, and there is no solution that will come even with rate cuts, because whenever rate cuts happen, the cycle is bad for banks. For the first 2 quarters at least, the margins compress. And for our banks, the margins are already compressing. If you see from last February to this February, the deposit rates are up 80 basis points on average, and loans are up 19 basis points. So clearly there is a margin compression already on, which will exacerbate in the rest of the year. So banks are not a place to be very overweight on, but they are the largest part of the market, so you can't really hide when you have an India exposure.
Ajay, hi, it's Samina as well joining, and I just want to take a step back. What do you think has led to this sell-off? I mean, these counters have looked expensive even last week, right? Was it disappointment on earnings? Was it worries about execution? Was it the budget? Or was it simply taking profits off the table? A, and B, if an investor needs to come back and pick up some of these counters, would it be an event-based trigger or a price-based trigger that they should be watching out for, in your opinion?
It's a brilliant question, and just from experience, one knows that markets very slowly climb up stairs and they come down by the elevator, and that's what's happening. The trigger, you can say, RBI policy to some extent for the banks, where the transparency mechanism set in would hurt margins in terms of processing fees, hidden charges, documentation kind of stuff, not addressing the liquidity, and a fairly hawkish policy in staying at withdrawal of accommodation. I think that was one trigger that really set off this sell-off in the banking side. But mostly, when you have a 56% rise in a year, or if you look at the PSU indices itself had risen so fast, they fall on their own weight. It's not actually a catalyst. Somebody tries, let me try the exit door, does it open? Then they realize it's jammed, too many trying to get out, and it leads to, accelerating sell-offs. That's what's happening. It does not end so soon. Normally, it takes some time to go a little lower and then consolidate around it, get confidence back. But what has changed? What is the big change in these markets? It's just the sheer domestic liquidity that's waiting on the sidelines and the global liquidity. The amount of notes that have been printed right from 2007 up to the COVID 2020, and hardly anything has been reversed. So that liquidity changes the rules. So won't be surprised if end of this week again we have these stocks going up again. That is the caveat. But normally from here you would see them going down further, and as they rise there will be sellers coming in. Somebody who lost 10%, 20% on a railway or a power stock yesterday, they would have lost confidence, and as they slowly walk up the stairs and reach that 10% level, you will get a lot of selling coming in at all those levels. So that's how markets behave. But the liquidity changes all these rules. So that's the caveat.
So very interesting points. Maybe end of the week we'll see a change in mood. Mr. Baga, and such fabulous insight from you. But just to ask the the basic question, the fundamentals on which PSU stocks have been running up, and a lot of it has to do with policy continuity, which is in place, a cleanup of the books, which is ongoing. Is it some of the Q3 results that have also dampened spirits, where there's a bit of a reality check? And do you think that the fundamentals still remain strong?
Yeah, see, Tamanna, at the valuation, you're very good. But when, you get a defense stock, PSU defense stock at 65 times price earning, you really have paid for the next 2 years, 3 years, very good growth for next 2 years, 3 years. You've already paid for it. Same for the railway stocks. Same for power. There will be massive expansion of the power lenders on the renewable side. All these companies will do very well. And, the benefit of being old is, I remember 2007-8 when all the follow-on FPOs of all these power PSUs had come out at very exalted levels. And then we didn't see those prices for the next 10-12 years. So I'm not saying we have reached that level today, but the markets in their exuberance of discounting the forward earnings have done an over-discounting. And that correction has to happen. Companies are very good. Companies are solid. Good dividend yields also. So they are the steady eddies. But you are not pricing them as steady eddies. A utility should not be getting 45 times price earning. It's a steady eddy. It keeps on making power from the river flowing or from their turbines. But it's not going to generate 5 times the power.
Yeah.
That's over the 5 years. And the expansion will come in time, but you are paying for everything without any execution risk baked in. That's what it's all okay in the while you're going up. When somebody tries to exit and can't exit, that's when you see this kind of a correction.
So that correction may still have more room to grow. That's the key takeaway, and very well explained. Thank you so much, Ajay, for joining us this morning. Always a pleasure to speak with you. We'll take a very short break. But on the other side, we're speaking with Ajit Ramya of Ajira Ventures with his top F&O strategies for the day. We'll also be talking with Amar Singh Deo of Angel One and Neerav Asher of Latin Manharlal Securities. So markets, more stock picks, all of that on the other side.
Presented by Patanjali Honey, world's best Patanjali Honey, 100% proven on more than 100 parameters of purity.
फिस्कल डिफिसिट के नंबर को आपने अच्छे से मैनेज कर लिया, तो थोड़ा खर्च करने का रूल था, चाहते थे तो कर सकते थे आप, लेकिन वो उस चक्कर में भी या उस लालच में भी आप लोग नहीं आए। तो मेरा कहना आपके पास स्पेस था, फिर भी क्यों नहीं किया?
सबके मन में ये जरूर एक भरोसा, कॉन्फिडेंस था कि जनता समझ रही है कि जो योजनाएं हम तक पहुंचा और सरकार जो ट्रांसपेरेंट तरीके से किसी लालच में नहीं पड़ा और कुछ लीपापोती करने का कभी कोशिश नहीं किया, ऐसे सरकार जिसका समर्थन होना चाहिए हम देने को तैयार है, ऐसे मूड में देश है।
In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show.
Welcome back. You're watching India Market Open. A quick check on the implied Nifty. It is expected to be another sort of day of trade where you will see a little more weakness. So while that implied FT indicates to a flat to slightly higher start, we cannot rule out the fact that there may be some more follow-on selling that comes through in today's day of trade. We've got Agam who's standing by with more on that. Agam, what are the FNOQs indicating? Bank Nifty looks troubled, PSU is in a lot of pain, and the benchmark itself maybe not painting on a cleaner picture.
Yeah, the Bank Nifty certainly does look troubled. That's not an understatement because, we were working with a lot of factors. We saw about a short covering on Friday, and that weakness seeped back through in yesterday's day of trade. So a lot of the gains that were made on Friday based on the short covering because of the weakness last Thursday have been given away. In fact, now we're starting to see some more downward movement coming through. So as far as the Nifty goes, 0.8% cut there, another 1.5% added towards what potentially could look like shorts. There certainly are shorts as far as the Bank Nifty is concerned because that index came off by around 1.7%, and another 3.5% added in open interest. Where does that take there, as far as the Nifty goes? Let's talk about the options market. And because the fact that the Nifty came off to a certain extent, we also saw a lot of writing around the calls, around 21,700 and 21,800 calls denoted by the green bars here. That's where we saw a little more increase in OI. That of course also brings us to the question of the range based on maximum open interest, which continues to stay at around 22,000 call, but we have a lot more traction around 21,800 and 21,900 calls as well. On the lower end, also more unwinding. As far as the 21,400, 21,500 puts are concerned, even though we have a little bit of a build up there, but nowhere as close to what we are seeing as far as calls go. Let's move on and talk about the Fin Nifty. Of course, that's the weekly options expiry today, and a lot of the action is out of the way when it comes to 20,200. We are now keeping an eye on 20,000. In today's day of trade. The problem with Fin Nifty and perhaps the challenge here is that options tend to contract substantially in the first 1 hour of trade, and after that it really becomes hard to take short positions as far as your options are concerned, at least as far as Fin Nifty goes. And this is despite the fact that we've seen an increase in volatility and premiums have been relatively on the higher end, but that contraction is very swift, and hence the risk to reward ratio for selling options becomes unfavorable. I will also wait and watch whether or not that in fact happens today or no. But let's talk about stocks then, and of course we keep an eye on Astral and HCL Technologies, where in fact we've seen longs building up. Shorts for Ipca Labs, Bharat Forge and Nalco, and on the other hand stocks which have seen unwinding. We saw short covering in Devi's Laboratories and Escorts, and SBI, Siemens and UBL will tend to see a move downwards, so longs and winding coming through. The question really is, what do we do with all this data that we have on our hands? Let's get in an expert voice. We have Ajit Rambiar of Ajira Ventures, joining us on the show. Ajit, good morning and thanks for joining in. Let's start as usual by taking your view on the Nifty and the Bank Nifty.
Yeah, good morning, Adam. Thanks for having me on the show. Reflecting on recent trends, our previous strategy of sell on rise has been validated by the market dynamics. So we are sticking to the same plan as right now. It feels like season for grabbing profits. We have also witnessed a pattern of healthy upside movements in various counters, followed by swift corrections. So we should keep our eyes open for such upward swings and also be ready to hit the sell button when things start to look shaky. It's all about playing smart and knowing when to cash in these gains. Talking about the indices for Nifty, we can place our support at 21,625 and resistance at around 21,850 levels. And for Bank Nifty, we can place our support at 44,950 and resistance at around 45,400 levels.
Right. So, the view from Ajit is that we need to be nimble, we need to be agile in these markets, and we need to change our view on the markets depending on exactly where they are. And of course, Ajit has already given us the supports and resistances for the two benchmarks. But Ajit, I believe you also have a view on Divi's Laboratories. We saw a bout of short covering as far as futures are concerned yesterday. What is your strategy on this one?
Like we have bullish on this counter, target of around 4,000 rupees. So we initiate a bullish butterfly strategy for this counter, where we buy one ATM call of 3750 at around 106 rupees. We sell two calls of 4,000, which is our target price, at 34 rupees, and hedge it with buying one OTM call of 4,200 at 30 rupees 25 paise. So the cost of this strategy is around 51 rupees, and we can, if it closes at our target price, we can gain around 200 rupees, which is the risk reward is around 1:4. So we try to comply such strategies where we have good risk reward ratios.
All right. Well, there is no doubt about the fact that it's a favorable risk reward ratio, as mentioned by Ajit, 1:4. And of course, your maximum gain will be around the 4,000 mark as far as Divi's Laboratories is concerned, because that's where you have, in fact, two short positions coming in and thereby eating the entire premium. But let's move on and talk about the other one, and this is an Adani Group company. Ajit, can you take us through that one as well?
So we again bullish on this Adani Enterprise with a target of 3,500 by this month end. So we initiate a simple bull call spread where we buy a 3,200 call at 98 rupees and sell a 3,500 call at 28 rupees.
All right. Well, Ajit, thank you so much for getting us that update as far as Adani Enterprises is concerned. And of course, a quick reminder that Adani Enterprises is, of course, the group company which also owns the channel that you are watching. But Ajit, on that note, thank you so much for joining us and taking us through your views on the markets and also giving us a handful of trading ideas. And with that, it's back to you, Samina.
Thank you, Agam. That, of course, is the setup this morning in terms of the F&O activity. It is going to be a little bit of a weekday. Some more selling cannot be ruled out. 21,500 becomes an important level on the index. But guys, I think another important trigger that we haven't marked this morning is inflation. The number has cooled off to 5.10 for the month of January, a tad bit lower than what was expected. But let's not forget, I think the problem continues to be food inflation. That has eased off very little, come down at 8.3, down from 9.53. But if you break that down between vegetables, pulses and cereals, the pressure is very obviously there for everyone to feel and see. What also we need to keep in mind is that call rates are still at 6.85 yesterday. So liquidity continues to remain tight. Inflation number, while it's come at 5.1%, it is still much higher than the RBS comfort zone of 4%. So on the face of it, good number, but I don't think it's going to do much for the bond markets this morning. And of course, the bigger cue, this all is great academically, right? Yeah. Is going to be the US CPI data, the bond yields there, and that could be the bigger driver for any action that the RBI could take or the bond markets could do.
Yeah, I'm just a bit worried with the core deflation, really, the core CPI coming off the way it has.
We did talk about that.
Yeah, and that is just such a good barometer for what's happening to underlying growth. And then if you couple it with what corporate commentary seemingly like, I wonder if growth pangs could come to bite us, say maybe Q1 FY25. That the core CPI number, while overall inflation remains high and corporate commentary being slightly sluggish, is a bit of a worry.
That increases the case for the Reserve Bank not to necessarily wait for cues from the Fed and look at what's happening domestically. And very interesting comment yesterday from RBI Governor Shaktikanta Das. Let me just play that out for you, who says that he expects bond yields to soften, inflation to moderate and the cost of government borrowing to fall.
As we move forward, as inflation has started moderating Now, going forward, when inflation moderates, logically the final point will be where the bond yields also come down. And in fact, I should say that look at the 10-year bond yield. The 10-year bond yield, I remember in May 2022 when we started this rate increase, the rate hike cycle in May 2022 when we started, the 10-year bond yield was 7.14% or so. Today, the 10-year bond yields have again come down to about 7.17, 7.18% in that range. But in between, the bond yields had gone up to 730, 740, and it had remained there for some time. So it is a function of your inflation level and the quantum of liquidity available in the system. If you recall, in the first year of COVID, again, due to the efforts of the Reserve Bank and all that steps we had taken, I think that year the borrowing cost was one of the lowest so far as government borrowing was concerned. So therefore, in the intermittent period, the interest payments, as a quantum, it is linked to the bond yields. So therefore, going forward, when inflation is brought under control, I think bond yields will soften and the borrowing costs of government also should come down. Then their 10-year bond yields are in any case they have started softening, and 5-year also. Bulk of the government borrowing are in these two buckets.
Okay, well, let's just see. I mean, this is all a good debate to kind of argue about whether the RBI will do, won't do, needs to do, doesn't need to do. Let's see when the governor decides to move the needle. But what we can do is try and give you insights on what are the stocks that could be in action today. Now, let's start off with the list. Between Samina, Tamanna and me, we've spoken on the trade setup about the key stocks that you should monitor on the back of results or news. There's one more piece of news, which is that index provider MSCI has added 5 Indian stocks to its emerging market index in its February review. The changes will come into effect from close of February 29th, and there are 1 or 2 surprise inclusions, by the way. Mahima joins us with the key details. Mahima, good morning.
Good morning, Neeraj. So as you rightly mentioned, the MSCI Emerging Market Index has 5 new additions. In the large cap, we have Punjab National Bank, Union Bank of India. In the mid cap, we have BHNL, NMDC, and GMR Airports Infra has been upgraded from small cap to mid cap. Now, if we talk about the domestic indexes, large cap additions include Tata Motors and Macrotech Developers. Mid cap additions include PNB and Canara Bank, and we have several stocks that have been upgraded from small cap to mid cap. These include BHEL, Persistent Systems, MRF, Suzlon Energy, and Cummins India. Talking about the emerging market small cap index, IRDEA was added to the index, Prestige Estates and RVNL was removed from it. And if we talk about the overall domestic small cap indexes, IRDEA, Vedant Fashion, Cello World were added to the index. BHEL, Persistent Systems, MRF, Suzlon were moved from small cap to mid cap, and Solar Industries India was removed. So this is the overall summary of the data that came out yesterday.
Okay, Mahima, thanks for that. I thought the inclusion of GMR Airports was also an interesting one. And let's pose the questions around all of that and more, and the index to our guests. On the fundamental side, Nirav Ashar, Head of Equity Research at Latin Manhalal Securities. So he joins us on the show. And on the technicals and derivatives, Amardev Singh, Head Advisory, Angel One. Gentlemen, thanks so much for joining in. Amar, I'll start off with you. What did market action yesterday tell you about what to do in the next few days? Because the Nifty, I mean, 1% can happen any given day, but just that the pain in the broader markets was very, very sharp. So what do you advise on a day like this then?
We've been clearly telling for quite some time is that the short-term trend for both the indices, or I would say all the major benchmark indices, clearly tells me that it's not going to be easy for Nifty to really rally sharply from the current levels, because the structure of the market isn't clearly spelling that out. And also, if you look at the major heavyweights, there also we are seeing a significant tussle. So on one hand, IT stocks and Reliance, they are doing well, but on the other hand, the private sector banks are really not able to, I would say, deliver returns. So that clearly tells me that there's a lot of tussle and struggle happening. And also what we are seeing is that if you look at Nifty per se, clearly it's in a no man's land. So it's more of a trendless market from a short-term perspective. And we are seeing that it is inching lower now. It's very crucial that it should not breach, because if you look at the levels somewhere around 21,000, 450, 500, that's an immediate zone of support for Nifty. And we could witness some pullback, because yesterday's low was 21,574, and then from there it bounced back, but it was not able to sustain. Higher levels are being sold into, so this is a very small range. I would say 21,400, 21,800, that's a range. And even if it goes higher, we'll see profit booking coming in or selling pressure there as well. And also, if you look at the derivatives data, we have seen some sort of short build-up happening, but that's more or less not too much of a concern right now. Because one good aspect is that HDFC Bank is around very crucial support zones. So that those support zones, if they are broken, then we could witness some significant sell-off happening in the markets as well. Otherwise, markets could consolidate, waiting for some fresh triggers as well as global or domestic triggers for the market to fire.
Right, it's a market waiting for fresh triggers. Very good morning, Amar. Great to speak with you. Just your take on Coal India, Steel Authority, and what are your top two picks on a day of possible consolidation like this?
So looking at Coal India, we need to realize that Coal India has had a stellar rally. So somewhere you have to have correction, and correction is also always healthy in a rally. So I think that's what we are witnessing in Coal India. The stock has witnessed some sort of correction, but it's given phenomenal returns over the last I would say 5-7 months. So Coal India, if you ask me from a long-term perspective, the trend remains up, but these are very crucial resistance zones for Coal India. So the recent high that Coal India had made, so if we go back and see, so somewhere around 465, 470, now that should act as a short-term top, and we could witness some consolidation. On the downside, 400 would act as a zone of support. So any pullback towards that level can be a good buying opportunity. Upside seems to be capped around the 470 mark. Talking about the other stock which you mentioned, I'll just if you just come with the name once again.
Steel Authority, SAIL.
Yeah. I was of the same view. So if I look at SAIL, SAIL seems to have a lost steam right now because on the intermediate term trend, it has made one of those patterns which clearly tells me that top has been made for SAIL in the short term. So the 150 level, which it had recently hit the high. So now that should act as a zone of resistance. And even if we look at on the long-term charts, so somewhere in the month in September 2021, it had made around 145, 150. So 145, 150 is a very strong zone of resistance. It's not likely to breach that in a hurry. So it could witness some consolidation. It's currently on 122 odd levels. Any pullback towards 110, 100 levels, that can be a good buying opportunity where we could witness some pullback, and a 20%, 15-20% rally from a short-term perspective is possible. So these are the levels to watch out for SAIL.
Right. We also have Nirav joining in. Nirav, hi, good morning. Are you ready to go out and shop some of those PSU names, or it's not time yet?
Yeah, thank you. Good morning, and thank you for having me on your show. First of all, I think the first 1.5 months of this year have clearly shown us that what could potentially be in store for us for the full year. And I think while last year the rally was built up on expectations, I think this time around in this year, it's going to be a performance check, a reality check. So I think on the basis of the numbers, on the basis of the results of what we have seen, I think this has been a kind of a reality check for a lot of stocks. Railway stocks in particular, while the long-term story looks very, very compelling and intact, but I think in the short term, of course, still things are yet to take off in a very, very meaningful way. So I think we still expect some more healthy correction in these railway stocks. And at this point in time, from a broad perspective of the PSU stocks, I think we would like to look at quality names which have started delivering in terms of performance. So I think there are better names in the PSU space which have delivered good results. And I think we would like to concentrate on those names.
Right. Nirav, that's a good point. Concentrate on those names. Also, I want to talk to you about some of those earnings that we've seen, and I know Tamanna talked to Amar about Coal India. You saw those numbers. We saw that sell-off yesterday on back of the broader theme of selling that was underway. But those numbers actually look pretty good for Coal India this quarter. Would that be a trigger to arrest the fall and also a trigger for investors to jump into Coal India if needed?
If you just see the performance of Coal India, it has rallied from 230 levels to where it is currently at this point in time. So I think a lot of upside is already there in the price. So I think still this good result, this good performance will be used for profit booking by the savvy investors. So I think it would be a little bit early to jump into this stock at this point of time, because we are seeing a trend of profit booking wherever there are good results. Just a case in point, yesterday we saw Hero MotoCorp very strong set of numbers, but already the performance was there in the price, so it was used as an opportunity for profit booking. So my sense is that the way the market is behaving at this point of time, every opportunity will be used for profit booking, at least at this point of time.
All right, very quick break on the show, but we'll be right back in time for pre-open and set you up for the day's trade. Stay tuned.
अंतरिम बजट के बाद वित्त मंत्री निर्मला सीतारमण का ये पहला इंटरव्यू है। प्राइवेट नेटवर्क में ये पहली बार हमसे बात कर रही हैं।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right. Some believe in swiping right. Some run away from risk. Others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Welcome back. You're watching India Market Open. While the equity markets may be a little bit of a down day for the street and maybe a little disappointed, it'd be interesting to see how the bond markets react to that inflation reading that came through yesterday. Jayesh Mehta of DSP Finance joins in. Hi Jayesh, good morning. Thank you for joining us. Interesting number. It's come in at 5.1%, so slightly higher than 5%. Do you think we can manage sub 5% over the next 2 to 3 months? And also comment on the internal concerns? Because while core inflation has eased off quite sharply, food inflation, pulses, cereals, vegetable continues to see an uptick year on year.
Hi, good morning. So inflation number, of course, it came as per the expectation. As you asked, for the next 3 months, core definitely is coming lower. And of course, people are now looking at straight FY25 projection, which is at 4.5%, and which is quite achievable. In fact, a lot of analysts are around the same levels, right? So it's like plus minus 20 basis points. So from an inflation perspective, it is at this moment, sitting today, right? Of course, you have geopolitics worldwide, logistic issues worldwide. If that really happens, that's a different story. But at this juncture, we are like looking, we should be on the target at 4.5% for FY25. So from that perspective, I think definitely we are looking, of course, even in US now, people are looking at sub-3. So global as well as local. I think on the food side, yes, we do have a challenge. We still need to see how the monsoon pans out, but that's been there every year, right? Proactive government management also has been helping, so we should be okay.
I want to really simplify this for the sake of our viewers, and it was a conversation that we in the studio were also having. And we've been repeatedly saying this for over a decade, that the RBI can't cut rates because the Fed is not going to cut rates. My argument, of course, is because there's a rate differential at play, and that's going to impact the currency. But the currency is obviously monitored by the invisible hand and has been ever since we know the currency. So just for the understanding of just common man out there, tell me, why can't RBI cut rates if it needs to encourage growth? Why are we so dependent on what the Fed does? Just simplify this for us.
So absolutely right. They can cut rate, but right now headline is still at 5.1. We will see the expectation panning out maybe in the first quarter, right? Their target is still at 4%. And at the same time, growth is not really suffering. Like if you really look at this current financial year and the next financial year, both the times RBI growth target has been higher than the market. And if you look at this financial year, when RBI projected the growth number for this financial year, people were saying RBI is being too optimistic, and the actual number came higher than RBI. So from that perspective, the growth number per se, I'm not struggling. Yes, you are absolutely right. At this moment, if the growth numbers were struggling, and therefore our real rates are higher, because even if you look at 5% and we look at 6.5% the monetary rate, we would still go ahead and cut it, even if US is not cutting it, right? So we would go ahead and cut it. But as of right now, you don't have the worry on the growth side of it. And to that extent, they would rather wait and watch. I'm not saying that they have to wait and watch, but at this moment, with so much uncertainty, not only U.S. interest rate, but also global geopolitical and all this stuff put together. So maybe I won't be surprised, people have given up completely saying that only after U.S. RBI will cut rate. I won't be surprised if they cut it in April policy.
That's a good point. One last question, Jayesh, and I do understand the governor has also said that he's going to be nimble, and I think that's what's most critical, keeping in mind what's happening globally as well. But of course, being a bond trader is very different from being a debt investor, and large part of our viewership is also people who'd probably be debt investors as opposed to just bond traders. What should a debt investor do? Because I know for a fact that a lot of people who entered the debt markets maybe a year or 2 years ago on anticipation of a rate cut have been hit by M2M losses. At this stage again, early this year, we were talking about how duration is a great space to be in because we're expecting a rate cut. All that keeps happening is the rate cut expectation keeps getting pushed further down the road. What should a debt investor do at this stage with an existing portfolio, and with incremental coming in, do you think duration still is advisable?
Absolutely. In fact, that's what you started very well, right? So it's a great market for investors, right? Investors should not be really worried about 10, 20 basis point up or down move if they are basically an investor, right? it's actually a difficult market for trader, right? Because what happens is, like today, you do have a view that in 6 months' time or so, we are going to go to 680, right? So, and you are at 710. Now, does that 709, does that mean that I'm going to go one way to 709 to 680? The answer is no, right? You might go, 705, you might go to 720, 715, 712, and then again maybe at 7. But eventually, it's not a straight road going from 710 to 680. So it becomes difficult for trader to be in and out unless they get right all the time, right? For investor, definitely, if you look at like today from a 1-year horizon point of view, at 710, you are looking at, even without rate cut, with the index flows coming in, we would be going to 680 in this financial year and next financial year. And also at the same time, if you really look at it, if there is even one rate cut, maybe two, possibly two also, but even if it is one rate cut, investors going to get almost like 710 to 650, 60 basis point rally capital gains along with their coupon. So it's a pretty good level for investor to get in.
Okay. Thanks for that advice, Jayesh, and great having you this morning. Pertinent to have you, so thanks for taking the time out. Okay, back to the equity conversation. The summation seems to be that he won't be surprised if there is a move by the Reserve Bank of India before a Fed move. Now, let's see when the Fed move happens and when the Reserve Bank of India move happens. But not a bad time to get into duration as well is the summary of that conversation. But back to the equity conversation, in conversation with Amardev Singh and Nirav Asher. Now, we're looking at numbers that have played out, and the metal names seem to have a slight wobble as the reportage has gone by, because the earlier names were okay. Now we're starting to see a bit of a fiddle there. Nirav, come in on what you made of SAIL, what you made of HEG, not strictly a metal name but related, and what is the call on those names fundamentally?
So as far as SAIL is concerned, I think there was some pressure on the margins, and I think that left something more to be desired on the performance front. So SAIL, to my mind, has been a slight of a kind of a disappointment. But I think that should be in the short run, and I think things should settle down as far as the stock is concerned. And coming to the next stock, which you pointed out, HEG, I think both only two companies in this space, Graphite India Limited and HEG. This is a very, very niche space. There are a lot of entry barriers in this business. Most of the producers of graphite electrodes, they are concentrated in the developed countries like US, Japan, etc., where the cost of production is quite high. So a lot of production is likely to be diverted towards India, and I think the obvious beneficiaries of this is going to be companies like Graphite India and HEG. And one more important factor is that the focus on decarbonization and the clean energy, etc., is going to increase the demand for steel, which is going to be made through the electric arc furnace route versus the traditional blast furnace route, which used to be very, very pollutive in nature. So I think the prospects for Graphite India and HEG look very, very exciting from a long-term perspective.
Okay, from a long-term perspective, exciting. But the pre-open rate's about to settle in, and we have, lo and behold, a bit of a green on the Nifty and the Nifty Bank as well. This may not last really, but for now, it seems that we'll start off on a good note, so keep that in mind. Now, draw attention to yesterday's stock of the day to our mind, and that is Bharat Forge. Actually, multiple stocks could have taken the crown for the stock of the day, but Bharat Forge was down about 13-14% in the session, a late trade yesterday, on the back of the comments that came in from the management around growth. Now, Amar, just trying to sorry.
I think there was a graphics that we should raise on MCX. They're facing a technical glitch, and the teams are working to resolve the same. The markets will be open tentatively only at 10 a.m. So, quick update on that. It's beyond the stock reaction really, but if you are a trader on the MCX, trade will only resume at 10 a.m. because of a technical glitch, and that's the statement that they put out. But sorry, back to you.
No, this is big from a commodity trader's perspective for sure. The unequivocal leader of that bucket. So important update there. Actually, in MCX, by the way, is reeling with some bad numbers as well. But first go to Bharat Forge, then maybe come to him. Actually, let's talk about this. Both these. But first, Bharat Forge, Amardev Singh, a bit of not a bit of a sharp pullback yesterday. Difficult to call about charts per se, but looking at the charts, the derivative positions, etc. Do you think there will be stability? Because Morgan Stanley believes there will be. It's overdone, and some other brokerages have cut the target price.
Yeah, looking at Bharat Forge, the way the stock has collapsed, I would say yesterday. So that tells me that definitely a top has been made. There's no doubt about it. And even if the stock bounces back, it could be a temporary respite or bounce back. So wouldn't recommend at least longs at the current level. And if these levels are breached, so yesterday's low, if that is breached, then we could witness some real sharp correction, another 10% correction in the stock. So yesterday's low is something which one needs to keep in mind. That was around 1116. So roughly around 1100 levels. So if 1100 levels are breached, then the next support is coming around 1000. Also, if you look at the intermediate term trend, so intermediate term trend was displaying clearly bearish divergence on the charts for quite some time, at least, and it was displaying for over the last, I would say, going back from January, second week onwards, there was bearish divergence on the chart. So that was clearly telling that the momentum is no longer there, and the stock is likely to lose steam. So I wouldn't recommend any position in the stock right now.
By the way, just take a look at how Coal India has been performing in the pre-open session, and definitely some spot of green over there after the numbers, better than expected. We'll pull up Hindalco and SAIL as well. Are we going to see a bit of a pullback earlier than expected on your entire PSU pack? Difficult to say, but as we're getting into the last leg before markets open, Amar, I just want to get your calls for the morning.
Yeah, so the first call is, if I look at, is Zydus Life Sciences. So this is one stock which is extremely strong on the charts. We've seen the stock rally, and even if you look at the current month, the stock is up almost 12.5%. It's trading very strong on the long term as well as the intermediate term trend. So any pullback in the stock towards 845, 850, that can be a good buying opportunity, with the stop loss below 820 and a target of 915 on the upside. So that is one stock one can look at. And the other is also from the, I would say, pharma space. So that is Divi's Lab. So if I look at this, the stock seems to have formed a bottom around 3,700 levels. So any pullback in the stock can be used as a buying opportunity, but it's more from a trading perspective, because 3,800, 3,850 is the upside one can look at, with a stop loss below 3,670. So this is the other stock one can look at.
Nirav, very quickly, your take on the PSU pack. We spoke earlier in the morning before the pre-open session. Anything you would touch today, or would you look or advise exiting positions if the opportunity presents itself?
Yeah, while a large part of the PSU positions, I think we would advise to stay away from. But I think one can start looking at quality names like, for example, Bharat Electronics Limited. I think at 175 levels, we would start accumulating this stock, because the performance has been quite strong. The order inflows have been strong. So we would be very, very selective as far as picking up stocks in the PSU space is concerned. But definitely, we would like to look at quality names. I think Bharat Electronics is one of them. And we would look at, especially at the shipbuilders like Cochin Shipyard or Mazgaon Docks or Garden Reach shipbuilders, etc. So I think we will start picking stocks very, very qualitatively.
Currently the talk in the circles is that the better way to play the financial space is through non-banking. And that could be capital markets, brokerages, and the list is extensive as well. JM reported numbers yesterday. The numbers were phenomenal, actually. They've seen a 46% rise in profit. No surprises there, given that the private markets have seen so much of euphoria. They've also said that their top line came in at 35% higher. The stock in pre-open trade is already up 7%. Do you think JM could be a buy till the IPO markets remain euphoric and maybe a good proxy to playing the capital market space?
Yes, definitely. Why not? Because JM Financial has reported good set of numbers. The operating environment for them remains perfect. And I think with more and more focus on M&A activity, I think definitely JM could be a beneficiary out of this.
Okay, Jaiman, stay on. About 50 seconds left and we'll come to you post-market open. But actually, since we have 44, Amar, can I quickly ask you in 20 seconds if you can give us the one top call for this morning?
Yeah, so as I spoke, Zydus Life Sciences is one stock one can definitely look at. It's in a very strong upside momentum, has a potential to rally towards 900, 920 odd levels. So this is one stock one can definitely look at.
Okay, we'll watch out for Zydus on the upside. We should mark MCX post open and just see if indeed post the results pull back yesterday, is there more pullback because of this as well? Who knows? Hindalco is something that we should definitely keep at the top of the mind because the pre-open session is suggesting it'll start off weak. Will it pull down Nalco and some of the others along with it? Is the question that the markets will answer. And here's what the markets are saying. Flat line, really. I mean, 0.2% is as good as flat. 0.26% for the Sensex. Bring up the bank Nifty and see if there is a bit of a short covering move at all. No, not really. Quite flattish really for the bank Nifty as well. Yesterday there was a bit of a serious pullback there. Mid caps and small caps, which are the pain points. I wonder if small caps have corrected a bit more than the mid caps. Pull that index up and that too is flatlining. So no great shakes really. Bring up the heat map. I think individual stocks will be moving a lot more than what the flat line is suggesting. So on the downside, Hindalco 9.5%, the stock of the morning, 9.5% down, nearly 10% down for Hindalco. This is the big headline from the market open this morning. Some others like Power Grid, JSW Steel, okay, but this baby out here is the one which is sulking the most and deserves all the mention on a day when the market breadth is actually positive on the Nifty on open. So Hindalco quite strongly the stock that we should focus on. We'll talk to Nirav and Amar about it immediately post market spotting. Coal India is reacting positively to numbers ahead of Bloomberg estimates, so 2.5% higher. There is strength in Hero MotoCorp. Got punished yesterday, but today a slew of brokerages have come out with views which are very positive. HSBC for one has increased the target price quite stiffly. That is reacting, a bit of a reaction for ICICI Bank, Reliance. Now you know why the Nifty is finding the strength. Heavyweights are piling on the gains. There is strength in SBI as well. Actually not strength really, but kind of there. So not bad going for the index, being dragged down maybe a couple of little by metal names, but banks are doing the trick this morning for pulling the index higher. Opposing factors on the metals index at play, Tamanna, is the news from the index. What about the broader end?
Absolutely. Let's pull up what's happening to the mid-cap and small-cap indices as well, because those have been the pain points. Relatively, your top-line indices have been fine and not too bad, actually, this morning. Very flat and not really seeing too much pain. Let's pull up the small-cap as well for a second and see what's happening there. So nothing massively to rue about this morning, a consolidation phase perhaps, but stock specific, that's where the story always lies. So let's start with what's happening with Paytm. A Macquarie note today plummets its target price to 275. The stock making every attempt to actually get there, down about 6%. Bharat Forge is the other one we should talk about, already punished by the markets yesterday for their honesty in a sense, talking about how they see growth moderating. Brokerages have also cut their targets. That's talk about 4%. Coal India, SAIL and Phoenix Mills are the other ones we're talking about. Coal, Neeraj already mentioned, has had a good morning, maybe paring down from its initial inputs. SAIL down about 4%. Again, disappointing results. Phoenix Mills numbers actually look good on first sight, but is not responding too positively this morning, but a lot more action taking place. Amina, what's on your list?
A few stocks, but I'm just surprised of why we are seeing the reaction that we are, and we'll discuss that on Hindalco. Novelis numbers didn't look too bad on the face of it. Now, unless the commentary has something more than what is catching our eye, is going to be important to see. Remember, Hindalco usually reports soon after you have its subsidiary Novelis report. So, nervousness very clearly being felt on Hindalco this morning. A 10% cut is what we have. Beyond Hindalco, in the broader market, some excitement for a few names, and we don't think traders are going to get carried away on this, but remember, railway names have been getting beaten out in the last few weeks. We continue to see some, interestingly, we see some buying across those places. So the Indian IRFC is seeing a 5% up move. Now, this is coming after many, many days of underperformance. Remember, railway stocks had started selling off even before the larger PSU basket was getting dumped. So just before the budget is when railway stocks were seeing some weakness. So these are the first guys that are recovering now in terms of trade and seeing some buying. So IRFC, RVNL, IRCTC are all making, Titagarh, Jupiter, are all seeing marginal upticks. You want to remember that earnings of some of these counters have not been very impressive, but keeping that in mind, despite that, you are seeing a movement. Paytm is not taking it to the chin, which is a little bit of good news coming in for Paytm investors. The stock is down, but far away from lower circuit just yet. Threatening levels of 400 on Paytm for now, about 4% lower on the counter. Apart from that, you've got JM Financial. Like I said, fantastic quarter for them. The euphoria and buoyancy in the IPO market is one big reason why JM Financial has had such a superb quarter. That was reflected in its earnings. The commentary remains solid. The stock is up 5% in early trade this morning. Well, apart from that, you've got GMR Airports. They posted numbers too. Good earnings there, 3.5% higher. Some of your PSU banks that Taman and Neeraj both mentioned are seeing buying coming in trade. Whether or not this is going to sustain for even the day is something we'll have to wait and see. But for now, the early ticks don't look too disturbing. So waking up to some gains after a pretty rough yesterday that we saw. Well, MCX, despite a notification this morning that they are going to be dealing with a technical issue and only trade or open the exchanges at 10 a.m. is seeing a little bit of a gain. 1% higher is what we have on it. Neeraj, you want to come in on Hindalco, I guess?
Yeah, so just one of the notes seems to suggest that the cost and time overrun of its Greenfield Bay Minute project would be the key overhang. The cost overruns are $4.1 billion from the $2.5 billion estimated initially. So I think that cost overrun, the key and the delay seems to be that pickle because both CLSA is saying that, and I think Jeffrey is also.
4 billion, you said.
Yeah, 4.1 billion now, the estimated cost versus 2.5 billion estimated earlier.
Double down.
So it's a very large cost overrun and a delay in the project. I think that is probably hurting Novelis.
Because it must be just that. There's been a tenfold increase. Otherwise, if you look at the other parameters of the number, but clearly the brokerages have got that cost overrun, a delay of capacity coming online, so everything sort of getting pushed down by a few quarters is what is probably disappointing Novelis and Hindalco investors. Hindalco is seeing weakness, but along with that, all cargo logistics, we talked about how expensive this stock is, and of course the recent news flow means the stock is down another 7% this morning. HEG numbers were weak, 4.5% cut on the stock. Dilip Bilkon as well. While we're at it, let's quickly take a look at what's happening on that. HEG is down 5%. Dilip Bilkon is trading flat. Orion Pro, if I can pull that one up, they've talked about fundraising plans, approved fundraising plans to the tune of 200 crores. The stock market doesn't like that too much. A 2% cut is what we are seeing. GMR Airports has been included in the MSCI index. On back of that, you are seeing a 2.5% move on GMR Infra. Coal India on back of earnings trades 1% higher. So different news points, but I think the inclusion in the MSCI as well, Neeraj and Tamanna, is helping a few of those counters on the street. But I am still concerned, even though there's a lot of green, this is going to be a tough market to trade today.
I wouldn't say a lot of green, but yes, relatively, you're seeing maybe not as much of a hit yesterday. Market still consolidating and settling. Very quick first takes from Nirav, first post-market takes from Nirav and Amar before we thank them. Nirav, let's start with you. Do you think that the Hindalco panic is overdone or more pain to come?
I think there's more pain to come, and I think this opportunity will be used by traders, of course, to lighten up their positions. So I think it's a bit too early to enter into the stock.
Yeah, okay. Let me take that to you, to Amar. Any opening comments or observations on how markets have opened completely flat negative territory, but Hindalco specifically?
Yeah, I would say markets would be trading this way because there's not much of a trigger right now which is really supporting the market. So we are lacking positive triggers. There's not negative triggers, so that also is something positive. Now coming to Hindalco is at very crucial support zone. So I would say that if it breaches the 500 levels, because on the long-term charts, intermediate-term trend, that's a very strong support zone. If that is taken out, then we could witness another 8 to 10% correction in the stock if it starts breaching and sustaining below the 500 levels.
Absolutely. So Hindalco to keep an eye on further if it drops below the 500 levels. Thank you so much, Nirav and Amar, for speaking with us today. We're taking a very short break, but stay tuned. Ashwath Ram of Cummins Group joins us on the other side to talk about their quarterly performance. We'll be right back.
फिस्कल डिफिसिट के नंबर को आपने अच्छे से मैनेज कर लिया तो थोड़ा खर्च करने का रूल था, चाहते थे तो कर सकते थे आप, लेकिन वो उस चक्कर में भी या उस लालच में भी आप लोग नहीं आए। मेरा कहना आपके पास स्पेस था, फिर भी क्यों नहीं किया?
सबके मन में ये जरूर एक भरोसा, कॉन्फिडेंस था कि जनता समझ रही है कि जो योजनाएं हम तक पहुंचा और सरकार जो ट्रांसपेरेंट तरीके से किसी लालच में नहीं पड़ा और कुछ लीपापोती करने का कभी कोशिश नहीं किया, ऐसे सरकार जिसका समर्थन होना चाहिए हम देने को तैयार है, ऐसे मूड में देश है।
In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company, some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Right, back with India Market Open right here on NDTV Profit, and there are many reasons to talk to Mr. Ashwath Ram of Cummins. Their numbers were very strong in Q3. It's a large company and has a great insight into what's happening around the world. And after the last few set of comments that have come in from business leaders around the lack of the tenacity of growth and the possibility of that is, I think it's important to get him in today, not just from a perspective of what they've done in Q3 and what could happen to Cummins, but from an overarching perspective. He joins us right now on the show. Mr. Ram, great having you. Thanks for taking the time out.
Nice to talk to you.
Yep. Lovely having you. Can I start off with a broad view and then I'll come to Cummins. Yesterday, we were talking to the management of Bharat Forge. In the press release, they mentioned about how they are cautious about how growth could turn out in Q4 and well into FY25. And then in the interview with us, they mentioned about how, looking at how Chinese growth is faltering, how Europe is looking dodgy, it is very unlikely that growth could remain very productive, especially for businesses which traverse both the domestic and the global landscape. Now you do that, your group does that. Give us a sense of how you are sensing growth overall and for Cummins at large into Q4 and into FY25.
We ended the quarters strong both in India as well as globally with record numbers everywhere. So we are coming into the new year in a very strong manner. But we did start to see a whole bunch of softening in some of the export markets, especially in our power generation business. We saw that markets across the world, whether it be Latin America, North America, Middle East, Africa, China, and even Asia Pacific, Europe especially, all of those markets consistently slowed down, and they've been slowing down for roughly about 2 quarters. And that reflects in our results as well. We think we have bottomed out as far as the power generation business is concerned, and now should start to see it ticking upwards. But the businesses that we are in, the biggest businesses that we are in the automotive, trucking market, etc., globally, those are highly cyclical markets. And they have been on an upcycle now for nearly 3.5, 4 years. So at some stage, they are likely to come down. We haven't seen that softening as yet, but it is inevitable. It always happens. So it's just a question of when will it start to soften. And so companies like Cummins are taking precautionary measures. We are tightening our belts further. We are trying to strengthen our portfolios. We are trying to work on market share, on product. As far as the domestic market is concerned, as far as Cummins India is concerned, the domestic market still remains strong for the markets that we serve. As a matter of fact, in the previous quarter, most of the growth was because of the domestic market being extremely strong. As a matter of fact, exports was down nearly 40%. So despite that, we were able to grow pretty substantially. If I look at the order boards now, they seem pretty robust. But it's, again, even power generation is a cyclical market. If the infrastructure spending does not continue, if because of elections there's a pause in spending within our country, if we don't spend on road construction, if we don't spend on building ports, mobility, other forms of infrastructure, if we don't spend on enhancing the power grid, if we don't do more mining, I think all of those activities can result in Cummins business also at some stage slowing down. But right now, we are pretty optimistic about where the India story is and how we are doing there, while we remain very cautious about the global market and continue to take measures to try to ensure we are cost optimized, as well as we have the right kind of product portfolio to be able to fight in that market, even if it were to weaken.
Okay, Mr. Ram, just wondering, so on the call, if I'm not wrong, you mentioned that the domestic scenario thus far looks, you are upbeat about that. And on the export side, maybe the weakness was due to inventory destocking, but you see that bottoming out as well. Now, my question is, are you sensing that in conversations with clients as well, that as things, I understand that there should be a note of caution because the world growth is looking anemic. So you sounded that out. But as things stand, is there a need to worry, or because of client conversations, or is there a need to worry only because of the larger belief that growth may slow down? Are client conversations still strong?
Well, client conversations don't typically last beyond 1 or 2 quarters. So for 1 or 2 quarters, it appears to be reasonably okay. Beyond that is what one worries about. We do see some softness even in India in the automotive side of the business, but Cummins India Limited, the publicly listed company, does not really play in that space. So it's not something to be concerned about.
Okay. Again, there's a lot of this Red Sea volatility, so on and so forth, currently ongoing. Maybe it impacted you a little bit in Q3. Maybe it is impacting you a little bit in Q4. How are cost issues coming up? Because there have been multiple companies, Novelis yesterday, a couple of others earlier in the quarter, which have cited cost overruns and delays in project ramp-ups as well. What is your sense, Mr. Ram?
Yeah, there is a little bit of that happening. So because of the turmoil in the Red Sea, you can't get ships through the Suez Canal. So they are going all the way around the Horn of Africa, and that is adding 4 to 6 weeks for any material that you want to get from those countries, as well as you want to ship to them. So that is adding to that. And so if you want some emergency parts, you're going to have to air freight it. Also, the freight rates have gone up pretty significantly because the risk has gone up. So all of that is impacting a little bit, but not to a very, very major extent. What will impact us more is that some of the commodities are starting to go up. So some of the commodities like copper, CR, ferrous materials, those commodities have now bottomed out and are now increasing in cost. That is likely to have a greater impact on profitability than some of these blips in logistics and other kinds of costs. But we are tightening our belt a lot continuously. So we're trying to keep ahead of that. It's never an easy challenge, but that's what we are working on.
Okay. Do you expect margin stability, Mr. Ram?
Do I expect what? Could you repeat that?
Margin stability?
We've been working on that for quite a while, so we are trying to hold. There is a lot of pressure in the market. India, as you know, is one of the most competitive, pricing and cost pressure kind of markets. But we have continued to grow the profit mainly because last quarter we had a trifecta of good news. We had the margins improve because we continue to hold on to our prices. We continued to get the benefit of commodities, and we continued our cost reduction activities. So a combination of all of those variables turned out positive, and so the profit went up significantly. To hold it at that level is going to be a challenge, but that's what we're working on.
Mr. Ram, one final question. This whole conversation around CPCB4 and what it would mean for sales, but there is a pricing uptick that comes into you as well. As you look at or gaze out at 2024, what is that cost versus margin or volume versus pricing metric that you could leave us with with regards to this issue and in general?
Yeah, as of end of the calendar year, less than 20% of our sales have been with CPCB4 Plus products. The good news is that 20% of our product sale has been with a CPCB4 Plus product in a market where CPCB2 product, which is 25 to 30% cheaper, is also available. So customers are accepting those products well. They have been performing well in the market, which bodes well for when the compulsory transition will happen in ending June of this year. So we have just about 2 quarters left when all the CPCB2 inventory has to be cleaned out of the system and scale up and ramp up the CPCB4 Plus, which we have been ready for nearly a year now. So I think it puts us in a good position. You won't get realization of incremental margins till you have economies of scale. You understand the whole landscape of what competition is going to do as far as pricing is concerned. And so I won't be able to comment to say that whether because we are transitioned to a more expensive product, that margins will necessarily improve. But there are opportunities if what our hypothesis is that our products are amongst the best in the market. If that hypothesis holds true, we should be able to maintain at these high levels of margins, or even be able to get a little bit of improvement.
Got it. Mr. Ram, a quick 30-second, we are out of time completely, but just wondering, you reckon the return ratios could improve? Because along with margins, brokerages believe that that is going to be a definitive case, that your return ratios, ROIC, ROC, etc., will all see improvement over the course of the next 12 to 24 months.
Yeah, each of those variables over the last 4 years have been improving significantly.
Yes.
And we, as management, are pretty focused on ensuring we run this company in a very lean and professional way. So I do see those ratios. We continue to work on improving those ratios. So yeah, I think those will keep improving.
Great. Mr. Ram, lovely talking to you. Thanks for taking the time out and speaking to us, and all the best for the quarters ahead.
Thank you. Great talking to you too.
Yep. Thank you. Well, that's Cummins India, and the commentary not as skittish as Bharat Forge's commentary. Different segments, yes, but both of them cater to export and domestic markets, and they are saying that thus far in their businesses they haven't seen as much of an issue.
Yeah.
Interesting.
Yeah.
Interesting contrast.
But exports do seem to still have an overhang.
Yeah.
They're not saying.
Hopefully they're bottoming out, but.
Yeah, that is anybody's guess.
Anybody's guess, yeah.
Bharat Forge, meanwhile, having a bit of a tough morning after all of those range of downgrades from brokers, down about 4.5%. Markets overall, though, not in too much of pain, holding up their own. Bank Nifty showing decent recovery. But we are talking to companies on what their quarter is looking like, and Samvardhana Motherson has seen a double-digit rise in its Q3 profit and revenue. My colleague Tushar Deep Singh spoke to the management. Listen in.
Hello, welcome to NDTV Profit. Joining us today is Mr. Pankaj Mittal. He is the CEO of Samvardhana Motherson International, and Mr. Kunal Malani. He is the Group CFO of the Motherson Group. They're speaking to us a couple of hours after Samvardhana Motherson International declared its earnings, where revenue jumped almost 27%, net profit was about 27% up, as well as the EBITDA was up about 49%. Gentlemen, first of all, welcome to NDTV Profit.
Thank you very much.
My first question is to you, Mr. Malani. Clearly a stellar set of numbers as we look at, but M&A or acquisitions have actually contributed to a large chunk of your top line as well as profitability. But if we remove that, how does that picture look in the quarter gone by?
Even then, I think the quarterly performance would have shown an improvement. The top line would have been a little bit more muted, but the EBITDA would have expanded versus the previous year as well. So whichever way you cut it, I think it's a strong set of numbers. What did play out in this quarter is if you look at the vehicle mix, it didn't go as per the plan of the OEMs. There was a degree of premiumization that was occurring so far. This is the first quarter we saw some dip in that premiumization, but that's largely driven in our view of some of the launches which got postponed. So as those launches come on board, I think the trajectory of premiumization will again kickstart, and hence it seems like a temporary blip right now.
Coming to you, Mr. Mittal, in your exchange filings that you have mentioned about a production decline quarter on quarter, is that a trend that you're seeing that will continue for the rest of the year? Or is there going to be a jump here on or a revival here on as far as production is concerned?
No, productions across the world, if you look at the vehicle production, it has grown. And as Kunal was mentioning, in some of the geographies, there have been model changes, like it didn't go as planned by the OEMs. The electrification or the embedment of EV vehicles has not taken place at the same pace that it was envisaged. So more ICE vehicles were produced than the EV vehicles. We at Motherson are in a very unique and sweet spot. All our products are powertrain agnostic. So whether they're ICE vehicles, EV vehicles, hydrogen vehicles, whichever vehicles will come in, or hybrid vehicles, our products remain there, and we continue to gain by having a more content per car.
You talk about that Motherson International is in a sweet spot. We see your segment-wise earnings as well. Any standout performance there? What is getting more traction and what is getting less traction at this point of time, sir?
So you are asking a question like you have many kids and which one is doing better.
Actually, if you look at the performance of all our divisions and all the team members around the world, they've performed really well. They worked really hard and contributed to make the overall performance of the company look good. So looking at all the divisional performances, you will find that all of them have performed very well, except some areas like there were interruptions in US, which impacted some of our performances due to UAW strikes at some of the car makers, which led to lower numbers in the last quarter. But apart from that and some other volatilities which are across the world, the teams have done really well in spite of all these issues.
Okay. Mr. Malani, let's talk a little bit about the premiumization that is at play, at least in the auto space, at least in passenger car space. How is that playing out for you? So in India, we see buyers moving on to SUVs. The trend is not similar when it comes to a geography like Europe. We saw your investor presentation. There is a slight decline in the adoption of SUVs. So how does that reflect on your margins, this particular picture? And how does that fit in with EVs? So can you give us color on the impact of premiumization or lack of it on margins?
Difficult to talk about it from margin perspective, but purely from top line perspective, obviously our strength on the premium vehicles is a lot more than the mass oriented vehicles. So we've been gaining a lot of share as the premiumization has played out. We do not see this one quarter blip as a trend. We see this as only a blip. As I said, we are expecting a lot more launches to happen, which should start directionally improving this trend. EV that Pankaj was mentioning about, we saw that dip as well in Europe. Again, as some new launches come in, we anticipate it to improve from here on. I think what is, however, clear is the adoption rates are a little bit unknown, specifically on the EV side. So the pace of this change is little unclear. But the trend, I don't see a change in the trend, and hence the premiumization piece will play out, as is being predicted by all the global agencies as well. So the data that you're referring to on the slide is a reflection of how S&P Global is looking at it. And that's their prediction as well in terms of how the future trend will again catch on to the premiumization trend.
Okay, sir. How does, in that sense, Mr. Mittal, how does that your CAPEX plan fit in? You say that about 50% of your 1,800 crore CAPEX is already utilized for supporting growth in EMs. How is that picture evolving? Are you going to increase your CAPEX outlay in FY25? Will it be more towards greenfield expansion, brownfield expansion? Just give us some picture on that, sir.
See, as of now, the majority of the greenfield expansion which is happening is in India. As you would have seen that the Indian car makers, they are growing, they're setting up new facilities, they're expanding, and we are also expanding together with them to support them in all the regions and where they're setting up the new plants. So that is the biggest expansion which we are taking place at this moment. And in the next year, we will be coming closer to the start of the year when we will be releasing our CAPEX guidance for the coming financial year.
So any new plants that will go on the floors in 2024?
Oh, yes. There are plans. So we have new greenfields, about 11 of them, which are coming up. And a lot of them will be coming in this next quarter, some of them, and majority of them will be finished within the year 25.
So no plans of expanding your CAPEX?
In the coming year, of course, we will be building more and expanding as to where the customers want us to be. And with the new acquisitions also, whatever the acquisitions are happening, wherever they need support, we will never shy away from working together with them. And Kunal, you can add more to it as well.
And that's keeping in mind the production scenario or the kind of slowdown that we are seeing in the global space, your expansion plans as well?
As I told you earlier, that we are seeing growth in India at the moment, and we are expanding in India. So the greenfield sites are coming all in India. Nearly out of 10 of them are coming up in India.
All right, so that was the management of SAMIL talking about their quarter. But as we continue to keep our focus on numbers, let's turn our attention to Galaxy Surfactants. Now, this specialty chemicals company has not necessarily had the best quarter. Q3 has seen some estimates missed. Margins have narrowed about 200 odd bips. EBITDA is down 27%. Net profits are down about 30 to 33%, and so are revenues. I'm speaking now with K. Natarajan, the Executive Director and COO at Galaxy Surfactants. Mr. Natarajan, thank you for joining us here on NDTV Profit and taking all of our questions. Can we understand what has happened in this quarter specifically? Because it's not just a question of this quarter, right? The specialty chemical space has been seeing pain. Where do you think the pain points are, and especially when it comes to margins?
Yeah, first to the positives, I think it's been an extremely positive 9 months for us, also a positive last 3 months in terms of the way we've been able to grow our volumes above the guided range of 6 to 8%. We grew by 8.5% for the 9 months, despite the challenging conditions globally. As we said, India has been a pretty bright spot for us. Europe is picking up pretty well. US has been a little bit of concern in terms of the destocking that is happening there. Africa, Middle East, Turkey is growing pretty well. The impact on the profitability majorly is due to the downtrading that is happening in all the developed economies because of the high inflation and the destocking that is happening in the US. We do see in the coming months this would reverse and would get us back onto the profitability growth that we have been delivering over the past so many years.
Why do you think that this trend will reverse? Some of the reasons you've listed in your investor presentation, Mr. Natarajan, include the Red Sea crisis. We don't know if that's going to reverse.
Yeah, so now the Red Sea crisis is something that's been that's a month old, and then there has been an impact initially when it happened suddenly. So the entire global economy is adjusting to it. There are increase in freight rates. But when I said that the things would reverse, I'm talking about the reversal we see in the specialty segment significantly, because US and Europe are getting back in terms of the growth there. The inflation is moderating there, and the interest rates are going to be reduced by the central banks there, which is good in terms of the disposable income that will be there in the hands of the consumers to enable them to spend on the prestige and the premium brands in which our products get in.
Okay. You've also had an EBITDA impact by one-offs. Your EBITDA and margin impacts, I believe, are by one-offs. Can you explain what this is in a bit of detail?
See, because we did have, the one-off essentially happened because the freight rates went up significantly when the Red Sea crisis happened. That did impact, and also in terms of the volumes in Africa, Middle East and Turkey got impacted because the shipping lines were just not taking material. It had volume impact for us. But for that, yes, we would have been well within the guided range of the EBITDA per metric ton of 19,500 to 20,500 per metric ton. And the other reason when we talk about the EBITDA in this quarter, in this 9 months being lower than the previous 9 months, also because of the export incentives that we receive in Egypt, which obviously is accounted on cash basis, which was there in the October-December quarter of last financial year, which is not there in this year.
So that's not going to be, that's not going to resume, is it? These Egyptian incentives?
No. So they are essentially, it's only accounted on cash basis because they do not come in a very regular way. So, as and when it comes, so you can't be accounting on accrual basis. So that's one of the reasons.
Okay. So the Egyptian incentives may not come.
Yes, correct.
Okay. Let me come to the point of America and Europe that you talk about, Mr. Natarajan, where you see things are changing. Now, your rest of world the contribution is about 42%. What is the Europe and America piece of it, especially America, and where do you see that improving? Is there any guidance you can provide at this point?
Yes, if you look at it, our US market, typically US and Europe contribute to almost 40% of our rest of the world volumes. And if you look at that, we do see that, and majorly it is the specialty volumes get into these markets. So we do see the demand uptick happening in the specialty segment. We do see some green shoots. We expect that would sustain, and that would then enable us to increase our share of the specialty and super specialty products that we have, getting us into a growth of profitability.
Okay. Now let's come to a bit of your outlook. What do you see the EBITDA as per ton? Your margins, you say, have been better than guided. Do you see that margin growth consolidating or improving?
Yeah, we do see the margin growth improving because we do see the specialty segment getting back its onto a growth trajectory. We are continuing to guide the EBITDA per metric ton in the zone of 19,500, 20,500 per metric ton. We're extremely positive about the volume growth trajectory that we have been delivering in the top end of the guided range of 6 to 8%. And we do see profitability growth coming back on track with the specialty segment picking up momentum in the coming months.
Let's talk about the India piece of the business. Are you seeing more focus on India growing, volumes growing? Because I believe your volume growth in India is also at the best pace, right? You're still looking at double-digit growth in India compared to the rest of the world and your AMET markets, etc. So can you speak a bit to that? Where do you see the bump up there?
No, India has been pretty good because India, we have been penetrating the market pretty well. India also has been with some challenges in the rural growth. We've been able to gain some shares as well, which has reflected positively in the growth that we have had. And we are extremely confident in terms of continuing with sustaining this growth momentum. We also see the demand sentiment in India also picking up with the various schemes of the government and the way spending is happening. And based on the commentary that most of our customers are given in the results, it also augurs well in terms of they expecting the rural demand to pick up, which would essentially aid further growth in the India market.
All right. So you're expecting rural demand to pick up. What about prestige demand? Because that's also where some of your products come in terms of foaming, BPC, etc. Are you seeing an upswing there?
No, can you repeat the question? I didn't get it.
I'm saying you're expecting rural demand to recover, but what about more premium demand?
Yeah, premium demand, if you see, has been something that has sustained India, although the premium segment is not a big portion of the demand in India. We do see that also growing pretty well. But as of now, it's not a big portion of the demand percentage. So it's critical that the rural demand picks up to ensure that, the overall volumes grow. So premium segment demand in India has been growing. It has not got impacted, albeit at a very low base.
Absolutely. All right. So the outlook looks positive. They expect this kind of volume pressure to ease in the next few quarters. Is that the right way to put it, Mr. Natarajan? On when you see the pressures easing? Okay. So,
thank you.
So it's been a tough quarter, but they expect things to ease, the Red Sea crisis, etc., to also ease off. That was K. Natarajan, Executive Director and CEO at Galaxy Surfactants. We're taking a very short break, but before we get into that break, just a quick look at what's happening in the markets. And Hindalco is undoubtedly the story of the morning. Now, Novelis, CapEx outlook was bumped up 64% in this quarter numbers, and that's what's led to the pain point. Otherwise, on the face of it, the numbers aren't bad, but just the fact that they're going to end up spending a lot more on Novelis capital expansion than previously expected has seen the stock take a knock, 14% down as we speak. More coverage on Hindalco. The other big story this morning, of course, is the Paytm deep cut and downgrade by Macquarie down to 275 rupees is their target price. Let's see what's happening to Paytm after a bit of recovery that Paytm had seen in the last few days. Again, in a spot of pain, down 6%. In fact, Suresh Ganapathy of Macquarie will be speaking after the break, both on Paytm and HDFC Bank. Stay tuned for that.
Presented by Patanjali Honey, world's best Patanjali Honey, 100% proven on more than 100 parameters of purity.
अंतरिम बजट के बाद वित्त मंत्री निर्मला सीतारमण का ये पहला इंटरव्यू है, प्राइवेट नेटवर्क में ये पहली बार हमसे बात कर रही हैं।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a
और जहाँ तक आपने पेटीएम रिलेटेड क्वेश्चन पूछा, हमने जो कहा था कि एक हम इस हफ्ते एक FAQ रिलीज़ करेंगे। मेरा अनुरोध रहेगा आप वो FAQ तक वेट कर लीजिए। और हम जो डिसीजन लेते हैं रिजर्व बैंक में बहुत सोच समझ कर लेते हैं। महीनों भर 1 साल 2 साल एंगेज करते रहते हैं। कोई भी एंटिटी हो, वो बैंक हो, पेमेंट बैंक हो, NBFC हो, कोऑपरेटिव बैंक हो, किसी के खिलाफ अगर हम एक्शन लेते हैं, मैं पेटीएम के बारे में नहीं कह रहा हूँ, मैं जनरली कह रहा हूँ, महीनों उनके साथ इंटरेक्ट करते हैं, सालों इंटरेक्ट करते हैं, कभी कभी 2-3 साल भी इंटरेक्शन चलता रहता है। जब एक्शन नहीं देखते हैं, कोई एक्शन इफेक्टिव एक्शन हमको दिखाई नहीं देता है, तब हम एक्शन लेते हैं। ये मैंने पहले भी हमने क्लैरिफाई किया हुआ है। तो इसीलिए बहुत सोच समझकर हमने फैसला लिया है। और अनाउंस करने के मतलब 10-15 रोज़ के बीच में कोई रिव्यू, वो जो आपने कहा वो रिव्यू की कोई यहाँ पे आई थिंक वो जो वर्ड है रिव्यू अप्रोप्रिएट नहीं होगा। लेकिन मैं उसके साथ साथ ये भी कहना चाहूँगा कि आप जो FAQ हम इशू कर रहे हैं उसके लिए आप वेट कर लीजिए और फिर उसमें जो सारे कठिनाइयाँ हैं कस्टमर्स को, हमारा प्रायोरिटी ये है कि कस्टमर जो है, डिपॉजिटर जो है, उनको किसी तरह की असुविधा ना हो। इसीलिए हमने 1 महीने का टाइम दिया है एक्शन।
Hello and welcome to NDTV Profit. I'm Smina Nalwala and with me is Vishwanathan Nair and you're watching NDTV Profit, and the big story once again this morning is Paytm. Well, the stocks of Paytm Rishi are down over 6% when I last checked after foreign broking firm Macquarie downgraded 197 Communication to underperform and sharply cut the target price to 275 from 650 rupees. This is a 33% discount from yesterday's closing price. It's up 400 now on Paytm. Vishy not looking good. Even, I mean, the report that Suresh Ganapathy has put out, the header says, downgrade, fighting for survival.
Yes, that's right. So fighting for survival is the theme for Paytm at this stage. Things are not looking so great on the business front. Jan 31st, the Reserve Bank of India comes out with a set of strict restrictions, business restrictions on Paytm Payments Bank, which is a key associate of 197 Communications, the Paytm parent. Paytm Payments Bank is asked that after 29th of February, you will not add fresh deposits to the customer accounts. You will also not be allowed to conduct any kind of credit or top-up transactions. Customers are allowed to use their existing balances, but beyond 29th of February, it looks highly unlikely that things are going to go in Paytm's favor. We reported Paytm Payments Bank might be losing its license. That's probably where the Reserve Bank of India is headed to. Since then, a lot has happened on Paytm. People have gone to the government. Vijay Shekhar Sharma has approached the government to try and get some kind of easing of this restriction. Didn't really work out. But here we are, and we heard the RBI governor just now saying that...
just to talk about timelines, on 31st of Jan is when they imposed the major business restriction on Paytm Payments Bank. As of 12th of Feb, which was only yesterday, Paytm's payment operator, 197 Communication Board, formed a group advisory committee chaired by the former SEBI chief to work towards strengthening the compliance and regulatory matters. But no matter what Paytm or the parent company is currently doing, the markets don't seem pleased, the regulator is definitely not pleased, and brokerages as well are still coming out and cutting target prices. But we've got Suresh Ganapathy on that note of Macquarie Capital. Suresh, good morning. What a morning, right? You put out a report, the stock gets beaten down, and the header of your report says fighting for survival. You've not only just cut the target price, but you've said that they will be struggling. You want to just take us through the interns of why have you cut the price down to 250 from the current around 400 rupees? So that's a 35% downtick from yesterday's close. What are the key concerns here?
Yeah, sure. So I think what we have always been telling you is that the most important business for Paytm continues to be its financial services business or its lending business. That is the partnership that it has with all the lenders. And they do have a great set of data, and of course technology also, which they used to leverage and act like a good digital DSC and source these customers and give it to the lenders, and the lenders are happy paying them a certain take rate. Now, the problem here is what's happened here is because of the restrictions which are imposed, which have been imposed in the Paytm Payments Bank, there is clearly a worry that there could be exodus of a lot of customers as well as the merchant ecosystem. If that indeed happens, clearly the lenders will have to reevaluate their decision or relationship with the with 197, which is the parent company of Paytm Payments Bank. Now, our channel checks reveal that indeed is the case. The lenders are reevaluating their position with 197. Could be for a variety of reasons. One of the lenders, largest lenders, has already reduced their exposure to Paytm by from 2,000 crores at the peak down to 600 crores now, right? So you have seen significant scale down by the lending partners, and there is a possibility that there are more in the pipeline, and at least some of them have obviously kept lending in a limbo for the time being. So all that is actually will have a corresponding catalyst effect on the entire company and its business model of a profitability model. So the call that we have taken very clearly is the fact that there will be a significant reduction in the distribution business revenue, and that, remember, is the highest EBITDA contributor in our view. And in the issue of the fact that these numbers can come down quite significantly, we of course have changed our view and accordingly cut our target price to $275.
Right, Suresh, this is Vishwanath here. The question that I think a lot of people seem to be wondering is the future of the parent app with regard to where the payments bank is. But your report mentions the lending part, which of course you detailed just now. I wanted to get a sense as to, when the restrictions came in, the company came out and said 300 to 500 odd crore worth of hit on EBITDA. But it seems that the hit or the pain is going to be far more, far deeper and far widespread than previously anticipated when they spoke to the analysts.
Our view, obviously the company's view could be different, but note that at the end of the day, the impact is based on certain things which you can't do. But what about the impact which is coming from the fact that in future you will lose customers and you lose certain proportion of your lending business? That obviously no company can quantify and be more futuristic. And that's the call of analysts like us, right? So we are taking a call that there can be a reasonable exodus of customers as well as merchants, and that could have a significant implication with respect to their lending abilities, and consequently that this segment of the revenues will also get affected, and consequently profitability. So the 300 to 500 crore impact doesn't take into account a lot of futuristic developments which could very well play out not necessarily as per the management's expectations, right?
The one part that came out, we reported here as well as some other news reports out there talking about compliance specific issues. What seems to be playing out is also a reputational problem, apart from, of course, the financials and the impact of these norms on the customer base. The reputational hit, of course, also impacts future business relationships. Just take us through what could maybe hit Paytm through because of this reputational problem.
It's already seen in the case of the fact that the lenders are relooking at the portfolio or the relationship that they have got, right? And also the fact that because of whatever issues that has happened and Paytm Payments Bank operations have been severely restricted by the Reserve Bank of India, what's happening here is any new onboarding of customers will also require a very detailed KYC check to be done. So it is not that tomorrow Paytm can get up and sell their crore merchants to the banking players, right? Any bank who is going to take, for example, the nodal accounts from Paytm Payments Bank, they will have to do their own significant due diligence and KYC of each and every customer or merchant that they are onboarding. That makes the entire process cumbersome. And that's a function of some of these regulatory actions and, as you said, the reputational issues which have been brought to the fore.
29th February deadline then seems very tight considering the task at hand, right?
Yeah, of course. Yes, it's a difficult. I mean, that's what we don't know. The media was speculating. You guys were speculating that he went and met Reserve Bank of India and Nirmala Sitharaman, Finance Minister. So obviously, I guess that close shows the gravity of the situation as to why, I mean, those kind of meetings, as per the press reports, were required because maybe there's some relaxation that they sought out for. But clearly today also, Reserve Bank of India governor has gone ahead and said that there is not going to be any rethink on the decision and it's final, right? So.
Right. Suresh, so all of this that you mentioned, you obviously don't believe is already in the price, right? And hence you've downgraded the stock to levels of 250 odd. Yeah. When you looked at the valuations of this, up until the early Jan, you could get multiple businesses for 197 communication in terms of pricing and valuation. From where it stands right now, and when you value the company or value 197, is that 250 rupee price per share only valuing or taking into consideration the UPI app that may be untouched or may survive for now at least?
No, first my target price is 275, not 250. Just a technical correction there. But but look, I think we were always of the view that whether it is UPI or whether it is wallets or whether it is various other commerce services and soundbox services that they provide for their merchants, everything at the end of the day boils down to, more like an EBITDA neutral kind of a position, because obviously they also have to make a lot of tech investments. And that helps them to retain the customers in the overall ecosystem. And on top of that, they build their lending business, right? So the call here is that you actually monetize your lending business in a big way. And obviously the other businesses are just barely breaking even. The highest margin is on the lending business. Now, the fact that, customers may come to the app for using UPI, which is still allowed, that's not, nothing stops them from using just like a Google Pay or a Phone Pay, except that at the sponsor bank level, there may not be Paytm Payments Bank and maybe some other bank which is there, which is the case with Google Pay and Phone Pay. But then my point here is then how you are different, right? At the end of the day, your competitors are also doing something similar. You're just aping them in a way. And you of course had a great advantage of being a two-way ecosystem player between the merchants and the consumers. The fact that you can no longer maybe sustain that to the same level as you had before this payments bank restriction makes life even more difficult with respect to getting the right kind of customers to monetize or leverage and, sell it to your lending partners. That's where the challenge lies in.
Suresh, now let's do this, right? Let's do a little more forward-looking discussion here. A few quarters out, assume the dust settles, the stock continues to correct, goes on all the way to 270, 300. Now at that stage, does it then become a buy? A, and B, in the interim when it goes down all the way from 400 to 270 or even sub 270, what would it take for you to reconsider your rating on this one? Could there be any option or opportunity of a re-rating for Paytm? You've also talked about a bull case and a bear case, and in the bull case the implied valuation from what I see is 540 rupees. So there is still that chance, is there?
No, of course. Look, I think let's look at it in this way, right? Numbers, what the investors should look at. They generated about 600 crores of quarterly revenue for the distribution side of the business, which is the distribution of financial services, predominantly loans. Now, if you were to annualize it, that comes out to be 2,400 crores. Our numbers take into account a 50% reduction or 50 to 60% reduction from that level. Now, the call here is how much can you sustain that? And if you see 2-3 quarters down the line, them touching a bottom and then again starting to grow that number 20, 30% or 40%, then there is obviously a turnaround, which means the lending, they're able to monetize the data, they're able to retain some customers in the ecosystem, the lending partners are happy lending that. So the critical number you have to look at is this quarterly run rate of 600 crores, which they reported for third quarter in terms of distribution business revenue. How much sustainable that is, that is going to come down now in the interim and then post 2-3 quarters. Can that recover back is ultimately going to determine the eventual outlook on Paytm and obviously the eventual target price post that.
All right, Suresh, we'll quickly slip into a break. We'll come right back, continue this conversation on Paytm, and also we'd love to talk about HDFC Bank. So give us a couple of minutes, we'll be right back with you.
फिस्कल डिफिसिट के नंबर को आपने अच्छे से मैनेज कर लिया, तो थोड़ा खर्च करने का रूल था, चाहते थे तो कर सकते थे आप, लेकिन वो उस चक्कर में भी या उस लालच में भी आप लोग नहीं आए। मेरा कहना आपके पास स्पेस था, फिर भी क्यों नहीं किया?
सबके मन में ये जरूर एक भरोसा, कॉन्फिडेंस था कि जनता समझ रही है कि जो योजनाएं हम तक पहुंचा और सरकार जो ट्रांसपेरेंट तरीके से किसी लालच में नहीं पड़ा और कुछ लीपापोती करने का कभी कोशिश नहीं किया, ऐसे सरकार जिसका समर्थन होना चाहिए हम देने को तैयार है, ऐसे मूड में देश है।
In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and
Welcome back. You're watching The Big Story, and we are with Suresh Ganpati, MD Head at Macquarie Research. Suresh, thank you. In the first segment, you highlighted for our viewers what is concerning for you on Paytm and, of course, the rationale behind the reduction in target price. I want to go from one that you're concerned about to one that you're very optimistic about. Starting with HDFC Bank, are you buying HDFC Bank in the current price? I believe you've reiterated your outlook on the stock and continue to like this. So I'm taking a cue from that and assume that you'd be recommending a buy on the stock.
Well, it depends upon the time horizon, right? So if it's indeed going to be 6 months, I think the stock is a dead money for the next 6 months because we actually need to see the actual improvement in performance with respect to margins and overall that flowing into core PPOP growth or earnings growth, right? My call here is very clearly from a 18 to 24 month perspective. We are confident that the bank would engender a process of consolidation, which means loan growth will be below deposit growth. And that could result in improvement in margins and eventually improvement in earnings growth. So that's how I'm looking at the outlook from a longer term perspective. But that process is going to be a slow recalibration exercise where you're not going to see immediate gratification coming into numbers in the next couple of quarters.
On the business front, HDFC Bank, this third quarter numbers were not exactly very exciting. I just wanted to get your sense as to what you picked up as maybe potential positives.
I think if you look at particularly in the third quarter numbers, they did somehow manage to protect margins. But having said that, clearly, I feel the issue has also been in terms of, let's put it this way, over guiding and under delivering, right? So that has been, communication has been an issue which has resulted in such a sharp reaction by the markets. Having said that, I guess the predominant concern in general for everybody in the system has been tight liquidity, and HDFC Bank is also not immune to it. Unfortunately, the timing of the merger has been pretty inappropriate because it has come at a time when liquidity in the system has tightened very significantly, which has had a corresponding effect on them. The call very clearly is how well they can actually replace the HDFC high-cost liabilities with low-cost liabilities and manage to improve margins in coming quarters.
Right. Suresh, one area that I want to talk to you about, in fact, I'll break this down, is first talk to me about retail deposits. Now, HDFC Bank has led from the front in this space, but they clearly are being or have been facing challenges in the last few quarters from what we've seen. How do you expect the retail lending to move going ahead? Do you think there could be a turn in the space? There could be some sort of positive triggers that could drive the retail book for HDFC Bank?
Retail deposit accretion, 3Q was maybe weak, but 9-month number is still pretty strong, right? So you'll have to look at it more in terms of 9-month number here rather than looking at quarter, because there will always be quarterly fluctuations. 4Q is usually very strong, so we do expect a strong 4Q for them in terms of deposit accretion. I think from a overall deposit accretion standpoint, the bank has done a good job from a standalone flow perspective. The problem here is the requirement or ask rate is so high because of the acquired stock from HDFC Bank is that it makes life a bit more difficult for them. As far as lending is concerned, they have been a bit more cautious compared to the other banks in the ecosystem. Their unsecured loan growth has been a bit weaker, and that's because they're far more conservative in terms of their underwriting standards and approach towards this. So I guess the retail lending will grow faster, and it should grow faster than the corporate book, and that should be relatively margin accretive over the course of next 12 months. So these are some of the things which they will have to do it on the ground to manage the overall profitability.
Right, Suresh, you mentioned the communication issue as far as the management is concerned. I'm trying to understand this overpromise, underdeliver. Is this a temporary sort of an issue? Have they, in their commentary to analysts, have they sort of figured that maybe commentary needs to be slightly more realistic for the market to appreciate what they're doing at the bank?
No, for that we'll have to wait for the next quarter, right? Currently, the results are over. We'll have to wait. What is the change in stance after the third quarter? So when they report their full year numbers or fourth quarter numbers, you will have a clarity as to what are they looking at it, what is the revised set of guidance going forward. So it's a bit too early for me to actually take a call on that the communication has changed. We'll have to actually wait for another quarter for us to get that confidence that maybe they are on the right track, both in terms of execution or at least in terms of the thought process, and eventually that translating into better communication to the overall market.
Suresh, while we're talking about deposits, managing costs, not enough branches being open, lack of communication potentially from the new management, the 5-year returns on HDFC Bank are not much to write home about either. So while the merger could have just been a couple of years, even before that, the underperformance was fairly obvious for most people to see. What, in your opinion, is going to take for HDFC to do the heavy lifting and actually start moving up? Because this was the darling of D Street for many decades together, right?
So they have to get the core PPOP growth right. It's very clear. Unless and until that happens, core operating profit, as we said. What exactly happened is even during the earlier years, as you pointed out, their operating profit growth started coming down, because of the fact that they focused more on corporate loans. Corporate loans were low margin. So operating profit got affected, but at the same time, provisions were low. So the market, unfortunately, disregarded the ROA that they reported and focused more on operating profits, right? So they have to get the mojo back, and for that they will have to get back the operating profit growth going ahead, and that will singularly drive re-rating for the stock.
So you think it's fairly valued at this price, Suresh, in that case?
Well, if it is 2 standard deviation below historic averages, how much more can it go down?
That's the question. That's the big question that we all want to know.
Yeah, so it's valued at 12 times PE for a conservative 14-15% earnings growth. So I guess it's still obviously pretty. I never thought I would say this in my entire lifetime, but I'm still saying HDFC Bank right now is the best value stock to own in the banking space.
Makes sense, Suresh. But that's all the questions that we had for you today. Thank you so much for joining us, taking your time out and speaking to us about all these different topics. Thank you so much, Suresh, for joining us, and thank you so much for watching.
So Suresh is aggressively bullish on HDFC Bank and aggressively negative on Paytm. Those are two extreme views coming in from Suresh Ganpati. Both the stocks in focus. 197 is seeing the rout this morning again. Sub 400 on the counter. A re-rating on HDFC Bank can be likely only if a couple of parameters are fulfilled. With that, completely out of time, Rishi, but do you want to quickly wrap this up for our viewers?
Yeah, so looks like survival for the period for Paytm. Does not look like their business is coming out of this unscathed by any manner. Payments, lending, both sides, there's going to be a deep sort of a hit, and that's what Suresh was also mentioning, that apart from the business hit, there's also a reputational problem, because some of the other lenders who are partnering with Paytm for their payments as well as the lending business will be reviewing their relationships. The 29th February deadline that the RBI has set looks really, really tight to sort of manage these problems and come out of it healthily. That's where we are, Samina. But on the HDFC Bank front, of course, things are looking extremely, extremely promising.
I'm just so confused, Rishi, because, you have loyalists, right,
Yeah.
who will stick their neck out and bet on a bank. It just makes me wonder that, is it time for change? And I think with the way things have been moving, we've seen it in the earnings, we've seen it in the new management commentary, and the stock is a gross underperformer. It's not 6 months, it's not 1 year, it's not even post-merger. The fact remains this has been 30% returns in 5 years, and the markets have, literally shot out of the roof. But we are only here to break that information down for you. But on the sidelines of the Axis Harun event, Arun Chaudhary of Axis Bank expressed that Paytm is an important player in the fintech industry, and that the bank is in constant talks with Paytm regarding new business opportunities. Listen into what Arjun Chaudhary had to say.
देखिए, ऐसा है, पेटीएम पेमेंट सिस्टम्स में और फाइनेंशियल सर्विस में एक काफ़ी बड़ा प्लेयर वैसे ही है. नो प्रॉब्लम. सो बिटवीन देयर एक्वायरिंग बिजनेस, बिटवीन वॉलेट्स, बिटवीन फास्टैग, बिटवीन एमसीएमसी, वो काफ़ी कुछ ऐसी चीज़ें मैंने अभी बात करी कि फिनटेक्स कैसे इकोसिस्टम को बढ़ाते हैं, नए कस्टमर्स को उसके अंदर लाते हैं. तो पेटीएम भी ऐसा ही एक रोल अदा कर रहा है उसमें. तो उस दौरान हम लोग की बातें वैसे ही चलती रहती हैं उनके साथ. ये जो हेल्प आउट की जो बात आपने करी, वो उस संदर्भ में नहीं, लेकिन वैसे भी नॉर्मल बिजनेस के संदर्भ में हमारी उनसे बातचीत चलती रहती है और चल रही है. ऑब्वियसली जो अभी डेवलपमेंट्स हुई हैं 31 जनवरी को, उसके बाद से कुछ नए डिस्कशंस भी शुरू हुए हैं और वो चल रहे हैं. लेकिन अभी कुछ इस तरह का कोई एक स्ट्रेटेजिक व्यू अभी नहीं बना है. हम लोग बिजनेस बाय बिजनेस जाके सिस्टमैटिकली रेगुलेटर की सलाह भी लेकर ये देख रहे हैं कि हमको कैसे उनके साथ काम करना है. हमारा उद्देश्य ये है कि कस्टमर्स जो हैं उनकी लाइफ में, या चाहे वो मर्चेंट्स हों, चाहे वॉलेट होल्डर्स या फास्टैग होल्डर्स या जो भी हों, उनकी लाइफ में डिस्ट्रप्शन नहीं होना चाहिए. तो एज अ लार्ज बैंक उस उद्देश्य को लेके हम लोग क्या रोल प्ले कर सकते हैं, वो हमारा प्राइमरी पर्पस है. और हाँ, उनसे बातें चल रही हैं और चलती रहेंगी. There's nothing to confirm. We have been working with them in the past on various things, and those aspects continue. New aspects which have come up as a result of the recent developments are also under discussion. So there's nothing to really confirm.
I mean, subject to regulatory, forbearance and regulator allowing us to work with them in specific areas based on whatever regulators decided, of course we'll continue to work with them. They are an important player in the fintech industry. I mean, that's a fact.
अंतरिम बजट के बाद वित्त मंत्री निर्मला सीतारमण का ये पहला इंटरव्यू है। प्राइवेट नेटवर्क में ये पहली बार हमसे बात कर रही हैं।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right. Some believe in swiping right. Some run away from risk. Others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to
Markets trade in the green, tracking positive global cues. Sensex near 71,400, while the Nifty steady at 21,600. Financials lead sectoral gains as Bank Nifty gains over 1%. Meanwhile, metals, media and realty suffer with major cuts. Woes continue for Paytm. Macquarie Capital slashes target to 275 rupees from an earlier 650. Stock is now down over 6%. MSCI adds 5 Indian stocks to its emerging markets index. PNB, Union Bank and more on that list. And Hindalco declines over 13% as Novelis revised the return guidance for the Bay Minette project. Hello and welcome. I am Agam Vakil and you're watching the FNO Show, a show in which we take you through all that is happening in the futures and options space in Indian equities. And for now, we are looking at some amount of respite, a little bit of relief, even as the indices advance by around 0.4%. That is the Nifty and the Sensex. The Bank Nifty has a little more strength coming through at the moment with an advance of around 1.1% as we speak. And of course, the Fin Nifty will also be in focus on account of your weekly options expiry. That's also up around 1% and currently at around 20,150. It's not something that a lot of people were taking into account. They were expecting weakness, which was indicated by a lot of call writing earlier. And we have seen an advance ever since. Now, let's take a look at the broader markets quickly and see how things are panning out there. And of course, we are seeing an advance for a whole host of stocks, but the indices themselves are not showing too much traction. The mid-cap index is largely flattish and the small-cap index is under pressure by just a tad bit, down around 0.4%. Of course, we're still continuing to see profit taking in certain pockets in the markets, but on the whole, it does seem like a better day as compared to what we saw yesterday. That said, let's take a look at the futures and options space. And of course, starting off with how things are panning out in the index futures, we are looking at about a 2.5% increase in open interest as far as the Nifty futures go. We can't necessarily suspect that this is towards longs because, to be honest, it's been a very topsy-turvy market over the course of the last 3 to 4 sessions. But let's pull up Bank Nifty as well and see where those futures are currently trending. And we're seeing unwinding there. That perhaps is a little more understandable considering we had seen a lot of weakness yesterday. And considering that up move in the Bank Nifty, we are seeing a decline in open interest indicating about a short covering. As far as your options market goes, and at the moment we are looking at continued traction in terms of maximum open interest standing in at around 22,000 call, and on the lower end we have the 21,500 put as the one with the max OI. Of course, it's a 500 point range within which we are keeping an eye on, but this is only based on max open interest. And in today's day of trade, we have seen a lot of writing around puts. We do have a little more around 20,000 and thereabouts. But let's take a look at how things are panning out as far as stocks are concerned as well, and see where there is in fact. So we are looking at a bout of longs building up in Trent and Apollo Hospitals. And of course, Hindalco, Bharat Forge continues to be under pressure. Hindalco and Ipca Labs are also looking at shorts building in. And in terms of stocks, which are seeing unwinding in trade, let's pull that up as well. So we do have PI Industries looking at longs along with Divi's Laboratories and Bandhan Bank. Keep an eye on that one. And of course, Coforge and Sale on the other hand looking at longs unwinding. Well, on that note, let's get in our experts for today. We have Brijesh L of IDBI Cap and Jayesh Bhanushali of IIFL Securities joining us on the show. Good morning to both of you. Thanks for joining in. Jayesh, I start with you. Your view on the Nifty. How are you trading this one?
Yeah, good morning. So basically, if you see, indices have been trading in a narrow range, but the India VIX index has been moving up. And if you see the at-the-money IVs of Nifty, they are hovering around 14.5x. This is kind of a stagnant market where we believe that the entire series, we will see on the higher side, there will be a strong resistance in Nifty as the IVs are moving up. So 21,800, one could see indices facing resistance around. And we could see a sell-on rise activity happening in the market. So if you see, even in Bank Nifty today, since the open positions were around 35 lakhs, as you correctly mentioned that since the indices tested its 200-day exponential moving average yesterday, and we are seeing some short covering happening in the index. But I believe overall the indices would not be able to stay long for I believe 2-3 trading session, and one could see again shorts happening in the markets, and we could see Bank Nifty again heading back towards 44,500 and Nifty heading back toward 21,500 by end of the series.
Okay, so Jayesh is of the opinion that it's potentially a sell on rise market, and of course one can't really rule out any weakness going forward. Should we see a little bit more strength in the benchmarks over the course of the next couple of sessions? But Brijesh, welcome and good morning to you as well. How are you reading data on the Nifty and the Bank Nifty?
Yeah, good morning. So I believe this Nifty, whatever the distribution, what we are seeing in Nifty for the last couple of days, is now coming close to the, in the daily chart, it's coming to the 50-day moving average, which is somewhere close to 21,500 mark. My sense is that Nifty is not that weak, what the way it is looking at. It is more of a range bound. And maybe because the FIs are not holding their long positions, they are close to 34% only long, like close to 86,000 contract they are short in the index future. This is something which is pulling up the market. The position is not very aggressive on the long side. But then technically, if we clearly make a point, so I believe 21,500 is the level where index is going to take some support. On the way up, 21,850 is the hurdle where we never saw a very decent close above those points. Yesterday, IT was a sector where we saw some good amount of buying. Today, the healthcare is space, and now within the last couple of hours, the PSU banks and again the bank Nifty has started to perform. So somewhere I believe this 21,500 is going to act as a support for the Nifty for maybe today, tomorrow, day after tomorrow. Only if 50-day moving average is broken, then I think we may come by another 100, 150 points on the downside. Not much of a downside. It will be more of a range bound kind of a market. And the best part for the Bank Nifty is Bank Nifty, even though yesterday it broke 45,000 on the closing basis, today it has again recovered back from the 45,000 level. So Bank Nifty is again a range of this 45,000 to 46,500. 2,500 points a range for the Bank Nifty. And if I look the options data from the morning, from the after 9:30, 9:45, slowly the short positions are getting unwinded. So I believe today would be a positive day, and if we see a very decent close today, then the next 3-4 days should be a good day.
Sure, and it's certainly turning out to be a positive day because the Bank Nifty itself is showing a little bit of an uptick. In fact, if you consider something like the Fin Nifty, Fin Nifty is currently at days highs, and in fact it's trying to inch towards the mark of 20,200. Now remember that because it's the Fin Nifty options expiry as well, let's take a view from our experts about what they make of it and what kind of strategies can in fact be deployed on an intraday basis considering today's expiry. Brijesh, your view, how would you address the Fin Nifty and how would you play options perhaps here?
Definitely the data suggests the positive bias from and all these shorts have been there is no shorts as of now. So I believe we can take a long bet on the Fin Nifty at 20,227 at this price. We can if somebody wants to take the call option also, I think we can play that move. I think Fin Nifty will see another 200 odd points on the higher side. The close would be somewhere for 20,500. So that's the view for the today end of the day. It looks quite a strong bounce back is what I can see in the Fin Nifty. It should be one should look for the call option in the Fin Nifty.
Fair enough, Brijesh, who's suggesting that perhaps buying a call option would be a good idea. Of course, Jayesh, what about you? How would you play the intraday expiry today as far as the Fin Nifty goes?
See, basically, as I said that there is short covering happening in the indices. So around 20,000 level, there is a huge amount of put writing that has been happening. So one could initiate a bull put spread wherein you write 20,000 put and you buy the lower strike price so that you don't have an unlimited risk kind of scenario. So we are expecting Fin Nifty to close about 20,000 level today. So writing 20,000 puts and buying 19,900 or 19,800 puts would be the ideal way to play.
All right. Okay. So, here we have a little bit of a divergence as far as the view on the Fin Nifty is concerned, and an interesting one. Also, and viewers must remember that because options premiums are so low, it really doesn't become very favorable by going ahead and in fact selling these option premiums, especially because the Fin Nifty does see a substantial, and usually on a usual basis, it does see a substantial contraction in the first 1 hour of trade itself. After which, selling an option really doesn't leave you with a lot of juice to make up for should you see move against the opposition, and in certain cases, the losses are substantially higher than the potential profit that one can make, especially on a Fin Nifty expiry, because it's always going to be a challenging one, especially when you do see a lot of contraction in premiums earlier on the session. And under those circumstances, of course, it would perhaps be a little more beneficial. Even though the probability may not be on your side, it may be a lot more beneficial to perhaps go long on these options because of the substantially contracted premiums that we are keeping an eye on. Well, that's we have our experts' view on the Fin Nifty and what you can in fact go ahead and do. But on that note, let's slip into a short break. But on the other side, we talk about stocks and a lot more. Stay tuned to NDTV Profit.
Presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity. Brought to you by Canara Bank. Together we can.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company, some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the stock.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of
Welcome back, and we now take stock of how things are panning out in the stock markets, stock futures universe. We'll once again pull up the list of all the stocks which are buzzing in trade and perhaps seeing an increase in OI. So we have Hindalco, which is right at the top of the list, and it is looking at a sharp 13% cut. Even, of course, it's around novelists and the kind of warning signs that are coming through. So not a great day for this one. Neither has it been a great day for Bharat Forge. Of course, slightly better than yesterday, but a decline all the same. And we're looking at shorts there as well. Ipca Labs is largely flattish. Wouldn't want to talk too much about that. But on the other hand, we're looking at longs in Apollo Hospitals and Trent. Trent is a really, really interesting one, and what staggering momentum has that one seen? Okay, now talking about all the stocks which are seeing unwinding, let's pull that list up as well. And among the top losers in open interest, we are seeing about a short covering for PI Industries and Divi's Laboratories. Divi's Laboratories is a very interesting one because we have quite a few traders as well as analysts and analysts who are recommending Divi's Laboratories of late. Besides that, we're keeping an eye on something like SAIL and Bandhan Bank, which are in fact looking at longs unwinding coming through. On that note, let's take a look at the Bank Nifty and its constituents. This is another interesting one because at the moment, we have ICICI Bank and Axis Bank leading the gains on an intraday basis, and we are seeing longs there as well. And that's potentially also the reason why we are looking at the Bank Nifty and the Fin Nifty advancing in today's day of trade. Now, say for that, we don't have too much traction otherwise, but essentially these large cap companies and these large cap banks, and the ones which have substantially higher weightage, are coming through and showing up in strength as far as your banking indices are concerned. With that, let's take a look at what our experts are recommending in today's day of trade. Jayesh, I come to you. What are you suggesting?
Yeah, so both of my stocks are on long. Firstly, it would be Apollo Hospitals, as you correctly mentioned that the stock has been adding long built up throughout today's session. And if you see the earnings were so strong that the stock has positively given a flag pattern breakout technically also. So from here on, if you go long, the target would be around 4-5% upside from here, and stop loss would be around 6,500. So one could see 7,000 rupees of target and 6,500 rupees of stop loss. And second stock that we are long on is Cholamandalam Investments. So this is basically on account of short covering that we are expecting in the market. So if you see, the stock has tested its 200-day exponential moving average yesterday, which was placed around 1,100 rupees ish. So from here on, if you go long, the stop loss would stand around 1,090 odd rupees, and the target would be around 1,200 rupees, which is where the call writing has happened for the February series. So from here on, one could expect a 60-70 rupees upside in this stock.
Okay, on Apollo Hospitals and Cholamandalam on Jayesh's radar. Brijesh, what about you? Brijesh, I believe you are on mute. If you can just unmute yourself, please.
Yeah, I'm very sorry for that. Yeah, so my pick was one HDFC AMC. If you see this particular stock, so this has been in the uptrend. Even though for the last 3-4 days that the market was correcting, it was in a range, and today it has clearly seen a range breakout. So I think HDFC AMC should be the one of the trending bet, and with the stop loss of somewhere close to 36.80, I think we can take the long position. We can be easily talking of 38.50 on the higher side. This may remain for the next couple of days, but I believe this should be kept on the watch list. So HDFC AMC, and one more thing which I'm liking is Alchem Laboratories. So I think Alchem is one which is again very strong. Recently there was a breakout, and yesterday we saw the corrective move of that particular breakout. And today again the stock has taken support and it's moving up. So I think it is a very favorable buy scenario at this point. One can go long at the current price with a stop loss of 5160, and I believe 5500 would be the medium term target for the LCAM. We can see this level at the end of the expiry. So a little bit longer time frame, but I'm quite extremely positive on LCAM and SGFC AMC.
Okay. And let's also take a view on Hindalco, because that's, of course, seeing severe pressure and also potentially keeping the Nifty from advancing substantially higher. Hindalco is down around 13% at the moment. Jayesh, two questions around Hindalco. One is that would it be conducive if you were to, in fact, initiate fresh shorts even at this level? And two, for all the traders who are in fact trapped in Hindalco in longs, what would you suggest they should do at the moment?
Great. So basically, if you see, the stock is currently down 14%. So from here on, if you do a short, the risk reward would not be favorable, because the stock is currently hovering around its 200-day exponential moving average. The last time, on 3 occasions when the stock has tested its 200-day exponential moving average, I believe it was in October 23 and in August 23. So from there on, there was a bottom formation that had happened in the stock. So if you see the historical patterns, from here on, I believe there is a good chance that it may find some support and find some base. So from here on, shorting the stock would not be recommended. People who have gone long previously and are down by say 15-20%. So one could initiate a stock repair strategy in the stock, wherein how do you do it? So you buy 500 call option and sell 2 lots of 600 call options of March. So by doing this, you are kind of rupee cost averaging it, and eventually if the stock moves up, your average becomes half from where you had purchased it, and you try to get a good exit around 560, 570 levels, which would be your break-even point.
Okay, so a very interesting strategy to deal with if you are in fact stuck in Hindalco. But we're running out of time on the show, so I'm going to take a moment to thank both our experts, Brajesh and Jayesh, for joining us and taking us through their views and giving us a handful of trading ideas as well. And before we wrap on the show, the big story today is in fact for the last couple of weeks it has been, and that's Paytm. We have Macquarie Capital now who slashed their target to around 275 rupees per share, and remember that we already have seen a deep cash on Paytm coming from all the way from around 700 800 rupees per share to currently at around little less than 400 rupees per share. This is what Macquarie has to say about the rationale. Listen in.
So I think what we have always been telling here is that the most important business for Paytm continues to be its financial services business, or its lending business. That is the partnership that it has with all the lenders, and they do have a great set of data, and of course technology also, which they used to leverage and act like a good digital DSA and source these customers and give it to the lenders, and the lenders are happy paying them a certain take rate. Now, the problem here is what's happened here is because of the restrictions which are imposed, which have been imposed on the Paytm Payments Bank, there is clearly a worry that there could be exodus of a lot of customers as well as the merchant ecosystem. If that indeed happens, clearly the lenders will have to reevaluate their decision or relationship with the with 197, which is the parent company of Paytm Payments Bank. Now, our channel checks reveal that indeed is the case. The lenders are reevaluating their position with 197. Could be for a variety of reasons. One of the largest lenders, has already reduced their exposure to Paytm by from 2,000 crores at the peak down to 600 crores now, right? So you have seen significant scale down by the lending partners, and there is a possibility that there are more in the pipeline, and at least some of them have obviously kept lending in a limbo for the time being. So all that is actually will have a corresponding catalyst effect on the entire company and its business model of a profitability model. So the call that we have taken very clearly is the fact that there will be a significant reduction in the distribution business revenue, and that, remember, is the highest EBITDA contributor in our view. And in the issue of the fact that these numbers can come down quite significantly, we of course have changed our view and accordingly cut our target price to $275.
Right, Suresh, this is Vishwanath here. The question that I think a lot of people seem to be wondering is the future of the parent app with regard to where the payments bank is. But your report mentions the lending part, which of course you detailed just now. I wanted to get a sense as to, when the restrictions came in, the company came out and said 300 to 500 odd crore worth of hit on EBITDA. But it seems that the hit or the pain is going to be far deeper and far widespread than previously anticipated when they spoke to the analysts.
Our view, obviously the company's view could be different, but note that at the end of the day, the impact is based on certain things which you can't do. But what about the impact which is coming from the fact that in future you will lose customers and you will lose certain proportion of your lending business? That obviously no company can quantify and be more futuristic. And that's the call of analysts like us, right? So we are taking a call that there can be a reasonable exodus of customers as well as merchants. And that could have a significant implication with respect to their lending abilities. And consequently, that this segment of the revenues will also get affected. And consequently profitability. So the 300 to 500 crore impact doesn't take into account a lot of futuristic developments which could very well play out, not necessarily as per the management's expectations, right?
Presented by Patanjali Honey, world's best Patanjali Honey, 100% proven on more than 100 parameters of purity. Brought to you by Canara Bank. Together we can.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
बजट के बाद वित्त मंत्री निर्मला सीतारमण का ये पहला इंटरव्यू है। प्राइवेट नेटवर्क में ये पहली बार हमसे बात कर रही हैं।
Co-presented by Canara Bank. Together we can. Co-powered by Bandhan Bank. आपका भला सबकी भलाई. Special partner, State Bank of India, the banker to every Indian.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Co-presented by Patanjali Honey, world's best Patanjali Honey, 100% proven on more than 100 parameters of purity.
Good morning and welcome. You're tuned into the Small and Mid Cap Show on NDTV Profit. I'm Harsh Saita. Quick check on where markets are at before we switch focus to a couple of counters we have for you today. First off, with regard to the Nifty itself, after that little bit of whipsaw in the morning, we've seen the Nifty stabilize. No complaints at the moment. 0.5% higher on the Nifty. Our gains are largely led by some of the losers yesterday. Coal India up 4.5 odd%. You also have the likes of a UPL and ICICI Bank up 2% plus. NTPC also posting gains of around 2% there. HDFC Life also up around 1.7%. So some of the losers yesterday looking at good gains. But among the top losers today in trade, you have the likes of Hindalco down 13% after that commentary on Novelis. After the Novelis numbers, you have the likes of a Grasim down 2.3%. But outside of that, HCL Tech, Adani Enterprises down less than 1%. So really nothing much on that count. When I'm looking at the contributories as well, you're seeing the breadth of the market quite strong, at least on the benchmark. You have 41 positive contributories on the Nifty 50 a weekday, but not as weak when you look at that kind of a number. There you go. Your contributories have reversed in the overall markets as well, in the broader markets as well. But quickly on to contributories on the Nifty, the ICICI Bank, Reliance, Axis Bank contributing to gains. There you go. Reliance contributing to around 15 points of gains or around 18 points of gains as we speak. Around 0.8% higher for Reliance. ICICI Bank strongly in the green, 2+%. We spoke about that, 40 points contributed by ICICI Bank alone. And therefore, you have around 100-point gain, which the Nifty is making as we speak. Quickly on to some of the mid-cap movers in trade. You have within the advanced decline a fairly balanced approach, especially when it comes to the mid-cap counters. Not as strong as the benchmark itself, but you have the likes of an IRFC, RVNL, NHPC, all three of which are gaining 5% plus. In fact, IRFC is up almost 11% in trade as we speak. You're looking at RVNL order wins, seeing a 9% gain. NHPC up 6% after a couple of days which it has spent in the red. Looking at some of the losers on the Nifty mid cap, coming to names, you have the likes of a Paytm, which is down nearly 7.5%. On the back of that Macquarie note, the woes don't seem to end there. KPIT Tech is down 6%. CG Power is also down roughly 3%. So those are some of the losers on the Nifty mid cap. Moving on to the Nifty small cap, you have the likes of a Redington up 6%. Mind you, the numbers were not impressive, but what we did see is it got battered, and thereafter it's seen a bit of a recovery as we speak. Central Bank is up 5%. A lot of battering over the last 3 to 4 days on some of these PSU banking counters. That one seems to be in recovery mode. And you also have the likes of an NLC, which is up roughly 5.5% in trade. Quickly moving on to some of the sectoral indices, what they are up to. The Nifty Bank is up 1+%, so nothing to complain about when it comes to the banking index. You have the likes of a PNB, which is leading the charge. Some of the PSU banking counters are doing quite well. If we can zoom into that particular index, the Nifty PSU Bank Index is the top sectoral gainer. There you go. You have pretty much, that's the Nifty Bank, my apologies, but there you go. Pretty much all the constituents on the Nifty Bank seem to be in the green. The Nifty PSU Bank, if I can have that as well to give more perspective, there you go. The Nifty PSU Bank also doing fairly well in trade today, 100-point gain, especially after a couple of tough days that particular sector has had. But outside of banking, you also have the likes of the Nifty Oil and Gas, which is up around 0.7%. So the Nifty Energy, and the Nifty Fin seems to be gaining. But outside those, some of the losers, you have the likes of the Nifty Metal, which is down 2.4%. And that's where we're at. The Nifty Realty is down 1% as well. But quickly on to stocks in focus today, we have HEG, the graphite manufacturer, and that's in focus because the company declared numbers, of course. The net profit for the company has declined by around 58% on a year-on-year basis. It's down in Q3. Even though the revenue has gone up, large chunk of the revenue was is largely driven by graphite electrodes for the company. We have Manish Gulati, who's the executive director of the company, joining us to give us more perspective. Good morning, sir. I want to understand one entry in particular when it comes to HEG. In every quarter, there is a change with regard to inventory as well as work in progress that you all account for in your P&L. Could you explain to us what that number is? Because it's a positive number, or rather it's an expense in this quarter, but same time last year it was a positive number. It was aiding your top line. So I want to understand what's happening here.
Good morning, Harsh. You see, regards inventory, actually in this quarter you have seen that number because we have our inventories have come down from quarter to quarter, and that's why you see that number of 34 odd crores with change in inventories. So which is actually a good thing that we are bringing down our inventories, and of course you can see the margins are under pressure.
Absolutely. So talk to us about that margin number and give us some perspective on that. What's happening there? Where should we expect margins in Q4 therefore?
Margins of Q4 are going to be of a similar order. See, what is happening is, since the start of this year, the electrode prices have remained under pressure, and that has come on the backdrop of steel production not growing and rather declining in some of the regions of the world where we export electrodes like Europe, Turkey. So year on year, there has been a decline on those numbers, primarily due to the geopolitical situations existing globally. So margins are going to be under pressure for Q4 and maybe 1 or 2 more quarters. See, our prime raw material prices have also come down and electrode prices have also come down, but there's a lag effect when because our process is such that it takes 2 months to make graphite electrodes starting from raw material. But going forward also, 2 quarters or 3 quarters are expected to remain tough again because our peer group is also not utilizing their capacities to that level. So there's excess capacity for the time being available in the market.
Understood. And you are therefore suggesting that there will also be a subdued top line as well as margin. So margin you've guided for the next 2 quarters will be tough or will be in this range, maybe the 15% range. But what about the top line?
Is also going to be of the similar order, I would say, rather maybe a slight decline. But you see, Harsh, in our industry, what is happening is that due to this decarbonization efforts, there's a shift happening from blast furnace to electric arc furnace way of steel making. And that is very clear because there are several new capacities of electric arc furnaces which are coming up in the world, which is going to raise demand for graphite electrodes. And we see this year as probably a blip in that medium and long-term growth story of electric arc furnaces and graphite electrodes. So we are very positive about the future of our industry and future of HEG, because today HEG is the lowest cost producer in the world. We have 100,000 tons capacity at one location and in India. So, and the quality, we benchmark ourselves with the best. So we are very positive about the prospects of our company.
No, absolutely. It's well known that HEG has the single largest capacity with regard to graphite electrodes. But what I want to also try and break down is, from 80,000 you've gone to 100,000 in terms of capacity. How demand is currently subdued. As demand starts to ramp up, what's the kind of utilization you expect and what's the kind of top line you expect, maybe 3 or 4 quarters down the line as demand starts to ramp up?
First 3 quarters of this year, we have been at a level of 85% capacity utilization. Now that we have this expansion of 20 added to that, for next year, we expect it to be at least 75% of that. So we'll still, since the expansion has come in, we will try our best to sell more volumes, to find more markets, more customers. And anyway, 2/3 of our products are exported to more than 35 countries of the world. So I believe that we will be able to, use our expanded quantities in these regions, and another 2-3 years, whereas the 2 years, maybe the demand ramps up, we will be able to utilize this fully.
Understood. And therefore, when do margins go back towards that 30% mark, if I can ask?
I hope towards the end of the year, I hope.
Towards the end of FY25, you mean?
Yeah.
Fair point. And with regard to your capex plans itself, I want to try and also get some perspective. You have a subsidiary which is doing probably 20,000 tons worth of excess capacity or ramping up on capacity there. You've already done, you've expanded your current capacity from 80 to 100, 80,000 to 100,000. So how are you going to be playing at least the new capex which is coming through? Because your margins currently are lower, so therefore cash flows will be lower as well, right?
Right. So let me explain these two parts. The capacity expansion of 80,000 to 100,000 is for graphite electrodes. For there we have spent 1,200 crores and it is complete. We already made the announcement that we are fully on with effect from 1st of November. The other product you are referring to has a different application. It is graphite anode. It is used in lithium-ion batteries. And that project is already on and we expect to complete it by the middle of 2025. And that's a sunrise sector, and we expect a big demand in the country by the time this plant comes. We already have a big demand, but it's all imported from China and other countries. But we expect a big demand for this graphite anode as well.
Understood.
So that's a different project.
Got it. And with regard to lithium ion itself, what's the kind of overall capacity domestically that is being built versus the 20,000 capacity that you are putting up?
Right now, this is, that some other companies also trying for that. But right now, there's not a single kg of this product is getting made in country. We are one of the front runners, I would say.
Would you largely be looking at domestic or would you be looking at exporting this as well? What would be the kind of, what's the visibility like at the moment?
We believe that in India itself, there's going to be a big demand with these battery players coming into it. They will definitely need this component and the focus is going to remain on domestic sourcing. So we are banking upon that. We should be able to sell it in India itself. And if there's any lag in time, first we will export it. And then I'm sure by that time, we'll have enough demand in India from the component manufacturers.
Well, so many things playing out with regard to what business you're doing, Mr. Gulati. It's a pleasure speaking with you. We'll slip into a very short break. Thank you so much for speaking with us and giving us all of that perspective. But short break. On the other side, we'll also have the management of Nucleus Software to discuss their third quarter numbers. Both these stocks taking a knock in trade. Stay tuned.
Presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
फिस्कल डिफिसिट के नंबर को आपने अच्छे से मैनेज कर लिया तो थोड़ा खर्च करने का रूल था, चाहते थे तो कर सकते थे आप, लेकिन वो उस चक्कर में भी या उस लालच में भी आप लोग नहीं आए। मेरा कहना आपके पास स्पेस था फिर भी क्यों नहीं किया?
सबके मन में ये जरूर एक भरोसा, कॉन्फिडेंस था कि जनता समझ रही है कि जो योजनाएं हम तक पहुंचा और सरकार जो ट्रांसपेरेंट तरीके से किसी लालच में नहीं पड़ा और कुछ लीपापोती करने का कभी कोशिश नहीं किया, ऐसे सरकार जिसका समर्थन होना चाहिए हम देने को तैयार है, ऐसे मूड में देश है।
In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies, for others, kids mean puppies. Some want a home to settle in the future, some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back. You're watching the Small and Mid Cap show here on NDTV Profit. We spoke to HEG, that stock taking a knock. We have another counter as well, which has been a multi-bagger in the last 12 months or so. We have Nucleus Software with us. Muted set when I'm looking at Q3 in itself, but otherwise the stock performance has been extremely solid. Yes, there you go. We have the chart there. From that 400 level, the stock currently sitting very, very pretty at 1472, and I'm looking at the 1 year graph. It looks extremely good. And to understand and dissect this business further, we have the management of Nucleus Software with us. We have Mr. Dusad, who's going to speak to us about what the company does, as well as give us some more perspective on the results. We have Vishnu R. Dusad, who's the co-founder and managing director at Nucleus Software. Firstly, welcome to NDTV Profit, sir.
Thank you for having me here.
Right, sir. So talk to us about the product itself, just for more perspective for viewers. Talk to us about what is it that Nucleus does in core, in maybe if you can sum that up in maybe a minute or so.
Thank you very much for giving that opportunity. We are one of the very unique software companies in the country, which has been developing intellectual property for banking and financial services sector for last 3 decades. When we say developing intellectual property, what it means is instead of creating the software for somebody else, the company has created software for itself, and which it gives to banks and non-bank finance companies in 50 countries, and more than 40 lakh crores worth of retail assets, retail loans are given using this software. And we have another software which helps banks do transactions worth almost $15 trillion per annum. So that is what the company is all about. Our business model is slightly again different as compared to typical Indian software industry. We sell licenses of our product, and our customers keep using them for decades because we keep upgrading our software for them as we proceed.
Got it, sir. Got it. So tell me, your top line has largely been steady at around the 200 crore mark over the last 4 to 5 quarters. What's causing you from not onboarding new clients, I believe, because largely your clients are retainer based. So I'm guessing it's only about onboarding of new clients that has not happened maybe over the last 3 to 4 quarters. So talk to us about why this is so.
Yeah, typically an enterprise software product gets replaced over a period of let's say 5-10 years, and the process of replacing that software product can take a year or two, depending upon the particular situation. So we are, as we speak, we keep talking to a whole lot of our prospective customers about the value of our product, and we are very confident that over the coming quarters, they will start taking these decisions, and we will get out of 200 range that we are experiencing for last 4 quarters to the next level.
So where does it go from here then?
It keeps going upwards and upwards over a period, because the value that we deliver is so immense, so absolutely immense, that we have been using a phrase called ultra deep discounting. That's what we had been doing with our products for decades, and now we have just removed the ultra part of it. Those are still deeply discounted prices, and that is the reason they'll keep going upwards.
Sure. So say FY25 or 26, where does the top line go in that year maybe? So from 200, where is the immediate next goal?
Yeah, as far as that question is concerned, as a policy, we have not been giving any guidance, and we will continue to stick to the same policy.
Okay, understood. And margins have compressed because my guess is top line has not gone up. Is that the correct way to look at it? Where should margins go therefore? What's your target margin range like?
Yeah, target margin would be upwards of 30%. And that's what we want to continue aiming for.
Right. And what's the capex like in some of these businesses, to try and understand as you compete with others, what is the kind of capex and what is the kind of cost of tech that you incur on an annualized basis?
Yeah, capex essentially is in terms of investment that we make in building the product. Thankfully, those investments till now at least have been returned to the P&L account, and hence you would not see them in any balance sheet. However, that apart, we do need to acquire some technologies, latest technologies and tools, and that is what we might end up spending, let's say something like 20 to 25 crores in that direction.
Understood. And therefore, it ought to give you a very large return on capital employed, because your capital employed is generally very small. You have no debt. You're a debt-free company. I'm guessing you will continue to remain so. Would your ROCE continue to exceed that 25% kind of mark? Would that also be something that you would be targeting?
Yeah, ROCE of 25% is and upwards is what we will be targeting.
Understood. And what are you doing with regard to acquiring new customers? What's the pipeline like? What's the demand like? How many customers are you pitching for? And as you win customers, what's the kind of revenue recognition that happens? How quickly does it happen?
Thanks for raising this revenue recognition question. As of now, we have been recognizing revenue as the product keeps getting implemented, but there is a possibility that we may change that to reflect the new reality of business, where once we sell the license, so as far as the license part of it is concerned, we may recognize the whole thing upfront. Now, as far as timelines are concerned, this is going to take again 4 to 6 to 8 quarters. The number of customers prospective customers we are talking to are a pretty sizable number, and they continue to be interested in the very, very elegant intellectual property that we have created, which helps them, address their business issues in a comprehensive manner.
Right, very interesting company. Thank you so much, Mr. Dusad, for giving us all of that perspective. Trading at roughly 19 times earnings as we speak, at around just below 4,000 crore. This one seems to be at an interesting point, something that one may want to look out for. So that's what we have on the show for you today. We had HEG as well as Nucleus Software, both stocks, shares taking a knock in trade. But with that, we're completely out of time on this edition of the Small and Mid Cap Show. From me, everyone who puts the show together, thanks so much for watching.
Presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash, made from 51 precious herbs.
अंतरिम बजट के बाद वित्त मंत्री निर्मला सीतारमण का ये पहला इंटरव्यू है। प्राइवेट नेटवर्क में ये पहली बार हमसे बात कर रही हैं।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right. Some believe in swiping right. Some run away from risk. Others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
there are different types of stocks.
Good morning. You're watching Ask Profit. I'm Smriti Chaudhary, your host. And for the next 30 minutes, we'll take all your stock-related questions. You can write to us on any of our social media channels or through the YouTube live chat. You can also message us on the WhatsApp number that's flashing on your screen right now. Or it will. There it is. And before we begin, let's take a quick look at the markets. Nifty 50 is about 0.4% higher. We started off on a bit of a choppy note in the morning, but no complaints there as of now. If you look at the constituents of the Nifty 50, we have the likes of Coal India and UPL that were losing yesterday in trade, but are up today. Coal India up over 4.5% in trade. UPL on the other hand close to 4% up as well. If you look at the point contribution, if you can go back and look at the point contribution again for the Nifty 50, we have 100 points up and contributed by the likes of Reliance and ICICI Banks. Reliance contributing about 30 points alone out of the 100 points. We have RIL, Coal India, L&T as well. Now, if you look at the losers within the Nifty 50, the biggest loser in trade today is Hindalco. That's down 13.5%. We'll discuss more on this in a bit. Other than Hindalco, we have Grasim that's down 3%. After this, there's Adani Enterprise and Divi's Lab that's losing less than 1% in trade today. If you look at the broader markets, Nifty Mid Cap is kind of trailing the index right now. It's up only 0.2%, but Nifty Small Cap is in red today. It's down 0.4%. If you look at the sectors now, we have Nifty IT that's on the losing end today. We saw some gains in the Nifty index yesterday, but that is all lost today. Other than that, we have Nifty Metal that's down over 2.5% in trade, some pressure there. We have Nifty Realty also down about 0.8%. And if you look at the sectors that are gaining in trade, we have the Nifty PSU Bank that saw some whipsaw in the last couple of days, but is up in green today, 0.1%. Other than that, we have oil and gas index that up 0.6% in trade. So that's and Nifty Energy as well, up about 0.8% in trade. That's where we currently stand on the markets. But the focus for today will be Hindalco. But before that, let me introduce you to the guests for today. We have Rohan Mehta of Total Wealth and Nirav Chheda of Nirmal Bang Securities joining us on the show today. Welcome, Rohan and Nirav, and thank you for taking the time out. Now, before I get into the questions, let's talk a little bit about Hindalco. Now, we're yet to see the results. It's due today. But yesterday, its subsidiary Novelis came out with its results. Now, the results were fairly okay. Not a bad set of results. But however, there was a capex increase that was by 64%. If you look at the specific numbers, there is a capex in Bay Minette project, which was budgeted for $2.5 billion. However, the company said it's going to increase to now $4.1 billion. So that's a substantial increase, which is why we're seeing brokerages also coming out and saying that they are changing the guidance. Now, one of them, Kotak, if I'm not wrong, downgraded the return guidance from project to double digits from mid-teens. So that's where we currently stand. Now, Rohan, I'd like to come to you first on Hindalco. We're going to see some impact in the results today as well. But on what we have right now, what kind of impact do you see? And do you think this is going to hurt the company in the longer term?
You see, I believe that, we have seen Hindalco from last 8-9 years. Every time we have been bullish onto the company and something and another comes to it. It's maybe the international company, the subsidiary, and then maybe the, Indian arm. Something other than there comes on with the margin now to be a single digit margin and, the things which are happening around. There are certain things which are beyond our control. Maybe Hindalco somewhere around, it needs a rebalance onto the management side and new strategy to do the business. That's what we can expect, because it was at good profit with 13,000 crore. Then again, diminishing profit to now 8,400 crores TTM profit. And then, whatever the, new buying has happened, new capex has happened. So all things looks very clumsy. So on that point, from last 2022, we have been out of this, stock because nothing new. So we would wait for some management changes and then we come forward for. We believe that the strategy of the company is somewhere hitting onto the, into the margins of the company. So yeah, for the time being, we would be out.
All right, let's take a quick technical view from Nirav as well. We have some viewers who have already bought into Hindalco, and specifically we have a viewer, Rajesh Maheshwari, who's bought the stock at 458 levels. The stock is down 14% in trade today. What kind of strategy would you suggest, Nirav, from a short to medium term perspective?
Yeah. So, see, on Hindalco, looking at the overall chart, there was a breakout around the 500 odd levels, which it has come to retest now. It was on the verge of a long-term breakout above the 625, 630 levels, which it couldn't get. But now the previous breakout has been retested. I believe it can probably take another 3-4 days around the same area, but this is a very good support area. So, in between 500, 490 is where you look to average out, even though you bought at 450 or I think this will be a good area to buy again. Also keep a stop loss of around 475 for your longs. Believe that again, the 600, 620 scale will be regained and this stock can, pretty much reverse from current levels in the next 5-6 days. The process should start.
Right. So you're suggesting that this is a buying opportunity, Nirav. Okay, let's move on to the queries now. Now we have a specific query on vintage coffee. I'm going to come to you, Rohan. Rohan, would you have coverage on this stock? Vintage coffee.
Sorry.
All right.
No, I don't.
Nirav, I'll take it from take this one to you. This one's from Omnil Sawant from Carver. They have already bought in. No, they're asking if this is a good time to buy the stock. So based on the charts, would you suggest entering the stock right now? This is for a shorter duration.
Yeah, so I'll just take a minute or so to find the stock. I cannot even find the stock at this point of time. Just a second. Okay, so it's only in BSE, and this is one stock. I think it has a 5% circuit limit. In fact, a 2% circuit limit. Very difficult to really judge on the technicals for this stock. So, I would not like to give any view at this point.
All right. Next one is from Murlidhar Kalidasu from Hyderabad, and they're talking about Tanla. Now, Rohan, I think this is for the longer term. They are in a loss. They bought the shares at 1,179. Currently, the stock is below that, around 978. Would you suggest, we're talking about Tanla, and would you suggest holding on to this one for the longer term, or is it better to get out of the stock?
See, we had been into Tanla, understanding Tanla with the technology we have and they have, and they had done decent enough in last, to 4 to 6 months. With profit at near to all-time high, that is 538 crores, and this quarter also was at all-time high, near to all-time high profit with this quarter. I would suggest to hold on to the company. I think so. Still, there is a value left out in the company at 13,000 crore of market cap. Nothing much to lose in this.
All right, fair point. We have another question from Rajesh Ji. We've already talked about Hindalco, but he's talking about two other counters, which is REC and HPCL. Now, this is for the short to medium term outlook. Nirav, we've seen some pressure in the likes of REC, HPCL, PSU, PAC on the whole. But what's the short to medium term outlook for these? Would you suggest holding on to these two?
Definitely can hold on to HPCL. A long-term breakout has come in this stock, and this stock is only going to head higher. This is just a short-term correction that is taking shape. It's a good support around 480 odd levels, which it has retested. So definitely believe HPCL can now bounce back up above the 550 odd levels. Your first target would be around 550 from a near-term perspective. You can continue to hold with a stop loss of 480. For REC, it can take a little longer. So I would just suggest, if it comes up towards your cost, you can probably exit this counter because it has seen a very huge run up, from sub 120 odd levels up to those 500 odd levels. So definitely some consolidation should go on. So I'm not very sure about REC. Probably in the near term, it will not do much. It is better to move on from this one to another oil and gas stock named ONGC, which I believe can do very well.
All right. Next up, we're talking about India Bulls Housing Finance. The question is coming from Raja, and they want to know if this is a good time to enter the stock. Rohan, from a long-term perspective, now India Bulls Housing Finance, what's your view on the sector as a whole, and do you think the stock or the company aligns with that sort of growth within the sector?
See, first of all, there has been a lot of issues in this NBFC. Now, there are two perspectives to this. One is that if an investor feels that I want to buy something, a trash down company, and then that is the reason I want to go forward for India Bulls, and that can be a turnaround story. I don't find any turnaround story as of now, but this could be a story to buy out. Whether I would really go forward for, there are a lot of good companies available at great valuation in NBFC. Coming to companies like Home First, or coming to companies like Credit Access Grameen, which are really very doing good with a very, very good management and very lesser NPA ratios. So would focus rather more onto the companies that are performing rather than the company which may or may not perform.
All right, fair point. These are the alternatives by Rohan within the NBFC space that you should look at. Next up, we're talking about South Bank. Now, Guna Sekaran from Tamil Nadu has already bought in the shares at the average price of 38 rupees. South Bank shares. Nirav, from a short to medium term view, how does it look on the charts?
Yeah, see, most of the PSU banks, I feel they still have a long way to go. Even this stock has given a very long-term breakout. So post 2017, this is the first time this stock moved above that 35 odd levels. So on the line chart, definitely believe it is now at a very good support area of around 32 to 30. It can probably remain in this area for the next couple of days or so, but then I believe this stock should pick up pace and should move up towards those 50 odd levels. So definitely hold on. You can add more positions at current levels. The volume profile of the stock is also very good, and it's a rounding formation breakout. So that's another very good sign for this particular stock. So definite hold on to it. You can keep a stop loss of around 26 for longs from a short to medium term perspective.
All right, fair point. Next up, we're talking within the chemical space now. This is Vinity Organics, and the question is coming from Krishna Kumar from Kochi. Now, Rohan, this for the 3 years period, they bought the stock, but they reduced it in September, and now they want to know if this is a good time to enter again and accumulate the stock. Within the space, we have seen some headwinds in the chemical space in the past, but do you think that's where we're past that now?
See, still, I believe chemical is not into the space of accumulation. Things are yet not the worst which we have encountered because the demand has been sluggish. Though we had seen certain companies with the pharma demand has been rebounding because nearly about 30-40% of specialty chemicals are with pharmas. So I would really suggest to wait for the time and wait for the things to get cool off. So I believe still the pain is there. Maybe it will take more than a year to go forward for picking up the pharma companies. We had seen most of the pharma company from 2021 to till today has been consolidated in such structural range, and the numbers has been not been brilliant. So yeah, sell from my side, not an accumulation zone at all.
Right, fair point. The pain may not be over for the chemical space, but it's time for a short break now. We'll take more questions on the other side. Stay tuned.
Presented by Patanjali Honey, world's best Patanjali Honey, 100% proven on more than 100 parameters of purity.
फिस्कल डिफिसिट के नंबर को आपने अच्छे से मैनेज कर लिया, तो थोड़ा खर्च करने का रूल था, चाहते थे तो कर सकते थे आप, लेकिन वो उस चक्कर में भी या उस लालच में भी आप लोग नहीं आए। मेरा कहना आपके पास स्पेस था, फिर भी क्यों नहीं किया?
सबके मन में ये जरूर एक भरोसा, कॉन्फिडेंस था कि जनता समझ रही है कि जो योजनाएं हम तक पहुंचा और सरकार जो ट्रांसपेरेंट तरीके से किसी लालच में नहीं पड़ा और कुछ लीपापोती करने का कभी कोशिश नहीं किया, ऐसे सरकार जिसका समर्थन होना चाहिए हम देने को तैयार है, ऐसे मूड में देश है।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell. Welcome back. You're watching Ask Profit. Now, without wasting any time, we'll quickly dive into the questions. They're pouring questions, but if you haven't written to us, you should write to us on the WhatsApp number that'll be on your screen. I'm also tracking the YouTube live chat, so you can write to us there as well. Now, this one's for you, Nirav. We have a question from Hemant Kumar, and they're talking about futures, ITC and Britannia futures, and they want to know if they're going to recover anytime soon. They say they've seen some downturn in the ITC futures. What would you suggest how would you suggest playing this?
So ITC has witnessed a breakdown, a very important breakdown at that around that 430 odd levels, and post that, the nearest support that comes in is around 380 to about 360 odd levels. So at this point of time, there's still some downturn likely for this stock. Another 5-7% downside is likely. So probably if you can hold on, then you can hold on till those levels, or it will be a good idea to exit the counter and then look to buy around the 360-380 band. For Britannia, I feel the selling seems to be over. There is a likelihood of a bounce up to 51.80, 50, 200 odd levels. Once that bounce comes in, exit the counter. Overall, don't see much upside even in this counter. It should remain largely in range of about 5200 and about 4950 in the next few days. So it has hit the lower band. Now, it is time for the upper band to be hit.
Right. Now, next up, we have a question from Jana Somik, and he's written to us on YouTube. This one's for you, Rohan. They say that they bought NHPC, NBCC, IOCL, but they've sold both, three of them. And now they want to know if they should re-enter these stocks. Now, Rohan, I want you to explain to the viewers, especially from the longer term perspective, what happens is when you're holding these stocks and there's a bit of a downturn that kind of goes on for a couple of days, a panic sets in, and even the long-term holders also start selling, and then when the cycle turns, they think that they should start buying again. What would you suggest in these cases, and specifically on these three stocks as well?
Yeah, I'll tell you my 17 years of experience that if you try to be smarter than markets, market teaches you that you are not smarter enough. So you lose your stocks, 1-2 times you could be smarter, and then one fine day the stock rises and you don't have anything into your counter. Now, I think so, it depends on what are the objective of an investor. If you're a very long-term investor, I don't think so it matters, because you have to understand that in classic bull market where the stocks are outperforming, there will be 15-20% or maybe 30% down a dip, and then again the stock rebounds. You can see the cycles of next, from like 200, 300 years of financial markets, it would be the same. So you have to understand that you will not be able to carry the top and carry the bottom. Just focus on the numbers of what quarters they are posting and the business they are carrying forward. And if you're seeing great growth, then you may see some downtick also. So that's the part and parcel. And or else, if you can't see, there are stocks which are available at a low beta stocks which can be there. So talking to NHPC, IOC, and BPCL, whatever the cluster what we're talking, I believe still there is a lot of steam available in the companies, available at still at 5 times, 10 times of valuation, huge growth perspective, very focused now. Government is on to the government companies. So on all that aspect, I believe that the stocks can do much more better than what we have thought. And if you specifically talk of IOC or BPCL, HPSL, maybe OMC companies, still they are coming out of 17 years of their 7 years of their consolidation, and NHPC have come down after 15 years of their consolidation. So there's a lot of value out over here. If you're getting a deep out of it, I think so if you're a long-term investor, you should go forward for it.
All right, fair point. Thanks for that explanation, Rohan. As a long-term investor, you should not worry about the downturn and upturn in the markets that usually lasts for a few days. But moving on to the next one, we have a question from Naman Deora. They're talking about two stocks here. Zensar Technologies that they bought at an average price of 563 and Traction that they bought at an average price of 110. Now, Nirav, they say that they bought it from a perspective of 6 months, but they are now willing to hold on a little bit longer. So, based on the charts, how do these two look, and what kind of targets that you can tell us for these two?
Yeah. So, Zensar Tech, it had witnessed a good breakout, a rounding formation breakout, but it couldn't sustain the same, and it has come below the breakout again. So, from a 6-8 month perspective, I think, it can take good support around that 480 odd levels. It can probably come till there. You can average, at those levels, and there can be some very good targets that can come in this stock once that 550 is broken on the upside again. So 800 is what I'm looking at this point of time from a 6 month perspective. But the first thing near term, it should come down to 480. So hold on for that level. The other stock was, I think, Traction, right? So for Traction, there is a channel kind of a formation breakout, and the breakout is being retested again. The breakout was around 98 odd levels, and that has been retested now. So it might take a couple of weeks for this stock in the same area, but I believe this stock is headed higher. Volumes have grown as well as the breakout came in. So the breakout is being retested. It can now go on towards those 135, 140 odd levels. And from a 6-month perspective, probably 160 plus is what I'm looking at. But yeah, definitely you can hold on to both these stocks and average both these stocks at current levels and on some dips for Zenzar. Good 50% upside from here.
All right. Thank you so much, Nirav and Rohan, for joining us. Unfortunately, we are completely out of time. And viewers, thanks for tuning in. If we were not able to answer your questions today, we'll be back tomorrow at 11:30 a.m. and we'll take all of them tomorrow. But lots more coming up on NDTV Profit. Stay tuned.
Presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
अंतरिम बजट के बाद वित्त मंत्री निर्मला सीतारमण का ये पहला इंटरव्यू है। प्राइवेट नेटवर्क में ये पहली बार हमसे बात कर रही हैं।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
As we've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
what matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Markets continue to trade in the green. Sensex nears 71,500 levels, while Nifty steady above the 21,700 mark. Financials lead sectoral gains as Bank Nifty gains over 1%, while metals, media and real estate suffer with major cuts. Moves continue for Paytm. Macquarie Capital slashes target to 275 rupees from 650. The stock is down over 6%. MSCI adds 5 Indian stocks to its emerging markets index. PNB, Union Bank and more on the list. And Hindalco declines over 13% as Novelis revises the return guidance for the Bay Minette project, and they have increased the cost for the project as well.
Hello and welcome. This is Hot Money. I am Agam Vakil and with me is Hiral Dadia, and in this show we take you through all the stocks which are buzzing in trade. But right at the top, let's start by taking a look at the markets. And for now, they are advancing. We're seeing gains coming through as far as the benchmark indices go, with the Nifty advancing by around 0.5%. It is the same for the Sensex. And well, we're keeping an eye on the broader markets, which are looking at a tad bit of underperformance at the moment because, the mid-cap Nifty is absolutely flat, marginally in the red, and the small-cap index is in fact under pressure, down by 0.5%. But nothing compared to what we have been used to of late, especially as far as the broader markets are concerned and the indices go. Well, even in terms of the constituents of the Nifty, let's take a look at what's pulling and pushing the index into levels at which we are. So we do have Reliance Industries. ICICI Bank and Axis Bank are the two really curious ones because it seems like we're looking at some amount of short covering here and thereby seeing a push as far as the Bank Nifty is concerned, also the Fin Nifty to a certain extent. Coal India is the other interesting one, which has also resumed its uptrend. But what is weighing down on the indices, and quite substantially so, Hindalco, providing a 25% cut, and that's nearly 50% of the declining points that we're seeing on the index, followed by Grasim, Infosys, ITC. Not too much to speak for there, but largely it is in Hindalco on the losing end, which is in fact keeping the substantial gains in the Nifty in check. That said, as far as the broader markets are concerned, again, let's very quickly address some of the small cap names which are in fact buzzing in trade. Let's talk about the gainers. Right at the top, we have something like an RVNL, and we didn't really have very good numbers from RVNL, but it's resumed its uptrend, and with sharp volumes too. It's up around 8.4%. Aegis Logistics is the other one, which is also up around 8%. Aegis Logistics, of course, has had its fair share of volatility of late, but that's doing well in today's day of trade, advancing by around 8%. We have Reddington India, which is up around 6.8% as well, doing well. Borosil Renewables has been under pressure of late, and that's the one where we need to keep an eye on. That's up around 6%. So on the whole, that's what we're keeping an eye on as far as your broader markets go. But what else are you spotting, Hiral?
Absolutely. One thing I want to highlight over here, Agam, is with regards to Reliance Industries. Record high. Clearly 20 lakh crore is the market cap it has hit as well. And I think it becomes the first Indian company to hit a 20 lakh crore market cap, because last week or a couple of days ago you had the entire Tata group which hit a 30 lakh crore, right?
Sure.
So first Indian company to hit a 20 lakh crore in terms of market cap is what we're seeing with regards to Reliance Industries. Let's just quickly pull up Geo Financial Services as well, because that was seeing a good run over the last couple of trading sessions. Let's see what's happening in that one. We are seeing some bit of profit booking that's coming in today's day of trade. Let's see a 5-day chart of a Jio Financial Services and see, if anything holds water on that stock as well so far. There you go. For the week, around 6 to 7% is the kind of cuts that we're seeing on a GFS as well. But apart from this, a couple of other stocks that I would want to mention is Aptech. 14% up move is what we're seeing on this counter. So that's an interesting one to watch out for. Glaxo is also trading under pressure in today's day of trade. So interesting names and few that Agam has already mentioned. But NCC, let's pull up that stock on the screens. The stock is up nearly 2% in trade. Overall, this is on the back of earnings that we've seen. Revenues have seen a growth of around 34%. Profits have jumped around 37 to 38% for a NCC. A robust performance, it's mainly the execution that has aided, and the order accretion is looking absolutely strong. Neerad Sharma, Head of Strategy at NCC, joins in. Neerad, good afternoon and welcome to the show.
Very good afternoon. Pleased to be here.
Always a pleasure to speak to you. Neerad, clearly, it's the execution which is guiding us and the company to these levels. From here on, are you expecting this kind of performance to continue, or do you see it normalizing at a certain level?
Little premature really to talk about the next couple of years. So I think this year has been extremely good for us, and we have good amount of order book available with us, and that makes us reasonably confident to execute these orders in next couple of years. But the way we function in NCC is, we try to look at all the 150 odd projects that we have, and then try to estimate what is the execution that we can get for all of these projects, for the next year and next to next year. Then we try to talk about this number. Give us a couple of months' time. We will prepare a plan for the next year. We'll seek the approval of the board, and then I would be very happy to come and talk about what is the number that we have with us for the next year.
Yeah, sure. So, but Neerad, the question I have is clearly, if you have to look at the order inflow, in the third quarter, it was slightly muted as compared to what we saw earlier. The accretion in the first half of FY24 is something which has been strong, and probably that is what is going to help the company achieve the guidance of the 26,000 odd crores that you've given for this year. Are we on track?
Sure. We are very much on track. As we speak, in fact, the number that you just quoted is absolutely right, 26,000 crore. By end of, Q3, we have already bagged about 21,238 crores. So what it means is we have already booked about 80% of the target number, and we are quite hopeful of hitting that number.
Okay. And with regards to the revenue growth momentum in FY25, are you expecting that to continue? And the reason I ask you this is because it's going to be election here, and usually you see election-related slowdowns as well in the order inflow. So how is FY24 looking like in terms of getting into 24 into 25 looking like then?
See, firstly, in a project business, even if the award inflow slows down a bit, in a typical year, about 80 to 90% of the revenue comes mostly from the existing projects. And you are aware that we have a very comfortable order book, So even if I were to take the proposition that you're talking about really pans out, we are comfortably placed, as far as our order book is concerned. So as we speak, we do not really, see a challenge for the next couple of years, because we already have what we need to execute for the next couple of years. That said, our experience has been that, these general elections, they do not really, stop the project awards. They just introduce sort of delay about a quarter or about, mostly about a quarter and a half. But we do not have a choice but to continue to, execute the infrastructure projects. I think that is a story that has to play out at least for next couple of decades, if not more. So we shouldn't focus, on a very short term, about a quarter or so.
Good afternoon, this is Agam here. The reason why we wanted to talk about Q4 order intake is because seasonally the infrastructure sector in general has the largest amount of order inflows coming through because that's just something which of a seasonality. Perhaps another way of me to put things into perspective is that while you do have a substantially large order book, it clearly gives the company a tremendous amount of visibility over the next few years. My question is that in terms of order bookings for Q4, if seasonally Q4 is the largest, can you give us an idea about the kind of orders which are in the pipeline where you guys have put in a bid and there could in fact be an even higher visibility going forward?
See, we always, put out a lot of bids, in every quarter, every month, really. But the kind of projects which are really awarded in a quarter or in a month is not a function of the bids that we submit. At the end of the day, it is a call that the client has to take. There are times when we might submit a bid in this quarter that might not get decided in the next couple of quarters, maybe 3-4 quarters as well. And we have already shared in the call that we had on a couple of days back that we are already L1 for about 4,000 crore. So even if a part of that gets converted into order, we are comfortably placed to hit the number that we just touched upon, that is 26,000 crore.
Sure, Nirad, and a bit large chunk of your orders are still from the building segment. What kind of transactions, or pardon me, what kind of traction are you seeing as far as your transport and waterway and electrical orders are also concerned? Can you give us an idea on this one?
We continue to see very healthy pipeline of projects in all these 4 verticals that you just talked about. In fact, these are the 4 verticals that we have. In transportation, in the buildings, in the water division, electrical T&D, we continue to, see a very healthy pipeline of projects, coming up for bidding. The only question is, it is a matter of time. It's a call that the client has to take, when to really decide or, award a project. So there is a time delay in, when the project is called out for the bidding, then we submit the bid, then there is an evolution, then the client, there is a time delay, in between these 2 numbers. But as we speak, we are comfortably placed to hit that number.
Right. Nirad, from a balance sheet perspective, clearly the debt has remained absolutely flat on a sequential basis, and this is despite the uptick that we've seen on the execution front as well, right? Now, from here on, with the projects which are ongoing, how much does NCC need to infuse further, and what is the plan with regards to the infusion or partnering with strategic investors from an equity contribution perspective?
Correct. 2 questions. Firstly, that the debt that we have mostly is a working capital debt. And you have to look at this debt in the context of the growth that we have been able to deliver. The last year, that was FY23, we have delivered a growth of about 35%. The 9 months till end of December quarter, we have almost hit the same number. So mostly this debt is a working capital debt which are really required to fund the kind of execution that we are doing on the ground. The second question that you asked was about the equity infusion. That is only required in 2 of the SPVs. You might possibly be aware that we have bagged 3 big projects for the smart meters a couple of months back. So 2 projects out of these total 3 smart meter projects are in one SPV, and we are in discussion with various investors to possibly have them on board for about let's say 50% kind of stake, and we hope to close that in next couple of months, say that by end of March.
All right, Nirad, we leave it at that. Thank you so much for joining us and taking us through the quarter as well as what we can expect going forward. We wish you the best. Of course, NCC has been a clear up mover and in the broader markets too, very, very strong performance, and for good reason, right? Because we see that in the earnings, not only in the quarter gone by, but also in the first 9 months. And we're going to have to continue to see how things pan out, because we certainly have a lot more in terms of order flows as well as order execution, and perhaps that could even translate further as far as performance for the quarterly is concerned. But very quickly, want to address what's happening at KIOCL. It was down by as much as 12% yesterday, and today it's moved back up, and that is largely on account of earnings that you can see on your screen there. Strong earnings coming in where your revenues have nearly doubled, and more importantly, its bottom line has gone back into the black from a loss, and that's also the reason behind the sharp up move that we've seen. So there you have it, 91% growth in revenues on a year-on-year basis, and coming in at a profit as far as your bottom line is concerned. I reckon that we will also have seen an improvement as far as your EBITDA goes. Yes, an EBITDA gain of around 36 crores against an EBITDA loss of around 44 odd crores. Well, on that note, it's time to slip into a short break, but on the other side, we get you all the hot stocks which are on our radar. Stay tuned to NDTV Profit.
Brought to you by Canara Bank. Together we can.
फिस्कल डिफिसिट के नंबर को आपने अच्छे से मैनेज कर लिया, तो थोड़ा खर्च करने का रूल था, चाहते थे तो कर सकते थे आप, लेकिन वो उस चक्कर में भी या उस लालच में भी आप लोग नहीं आए। मेरा कहना, आपके पास स्पेस था, फिर भी क्यों नहीं किया?
सबके मन में ये जरूर एक भरोसा, कॉन्फिडेंस था कि जनता समझ रही है कि जो योजनाएं हम तक पहुंचा, और सरकार जो ट्रांसपेरेंट तरीके से किसी लालच में नहीं पड़ा और कुछ लीपापोती करने का कभी कोशिश नहीं किया, ऐसे सरकार जिसका समर्थन होना चाहिए हम देने को तैयार है, ऐसे मूड में देश है।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Right. Welcome back. This is Hot Money, and we are talking about a whole list of stocks that we do want to address, and of course, among them is stocks which are going to be a part of the MSCI February review. And at the moment, we understand that in its emerging markets index, that is MSCI's emerging market index, we are going to have an addition of Punjab National Bank as well as Union Bank of India as part of the large caps universe. And of course, in terms of the mid cap space, we will have an addition of BHEL and NMDC and GMR Airports, which is a part of their small cap index segment that will be shifted into the mid cap index. So all in all, we have 5 changes in terms of 5 stocks which will be in focus as far as your MSCI rejig is concerned. PNB and Union Bank in the large caps, of course, in the PSU space. And we also have BHEL and NMDC along with GMR Airports, which will be in focus. But to talk to us about a whole host of these counters, let's get in an expert. We have Ashish Maheshwari, Director of Arihant Capital Markets, joining us on the show. Ashish, good afternoon. Thanks for joining in. Ashish, my first question to you will be on just the PSU sector. We've seen a sharp run-up. We've seen a lot of commentary from the government as well, positive government commentary, encouraging factors playing through. And of course, over the last 1 or 2 odd sessions, we've also seen a little bit of correction. That said, how are you placed when it comes to the PSU banking sector, vis-a-vis the private sector space?
My view is still these are the stock which has a lot of steam left. Even if you see how the PSC indices have performed vis-a-vis your PSU indices have performed, there's a big gap between, if you see even the PSC indices, last 3 months almost 34% appreciation was seen in PSC, vis-a-vis there isn't too much in PSU banking stocks are concerned. But I think with the way now your SBI is moving or Bank of Baroda or PNB is moving, it looks like that money is coming back to PSU stocks as such, because there's a big valuation gap still between the large cap and private sector banking stock vis-a-vis stocks like PNB, BOB, Indian Bank, etc. So in my view, gradually we should start accumulating PSU banking stock. Sector overall looks good.
Right. So that's with regards to where the PSU banking space goes. Apart from that, did we also speak about GMR? Probably that's the one which I missed so far. But any view with regards to where GMR goes? Because that's another one which has been upgraded from small to mid cap. And you have IRDA, which has been added to the MSCI Emerging Market Small Cap Index, and Prestige and RVNL have been removed.
As the GMR is concerned, again, I think more than indices inclusion, the most important part is how the business model is doing. Because whatever stocks are added or deleted in the indices, there's just one day kind of moment that we see in the stock, and later on the stock moves on basis of their fundamentals only. So again, GMR Infra is almost at 52-week high, and the stock has given very good return in last 6 or odd months. And only on account of that working of Delhi airport is improving, and whatever the new airport government is planning 100+ airport in next few years, this will be one of the major beneficiaries, because they are very focused player in this segment. So stock is good. Only thing is, as stock has appreciated quite a bit, so I'll wait for some correction before recommending this stock for a buy.
Apart from that, let's move on to a Hindalco. Interesting one in today's day of trade, because Hindalco will be reporting numbers today. Novelis is the reason why you have a Hindalco which has slipped almost 13% in trade. And the major reason being that the cost overrun that has happened with regards to a Bay Minette project goes. That is one of the reasons why the markets are not happy. Anushi is joining us with what she's picking up from the conference call, plus the impact and what brokerages are making out of it. Anushi, over to you.
Right, thanks for that, Hiril. So again, now coming to Hindalco, the stock is about 14% down. This is after the company's greenfield projects, one of its key greenfield projects of Novelis, its arm, has increased its project capital cost about $4.1 billion compared to the $2.5 billion it had estimated earlier, showcasing about a 65% increase here. So why this delay? Couple of reasons that they have mentioned. One is that the initial plan underestimated the civil and construction requirements needed for the scope of this project. The second one being that the detailed engineering has drove to this increase in capex. Earlier they had mentioned that there was a low level of engineering which led to this underestimation of cost that they were seeing. Again, with the project level of confidence now that they're seeing is that still remains about 85%. So one is the cost factor which is to be noticed, but the other is also the time delay which has happened with this project, now delaying the project to about 1 year, and which will be expected to be commissioned in 2026 second half of that calendar year. Coming to the brokerages, CLSA has reduced its rating for Hindalco Industries based on these and the benefits it sees now culminating about 3 years from now to a reduced rating. So that is that. And another note is again the Kotak, which sees this as an overhang for the business. So this is what is happening in Hindalco that should be in focus today.
So that's with regards to Hindalco. Ashish, your view with regards to Hindalco, taking Novelis into consideration and what the expectations are going ahead, what would you advise investors to do?
Ashish, I believe you're on mute. Can you unmute yourself, please?
Yes, sorry. So this surely negative for Hindalco as far as Novelis both are concerned, but surely this cost escalation for this Bay Minette project, which is in state of Alabama in US, I think they started working in 2022, and it is going to take such a long time. This is the problem for the company because there are so many ups and downs in this particular commodity cycle. So this much cost escalation and which amount to 65% is highly negative as far as cash flows are concerned for Hindalco as well as Novelis. And there's a reason stock has corrected. And in my view, there's still some more correction you can expect in this stock. My advice will be to stay away from Hindalco in short term.
We'll leave it at that. Thank you so much for joining us and taking us through your views on the many themes that we wanted to address today. And with that, we are completely out of time on this show, but lots more lined up on the other side. Stay tuned to NDTV Profit.
Brought to you by Canara Bank. Together we can.
अंतरिम बजट के बाद वित्त मंत्री निर्मला सीतारमण का ये पहला इंटरव्यू है। प्राइवेट नेटवर्क में ये पहली बार हमसे बात कर रही हैं।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right. Some believe in swiping right. Some run away from risk. Others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment.
all you have to do
is ask Profit.
Hello and welcome to NDTV Profit. You're watching The Portfolio Manager, and my guest today is Aman Chauhan, who is a senior fund manager at Abacus Asset Manager, and he manages roughly 25,000 crores in PMS and alternative investments. Aman, thank you very much for joining us on NDTV Profit. Let me begin with the current question which we have. We've been going through the earnings cycle here. After the Q3, nearly 60-65% of the numbers have already come in. What is your assessment of Q3 as an earnings?
The earnings front, broadly, earnings have been in line. We have seen positive surprise coming in some of the banking names. We have seen some of the cement companies report better than what we were expecting. The infra pack has been good. So whether it was an EPC company or a capital goods company or a manufacturing company, those numbers have come in good. There's still some weakness on the rural front. So the bottom of the pyramid demand is still stopped. So that segment is still impacted. Chemicals have been, though it was expected that it will be weak, it has been weaker than expected. So chemical is clearly something that is still, you can say, still on the negative front. IT has been more or less neutral. It has been in line with what the market expectation was. So there has been a mixed bag. Some sectors have done really well. Some sectors are continuing to struggle. And more or less, it has been on expected line. So that 15-16% corporate earnings growth, the expectation seems to be on track as of now.
How do you look at the RBI policy that came in, and the street was a little disappointed given the fact that it seems the pause would be a little longer than expected. What could be the impact of that policy on financials, especially because the governor is talking about transmission being slow, and he's given a trajectory of the inflation, but inflation for next 4 quarters are going to be above 4%.
So we are not bond experts, but from the equity standpoint, what we understand is that if the rate cuts, which the equity investors have been expecting, get slightly pushed back, then there's a near-term impact on the NIMs. And if that happens, then there's a near-term impact on the earnings. So from an equity standpoint of view, if I'm expecting a 20% return in a banking stock over the next 12 months, this gets pushed to the next 18 months. That has, you can say in plain simple terms, the impact of the policy for an equity investor. For a bond investor, it's a completely different ballgame. They'll have to calculate the yields, they'll have to calculate their assumptions to what interest rates they are factoring in, and what is going to be the credit cost, and what is going to be the net impact. But from an equity standpoint, this is broadly what an equity investor will be looking into, that we were expecting re-rating to happen in the banking sector once there's a clear confirmation that the interest rate cycle has peaked and rates can be headed lower, because that is where the re-rating of the sector will happen. So today, if a bank is trading, say, at one-time book, and I expect for a certain reason this 1-point book can go to 1.2 over the next 6 months, the next 6 months get extended to next 12 months. So that's what the impact on equity markets will be.
How do you play the financials in that case? Because you say that valuations are compelling for the banking and financial sector, and if the returns are going to get pushed, or the re-rating is going to get pushed, how do you play it?
Sure. For us, there is no change in stance. See, at the current Nifty levels where we are, market is near all-time high levels, not many sectors are there where the risk-reward equation is favorable, where the valuations are still comfortable. Financial is one space where we feel valuations are still comfortable. We have large banks trading closer to 2 times book. We have smaller banks trading around 1.5 times book. PSU banks are also somewhere close to those levels. So in a situation in the market where most of the sectors, most of the companies are trading above the 10-year average PE multiple, banking is something where stocks are still closer to the 10-year PE multiple, in many cases even below that. For that reason, we find the valuations for the banking sector is compelling. Now, there is no change in stance for this because the valuation remains compelling, just that the expected returns over the next 12 months gets pushed over for the next 18 months. So we'll continue to hold what we have in the portfolio. We'll continue to stay invested. Just that the timeline gets a bit pushed up is all the difference that will make. But there is no, you can say, stock specific change in stance per se in this sector.
And how do you play between the public sector and the private sector banks? Because we have seen a good run up happening in public sector. Private sector has been a little sluggish in that sense, HDFC Bank being one of them. How do you see how do you play between public sector, private sector, and within the banking, you have the mid caps banks as well. How do you play them?
So the way our portfolio structure is that we have a preference toward private banks versus PSU banks. Within private banks also, we don't have the top names or the obvious name because there the valuation is full. So we never owned them over the last several years now. Even now, they don't feature in our portfolio. They don't also feature because we run completely unbenchmarked portfolios. So if somebody is hugging the benchmark, then he has no choice but to buy the top private banks or top 2 or 3 names. For us, that's not the case. So we will be owning among the top, say, 5 private banks. We will be owning 2 or 3 of them in our portfolios, and that's where the preference is. As far as the PSU banks are concerned, at the portfolio level, we have restricted ourselves to the top 2 or 3 names. So we are not in the mid-cap space for the PSU banks because that's where we feel that though valuation is still lower, it's more of a tactical opportunity, it's more of a trade than a sustainable investment to look into a mid-sized PSU bank because they continue to face the challenges of manpower, they continue to face challenges of NPS, right? So right now the cycle looks favorable, but that's just a very near-term myopic. If I have to take a 3 to 5 year call, I'm still very comfortable owning a private bank or a large PSU bank, not a mid-sized PSU bank. So that's where the portfolio construct is. And besides financials, we are also very positive on non-fund based financial stocks. For example, we have wealth companies in our portfolio, we have broking companies in our portfolio. This is something which are clearly benefiting from the upsurge in the equity markets, upsurge overall into the financial markets, and the profitability of these companies are growing quite rapidly. And this is also one segment where we are pretty positive of, and that's also featuring in our portfolios.
I was looking at your allocation for your biggest fund, which is Abacus All Cap approach. Industrials 26.6% is there, and banks 13.4%, and NBFC 16%. So roughly between banks and NBFC 29-30% of your portfolio is there. In the industrial space, how do you look at what's happening there? Capital goods companies were doing well, good order book flows for many of them. How do you look as we go ahead?
So this is one segment where we are very positive because this is where you can say bulk of the action right now is from the government side. So clearly there are 2 initiatives that is going on. One, the government wants, following the policy of Atmanirbhar Bharat, where they want to reduce the import dependence. So most of the corporates, most of the companies that we speak to, they say that they're expanding the capacity because one, the demand is higher. Second, the import substitution is happening. So that is clearly one thing because of which manufacturing is picking up in India. And the second is the China Plus One strategy, where globally your export demand is picking up for Indian sector. So there is a clear market share shift happening out of China to other countries, and India is favorably placed amongst those countries, and hence the sectors and segments here are also seeing good export demand. Because of this, we are seeing a revival in capex, we are seeing revival in capacity expansion, and cap good companies are the natural beneficiary of all these, and which is, as you rightly said, reflecting in the order book position. This is a multi-year theme. It's not just 1 or 2 years. This can continue for the next several years, and for that reason, we are pretty well exposed in our portfolio in this segment. So we feel we are in the second year of the upsurge in the credit or you can say capital goods upcycle. Another 2-3 years, we feel order book demand should be good. And when the demand is good, we are also seeing that these companies get much better, you can say, EBITDA margins than they get in the down cycle. So say for example, a cap goods company which was earning say 5, 6, 7, 8% EBITDA margins, when the order book is full and when the demand is good, the same 7, 8% EBITDA margin becomes 12, 13, 14% EBITDA margin, and this has a direct impact on the profitability. So because of this tailwind, we like this sector, and that's why it is one of the larger exposure to our portfolios.
Despite being expensive, because it's still expensive at this end, will you add to the portfolio at this current prices?
So in this segment, there are two, you can say two sub-segments. One is the MNC or the known popular big companies, the ABB, Siemens, Thermax of this world. They trade all north of 40, 50, 60p. And then you have mid-sized companies or local companies, some of which feature into a portfolio where valuation is still reasonable. They trade at 20, 25, in some cases maybe 30 multiple. So in our portfolios, we don't have the obvious names which are trading at 40, 50p because that's not the style that we follow. We follow a value conscious style of investing for our portfolios where we don't mind paying a premium, but the premium should be justified. We just don't want to pay unnecessary premium just because you are the market favorite or you are a very popular name or you are part of any index. So in our portfolio, the companies that you will see would be mostly trading at valuation which will be lower than what the market leading valuation of the sector multiples would be. So we are pretty conscious on that. So while one segment is expensive, we are right now not exposed to that segment.
Give me a sense of how you have a 13,000 crores PMS portfolio. Can you give a breakup of market cap wise? How much is in large cap, mid cap, and small and micro?
The 30,000 crores is the total AUM. That AUM is split between two strategies. So we have broadly two main strategies. One is what we call as the all cap strategy, which is a combination of mid caps and large caps. The other one is an opportunity strategy, which is a dedicated mid and small cap portfolio. So between these two strategies, we have 13,000 crores of AUM, and roughly you can say there will be equally split between the two strategies. So just by sheer strategy wise, if you have to ask me, I can tell around 25% of this money would be in large caps, 50-60% of this money would be in mid caps, and the balance money of this 13,000 crores would be in small caps.
Aman, stay on with us. We're going to a small break. When we come back, we'll look at some of the strategies that Aman is talking about, which is Abacus all cap approach and the emerging opportunities approach, which Aman is talking about. Stay tuned to NDTV Profit.
Presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash, made from 51 precious herbs.
फिस्कल डिफिसिट के नंबर को आपने अच्छे से मैनेज कर लिया, तो थोड़ा खर्च करने का रूल था, चाहते थे तो कर सकते थे आप, लेकिन वो उस चक्कर में भी या उस लालच में भी आप लोग नहीं आए. मेरा कहना आपके पास स्पेस था, फिर भी क्यों नहीं किया?
सबके मन में ये जरूर एक भरोसा, कॉन्फिडेंस था कि जनता समझ रही है कि जो योजनाएं हम तक पहुंचा और सरकार जो ट्रांसपेरेंट तरीके से किसी लालच में नहीं पड़ा और कुछ लीपापोती करने का कभी कोशिश नहीं किया, ऐसे सरकार जिसका समर्थन होना चाहिए हम देने को तैयार है, ऐसे मूड में देश है.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Presented by Canara Bank. Together we can. Co-powered by Bandhan Bank. आपका भला सबकी भलाई. Special partner, State Bank of India, the banker to every Indian.
Welcome back. You're watching the Portfolio Manager, and with me is Aman Chauhan, who is the Senior Fund Manager at Abacus Asset Manager. Aman, I was looking at your emerging opportunities approach and the interesting, sectors there. Especially, healthcare is coming in there. What is the kind of approach that you're looking at healthcare there? Because otherwise, between the two sectors, I think consumer discretionary and healthcare is the only two sectors which are different in the approach.
On the healthcare space, we are incrementally getting positive. So right now, this will be a single-digit exposure in our portfolios. We have increased this exposure over the last 3-4 months. Going ahead also, we feel that we would be increasing our exposure because the outlook on the healthcare is improving. One, the margin pressure with many of these companies that are facing in the US markets have started to bottom out. So there is less of issues from the export front, and the domestic demand continues to remain stable. From a valuation standpoint also, there are pockets of opportunity in the healthcare space. So going ahead, we feel we will be adding on to the healthcare exposure. Also, from the consumer standpoint of view, most of the consumer companies trade at multiple valuation, which is not something which fits into our risk reward equation, and hence we feel it is much better to have an exposure into a pharma sector versus having something on the consumer side. And that is the reason you will find less of consumer exposure in our portfolios, and that getting substituted by more of industrials and healthcare in a way.
Do you see a consumer having a much bigger headwind as compared to healthcare now? Because last 12 or 18 months we saw some kind of pressure on margins, pricing coming, especially for people who, or companies which are export oriented coming in. Now you are seeing a headwind much higher for consumer sector, where rural demand is weak, consumption is weak, and and there will be a couple of quarters before it comes back.
Exactly. So we have the same view, but right now the consumer demand is weak, especially in the rural sector. Any company facing that segment is witnessing that. Typically what happens is ahead of the elections, there is an increased cash in the economy, and this many times act as a trigger for consumption. So we hope that once the central elections comes in, prior to that, the cash in the economy goes up, and that should help in the rural demand. If that happens, then these companies will start witnessing good demand in the coming months. And hence, in the next 2 to 3 quarters, we feel that this segment should bottom out and start to look up. Once it starts to look up, there's many of the stocks and many of the sectors starts to become interesting. So we are very keenly watching this space. Right now, there is slowdown, but there can be turnaround over the next 3-6 months, and we would like in that case capitalize on that opportunity.
How come you don't bet on consumer discretionary? Because that's a segment where we're seeing a good demand coming in, good volume growth and price growth which is coming in.
There is, but then the valuations are not by our side. So we are very clear that even if you like a company and if it's a great company, ultimately I'm a minority shareholder. So I'm here for a financial return, and I'll get the financial return only if I bet the company at the right value. So it's a great company, demand is good, everything is good, but if it is priced beyond perfection or it is at a significant premium, then we don't invest. And for that reason, you not see much of these companies in our portfolio.
You seem to have
predominantly due to valuation rather than.
You seem to have missed the bus in consumer discretionary, it seems.
In a way, you can say that, but that's not what our style is. So we made enough of money in other sectors. So you can't make money all the time in all these sectors. So happy to miss the bus on the consumer space.
Mm-hmm. Real estate and cement. You said cement is looking good, led by infra demand. Given the kind of infra projects which are coming up and the impetus which has been given, do you see enough runway for cement companies? And price realizations has been very flat in the last 12 months. So do you see good price realizations as well?
Yes, I expect that to happen because the industry has consolidated. So now we have consolidation at the top level. So now large 3 groups have emerged on the cement sector space. Smaller companies are making way, are getting acquired by these larger companies. So because of this consolidation, I expect eventually the pricing power to become better for the cement companies, and that should get reflected into the realization and the EBITDA per ton. Demand is strong, both from the retail demand as well as from the infra demand. and both government as well as private capex is trending up. That also bodes well for on the demand side. So for this reason, we feel the cement still makes sense for us. And on the real estate side also, we are in the third year of an upcycle. Typically, we have 4-5 good years on the real estate front. For the next 2 to 3 years at least, we expect the real estate demand also to be good. So keeping all these things in mind, we feel that the demand for cement should start to pick up.
So are you more bullish on the allied sector when it comes to real estate, or the real estate companies or developers?
Yes, so we don't have direct real estate exposure as of now. So while we like this sector, this segment, and there's an uptick in this segment, we prefer to play it through the ancillary sector. So we would have a plywood company in my portfolio, we have a laminate company in my portfolio, we have cement companies in the portfolio, we have sanitary ware company in the portfolio. So I don't have a direct real estate company in my portfolio. I don't have a DLF or an Oberoi or for that matter any of the direct real estate plays, but we are playing this upcycle via the ancillary sectors.
Why is that? Because we've seen good pre-sales happening for most of the real estate companies, and if you look at the kind of pre-sales happened in the last 12 months, the runway for real estate developers for the next 3 to 4 years seems to be very good.
It is good. Definitely, your observation is right that the pre-sales numbers are good, and that's the upcycle in the segment. We prefer to play it through the ancillary rather than the direct company, because what happens is that we prefer that a real estate as a sector, as a segment, it makes much more sense to invest at the project level than at the company level. Because what happens is that you make a project, you get your cash flow or profit out of that gets redeployed for the next project. So earlier your project was 1 tower, next you want to make 2 towers, then you want to make 3 towers, and it keeps on rolling on. As a minority shareholder, there is not much of dividend gets paid out because they don't generate free cash flow. Whatever profit this company has done, most of the time it gets reinvested. And in the end, when the cycle turns, you will be stuck up in a much larger project that you can handle, right? Because of this reason, we feel it is much better to invest via ancillary company than through a direct company. We are not against the business model, but so far our preference has been via the ancillary sector.
I can see you've also invested in wires and cables business, Polycab being one of the top holdings for you in the all caps approach, if I'm not wrong. How do you see that business? Because given the kind of issues which came in with respect to tax and others on Polycab, what is your assessment?
So we don't comment on stock specific holdings, but overall I can tell you that the reason we own Polycab or this sector is because, as we mentioned, there's an upcycle in the real estate demand. The companies that we have in the portfolio are gaining market share. So from a number 2 player, you are now become number 1 player, and you're still trading at a decent discount to the number 1 player. So one, you're gaining market share, profit growth, revenue growth is pretty strong, and the valuation is still half of what the leader is. So there's enough scope for the valuations also to catch up. So this would be some of the reasons why we have invested into this space or in this sector.
Do you see this sector to be very transparent in the way it functions? Because real estate as a whole has some issues with respect to transparency. Do you see similar issues in some of the allied sector as well, or the allied sectors is much more transparent as compared to real estate?
Yes, so you rightly mentioned that transparency is an issue with the real estate sector. That is also one of the reasons why we prefer the ancillary sector rather than investing directly in the real estate sector. Ancillary, from a transparency point of view, much better compared to a direct real estate.
I just wanted to get an idea on how you look at the markets at this point in time, because you have multiple things coming up in the next couple of months. You have an election which is coming in, you have a monsoon which is unpredictable at this point in time. There's a inflation cycle which is there, and for next 12 months at least inflation will be remaining above 4%. You have global headwinds which is coming in form of supply chain issues, wars which is there. How do you look and assess the entire market at this point in time?
The market has given fantastic returns over the last 1 year. And from these levels onwards, I'm not expecting similar kind of returns. Market is in a fair zone. We are no longer cheap, while we are not longer too expensive that we feel that there should be a worry in the markets. But we are fairly priced. We are slightly about 10-year average, hence we are fairly priced. And hence, from a fairly priced market, one should expect a fair return, not an abnormal return. If it happens, good for all of us, but at least that should not be the expectations. Hence, from these levels, we expect you can say teen and mid-teen kind of returns over the next 3 to 5 year cycle from equity markets, which is still a very good and which is still a very healthy return. In the near term, I feel that the coming central elections is already discounted into the market. Everybody, especially after the December state result outcome, I believe market has started to factor in that the current government is coming back and is coming back with a good majority. So that's no longer going to be a surprise, and hence market is already factoring that. We could be getting into a situation where if market continues to rally over the next 1-2 months, then a classic example of buy on rumor, sell on news coming in, that market rallies right now, and then once the state election outcome comes in, there is a profit booking which comes in, and the markets might give away some of the gains that it makes over the next 1 or 2 months. That can happen, or that can be time correction also. So as we all know, the returns in equity markets are not linear. So this year could be flattish, or this year could be net maybe a single digit return kind of a year. But overall, over the next 3 to 4 year cycle, if you have to look at it, we expect economic growth to pick up. And once that happens, then I expect the equity market also to capture that upside. And you can say mid-teen kind of return is easily possible from Indian equities.
I can see in the portfolio which you have mentioned one sector which is not there, autos, or it's there but very minimal if I am not wrong. What is your view on the autos segment, especially EV? Because I think you are taking more exposure to again ancillaries there and companies involved in EV segment.
Right. You are right in your observation. We don't have much of direct auto exposure. Most of the sector exposure is by ancillaries. The reason for that is that we feel that most of the auto companies are not that prepared for the EV the way they should have been. And they still continue to trade at valuations which are much premium even to the global majors. So you have your global majors, whether there's a German company, a Japanese company, or a US auto major, they all trade at 10, 12 P multiple, whereas companies in India trade north of 20, 30 P multiple, in spite of not being as well prepared on the EV front the way the global counterparts are. And EV is writing on the wall, right? So there is no doubt in anybody's mind that eventually EV is going to be the biggest market share in this segment. So we are looking at a company which is not that well prepared on the EV front the way global majors are, and still continues to trade at a premium to them, and hence we don't feel it's justified to pay that premium. That's the reason we don't have a direct auto exposure. But the sector is good. We are seeing an upscale, and hence we feel it is better to do it via an ancillary. So eventually whatever gets sold, whether it is petrol, diesel, or an EV, there will be components, there will be parts that will be required, and then focus on companies which are supplying these so that their growth rates are intact. So that's the reason we have exposure via the ancillary.
Aman, it was a pleasure talking to you today. Thank you very much for joining us on the Portfolio Manager. That was Aman Chauhan, who is a Senior Fund Manager at Abacus Asset Manager, managing nearly 25,000 crores in PMS and alternative investments. Thank you for watching NDTV Profit.
Presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
अंतरिम बजट के बाद वित्त मंत्री निर्मला सीतारमण का ये पहला इंटरव्यू है। प्राइवेट नेटवर्क में ये पहली बार हमसे बात कर रही हैं।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
Markets come off days high, Sensex near the 71,200 levels while Nifty below 21,700.
And Hindalco declines over 13% in trade as Novelis revised the return guidance for the Bay Minette project.
Woes for Paytm continue. Macquarie slashes the target price to 275 rupees from an earlier 650 target price, stock down almost 9% in trade.
MSCI adds 5 Indian stocks to its emerging market index, PNB, Union Bank and more on the list.
And commodity trading hours revised again. MCX to start the market trade soon. Stock is down 2%.
Haryana police fires tear gas canisters to disperse protesting farmers, several detained at Shambhu border. Hello and welcome. You're watching Market IQ. I'm Smriti Chaudhary and with me is Harsh Saita. And at this time, we'll bring you all the updates in the stock markets. Let's quickly take a look at how markets are faring currently. Now, if you look at the Nifty 50, it's about 0.5% up in trade. We started off on a bit of start on a high note, then went on a little bit lower, but now currently stable at 0.5% higher. Now, if you look at the Nifty IT index, that's flattish right now. And if you look at the other sectors, about how they're doing, Nifty Auto is in red, down about 0.4%. However, Nifty Metal is the laggard in the market today, down over 2.5%, very close to 3% down. Nifty Realty is also down about 1% in trade. Nifty Media also in red. Now, if you look at the gainers within the sectors, we have Nifty Energy that's up about 0.8%, along with Nifty Bank that's doing pretty well today. However, up about 1% in trade. Now, if you look at the Nifty contributors, if we can have the chart for that, yes, ICICI Bank contributing 33 points out of the 100 odd points there. RIL also contributing 31 points there. So that's the makeup of the 100 points. So 60 points by ICICI Bank and RIL only. So that's where we're at. If you look at the broader markets, they have turned red now. Nifty mid cap down about 0.5% in trade. Nifty small cap down about 0.4% as well. So they have slipped into red now. Now let's look at the Nifty 50 contributors and the gainers and the losers among the index. Nifty among losers, the biggest loser on the benchmark is Hindalco, and we'll talk more about this in just a bit. It's down about 13.5% right now, followed by Grasim, that's down about 3.5% as well. There's Mahindra and Mahindra and Adani Enterprises also down over 1%. If you look at the gainers, we have Coal India that had a beating in the last session but is up about 4% in trade. UPL also up 3% in trade as well. But let's shift focus to Paytm, Harsh. We have, let's shift focus to Hindalco rather, down about 13% in trade, and the stock has slumped. Now, this comes after Novelis revised guidance for the Bay Minette project. Anushi joins in to give us a little bit more details on that.
Absolutely, Smriti. So now looking at Hindalco, it's about 13% down. So this is not on the back of Novelis, which has released its Q3 numbers yesterday, but on the back of the increase in the project cost for its Bay Minette plant, which has now seen about a 65% increase in its project cost, about $4.1 billion compared to the $2.5 billion that they had initially stated. Again, with this, the company also downgraded the return guidance from the project to double digit compared to the mid-teen they had maintained earlier. So what are the couple of reasons? So just let's go into this. And the first one is the initial plan underestimated the civil and construction requirements for the scale of this project. Again, which this was on the back of the detailed engineering at the current site, which was comparatively lower at that period of time, which has led to this revision of capex requirement. So now with this, the project confidence level still remains at a revised level of about 85%, and the management does not see a further scope of increase in the project cost of about $4.1 billion over year. Relating to this, a bunch of brokerage notes also came out wherein CLSA has reduced its guidance for the Hindalco industry, seeing the greenfield project time and cost overrun as an overhang for the company. Also, Kotak also has seen the cost upwards in the key growth project, and the timeline shifting to about a 1-year delay also remains a key concern. So what is to be noted is now the Hindalco's results, which are later to be released in today's session. So definitely focus remains on Hindalco's Q3 results today.
Right, thanks so much for that, Anushi. I want to quickly address MCX. Trading has resumed there. It's resumed at 1 p.m. Mind you, today morning, MCX spoke about how there has been a tech issue. In fact, if I have to quote, the exchange is facing some technical issues in its commodity derivatives trading platform, and teams of the exchange as well as technology vendor, which is TCS, have been working to resolve the issue. It seems the issue has now been resolved because we have a fresh announcement coming through. They've said that the delayed start was attributed to the slow processing and generation of back-end files for members. But the good part is it started trading. Let's quickly look at where the stock is at. 1.2% down still, in terms of where the stock is at. But let me switch over. We also have Paytm in focus. Macquarie slashed its target price from 650 rupees to 275 rupees. Now, mind you, two factors that stood out for me in the note. One was the fact that Macquarie post-channel checks seems to suggest that they don't believe Paytm can retain the customers that Paytm currently has, and therefore that will have an impact on the top line of Paytm. How much? Well, they've revised their top line estimates for FY25 down 60% from FY24. Huge in terms of impact. The other piece that stood out for me was with regard to loan disbursals. They believe that Paytm, which actually is the platform which enables other lenders to lend to its customers, will in fact see a shift with regard to the lenders who are currently offering loans on the platform. So they are expecting a wind down in terms of the lenders offering loans, or lenders will reduce their exposure on the Paytm platform, and therefore they believe that that will also have an impact on top line as well as EBIT. But we spoke with the analyst at Macquarie, Suresh Ganapathy, and he has given us, of course, more context to this note. So listen in to a slice of that.
So I think what we have always been telling here is that the most important business for Paytm continues to be its financial services business or its lending business. That is the partnership that it has with all the lenders, and they do have a great set of data, which and of course technology also, which they used to leverage and act like a good digital DSC and source these customers and give it to the lenders, and the lenders are happy paying them a certain take rate. Now, the problem here is what's happened here is because of the restrictions which are imposed, which have been imposed in the Paytm Payments Bank, there is clearly a worry that there could be exodus of a lot of customers as well as the merchant ecosystem. If that indeed happens, clearly the lenders will have to reevaluate their decision or relationship with the with 197, which is the parent company of Paytm Payments Bank. Now, our channel checks reveal that indeed is the case. The lenders are reevaluating their position with 197. Could be for a variety of reasons. One of the lenders, largest lenders, has already reduced their exposure to Paytm by from 2,000 crores at the peak down to 600 crores now, right? So you have seen significant scale down by the lending partners, and there is a possibility that there are more in the pipeline, and at least some of them have obviously kept lending in a limbo for the time being. So all that is actually will have a corresponding catalyst effect on the entire company and its business model of a profitability model. So the call that we have taken very clearly is the fact that there will be a significant reduction in the distribution business revenue, and that, remember, is the highest EBITDA contributor in our view. And in the issue of the fact that these numbers can come down quite significantly, we of course have changed our view and accordingly cut our target price to $275.
That was Suresh Ganpati of Macquarie talking about Paytm. But let's shift focus to Ashok Leyland. My colleague Monal got a chance to speak to MD and CEO Shinu Agarwal, who spoke about the company's growth potential in the coming years. Listen into what he had to say.
We are actually very happy with the last quarter results because it is going in the way that we had earlier envisaged. I think our three mantras going forward will also be to keep a very high discipline on pricing. Number two, to squeeze our cost. I think there is still a lot of fat that we can cut in terms of cost, and also to continue to invest in the future in terms of new alternative technologies.
So, if you could just elaborate on your midterm outlook in terms of numbers, and then we try and break down each of the parameters that you've spoken of.
Yeah, so see, firstly, I would like to mention that as far as the CV demand is concerned, I think this industry is going to go very, very strong. I think with whatever investments the government has done on infrastructure and will continue to do in the future, even in the last interim budget, we saw a greater allocation on infrastructure. I think that is going to really help the freight demand. I think the sentiment on the ground is very positive. I think most of the fleet operators are looking up to invest more into new trucks, into replacement of the old trucks. I think overall the situation is looking good. I think just the current quarter and maybe next few months, I think just because of the high base and probably because of some uncertainty with the elections that happen on the ground, I think there might be a slight challenge in terms of the demand. I think the growth rates may come down, but I think after that there could be a very, very sharp recovery. I think going forward for next 2-3 years, we see a lot of potential in the demand of the commercial vehicles.
I believe in the management call it was highlighted that there will be a mid-teens growth that we are expecting. 15 to 17% is what we are looking at. So if we had to break this down in terms of pricing, you said that there's been a great pricing discipline, but also that volumes might get impacted, and the typical cycle that automobiles follow in that sense. Do you believe that it will be possible to stick to the pricing discipline that you've maintained and still keep up with the margins?
Yeah, see, margin story is very sacrosanct for us, and the reason is not just to make higher margins for the sake of it. The reason is that we are going through this whole energy transition. We have to, as a responsible corporate, we have to invest in this transition of alternate fuels, and that really requires a lot of resources. Therefore, we have to generate that kind of cash to be able to invest. In any case, personally, I am not happy at the kind of margins the whole CV industry has operated in the past. I think there is also a realization at the industry level also, that this industry ought to make more money, generate more cash, so we can do the right investments. So that is also happening as far as pricing discipline is concerned. In any case, we have decided that we are not going to buy market share. We are going to not fight every battle when it comes to price. We are going to be very selective. We are going to be very focused on developing a premium around our products in terms of value for money, in terms of quality, etc., in terms of new features. That is what we are going to be focused on. And the mid-teen story, actually, we had announced that last year in June when we had our last investor day. And we had said that the company wants to be in the mid-teen EBITDA margins. We are very happy that the last quarter we have actually achieved 12% now. Yeah, and going forward, that journey we definitely want to continue. As far as the volumes are concerned, as I said, we may have a temporary dip in the volumes just because of extraneous factors, but there is nothing fundamentally that is wrong as far as the freight demand is concerned. And even if there is a dip, I think there will be a sharp recovery immediately after the elections.
Right, that was Monal in conversation with Shenu Agarwal. But let me quickly take it across from one automaker to the other. You have Royal Enfield, or rather Eicher Motors, expected to declare numbers. On the volume front, you're expecting around 3%, or rather the sales growth that's been demonstrated is 3% for Q3 in terms of Royal Enfield. CV volume also holding up 14% growth on a year-on-year basis, and that should help a revenue uptake of roughly 11% YOY. On the back of slightly better commodity prices, EBITDA should in fact see a solid growth of 22% year over year, and therefore margins should expand from that 23.4% mark to the 25.8% mark. Keep your eye out on Eicher Motors, currently stock down around 1% or thereabouts, but lots in terms of commentary awaited. One is with regard to all the new launches, how they're faring with regard to two-wheelers, especially in the mid-range, how are bikes doing, and lower-end range, how are bikes doing. Second is going to be largely with regard to CV going forward. What's the commentary like? What's the traction that they are expecting? But that's the one stock that we'll have to keep on our radar today. But with that, let me slip into a very, very short break. More, of course, on the other side. We'll keep it stock specific. You're watching Market IQ on NDTV Profit. Stay tuned.
फिस्कल डिफिसिट के नंबर को आपने अच्छे से मैनेज कर लिया, तो थोड़ा खर्च करने का रूल था, चाहते थे तो कर सकते थे आप, लेकिन वो उस चक्कर में भी या उस लालच में भी आप लोग नहीं आए। मेरा कहना आपके पास स्पेस था, फिर भी क्यों नहीं किया?
सबके मन में ये जरूर एक भरोसा, कॉन्फिडेंस था कि जनता समझ रही है कि जो योजनाएं हम तक पहुंचा, और सरकार जो ट्रांसपेरेंट तरीके से किसी लालच में नहीं पड़ा और कुछ लीपापोती करने का कभी कोशिश नहीं किया, ऐसे सरकार जिसका समर्थन होना चाहिए हम देने को तैयार है, ऐसे मूड में देश है।
In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Welcome back. You're watching Market IQ on NDTV Profit, and now we're joined by Sharan Bansal, the director of Skipper, to talk about their third quarter results. Welcome, Sharan, and thank you for taking the time out. I'd like to start off first with your order book. We saw your inflows at around 402 crores, and that takes the total to about 5,700 odd crores, the closing order book. If you can break that down for us in terms of margin profiles for these projects and the implementation timeline as well.
Okay, so thank you for having me. The 5,700 crores of order book that we are carrying as of December, it is spread across our engineering and infra segment. The margin profile of these orders is approximately, on a blended basis, you can assume to be roughly about 10%. And where these orders are coming from, they are primarily from the power transmission space. That's where most of the new orders are coming in. We also have significant orders coming in from the telecom space, where thanks to the new 4G and 5G networks being rolled out, there is a fair amount of ordering action in that space. But primarily, the main business comes from power transmission, where company is active not just in the export markets. We are exporting to about 65 countries worldwide. Of course, India right now is contributing to bulk of the order inflows, where we have seen significant amount of ordering starting from 2022 onwards, and it's expected that it will continue for the next several years as the government looks to integrate 500 gigawatts of renewable power into the grid by 2030.
Understood, Sharan. Harsh also joining in. I want to understand the kind of timeline that you would put in terms of execution of this, 6,000 odd crore order book that you have.
Roughly, the order book, if you look at our last year's sale, it's about 3.6x of our last year's sales. However, of course, we are targeting higher revenue growth in this year as well as next year. So I'd say that this order book gives us visibility of comfortably 2 years plus. And that's what we can expect. Of course, we have an order bidding pipeline also of approximately about 15,000 crores right now, for which we are actively pursuing and looking to get to secure more contracts from that in the coming quarters as well.
Understood. And how much of that do you expect to secure out of the 15,000?
So presently, if you look at our order inflow, we secured about 4,000 crores last financial year. And this financial year, in the 9 months, we've got about 3,100 crores. This year also, we can expect to close at a similar number of 4,000 crores inflow. Further order inflows will depend upon our capacity expansion, because now we are coming close to our full capacity utilization. So yes, we are firming up our capex plans, and we expect to up this order inflow next year, depending on our capex plans.
All right. What kind of guidance do you have for the next quarter and FY25 as well in terms of revenue and margins?
Sure. In the beginning of the year, we had guided for a 25% CAGR growth over the next 3 to 4 years. I'm happy to report that in the first 9 months, we've already crossed that 25% CAGR growth for this year, and we still have a quarter left to go. So yes, so we definitely will be outperforming our own guidance. Looking forward, looking ahead, strong order inflows and good execution, both on the domestic and international front, we should continuously see this kind of growth in the coming years as well.
Last quick question, Sharan, if I can have your take. Capex, when and how much?
We haven't yet put a number to the capex yet. However, the company has also recently closed a rights issue of 200 crores successfully. So that, of course, it will be utilized, part of it maybe towards long-term capex, but more importantly, a larger part of that will be towards the increased working capital requirements of the company. In terms of the capex plans, we are yet to firm up actual numbers. Hopefully, we'll have something for you when we discuss Q4 results.
All right. Thank you so much, Sharan, for joining us and for the comprehensive view that you gave us. And unfortunately, we're completely out of time. But all right, we have MTNL numbers coming in. I'll just address that. There's an EBITDA loss of about 125 crores compared to 132 crores in the previous quarter. The net loss has expanded to 839 crores now from 792 in the previous quarter as well. If you look at the revenue front, that's also down 3% to 192 crores compared with the previous quarter. That's pretty much on that.
Yeah, stock
front.
taking a knock of 7.5%. So quite a sharp knock. I mean, it's been down since the start of the day, but continues to be lower. But with that, we're completely out of time on this edition of Market IQ from Smriti, myself, and everyone who puts the show together. Thanks so much for watching. Of course, stay tuned to NDTV Profit. We have lots more on the other side.
अंतरिम बजट के बाद वित्त मंत्री निर्मला सीतारमण का ये पहला इंटरव्यू है। प्राइवेट नेटवर्क में ये पहली बार हमसे बात कर रही हैं।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right. Some believe in swiping right. Some run away from risk. Others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
There are different types of stocks. Large cap stocks, mid cap stocks and small cap stocks.
How to decide which is the one for you? First, decide on the stock.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment
all you have to do
is ask profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
There are different types of stocks. Large cap stocks, mid cap stocks and small cap stocks.
How to decide which is the one for you? First, decide on the stock.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Hello and welcome to the Mutual Fund Show. Over the next 25-30 minutes, we'll talk all about mutual funds. And this show, of course, aims to bring you advice from industry experts so that you can make smart choices in your MF investment journey. Yesterday, some PSU stocks dragged the Nifty PSU Bank Index in the red. Defense stocks were in the red. And overall, the PSU performance was looking wobbly. Can this performance be used as a lesson when it comes to investing in PSU funds through mutual fund route? Have these funds corrected enough for them to become a part of your portfolio? The answer is likely not, because there could be more in store. And I think that is what we'll try and talk to our experts today. On the show a bit later on, we'll get in Tarun Birani and Ruchi Sankhe to talk about their thoughts. Tarun, of course, is the founder CEO of TBNG Capital Advisors. So that will be a conversation that you should look forward to as well, especially on the PSUs, and of course also get in Ruchi Sankhe to talk about her thoughts. Just a quick update on the numbers that are flashing on your screen. Need to not forget that it's the bang in the midst of the earnings season, so we can't really take our eyes off the ball. There's West Coast paper that has come out with numbers wherein the net profit at 158 crores is nearly half of what they did in the corresponding quarter last year at 310, and therein lies the problem for West Coast. So about some bit of a correction. Even the revenue is about 15 to 20% lower, I believe. EBITDA down 52%, as I said, and as a result of which the stock is looking slightly weak. Remember, it's not a very thickly traded stock, so the volumes could be a bit suspect here and there, but per se, the numbers don't inspire too much of confidence. Net profit down about 48% or 49% at 158 crores, and revenues at 1045 are about 15% lower. But while the Nifty is up and about, there are a few other stocks which have looked wobbly on the Nifty 500 or the BSE 500 list, and some which have looked strong. So, of course, the key culprit in today's session has to be Hindalco. Sharp pullback there, 14% lower even now for a Hindalco, 14.16, about 30 million shares traded post Novelis CapEx announcement. So that stock certainly in focus. You know, Paytm has dragged some of the tech names lower yet again. It's down about 10%. And I wonder what's happening to some of the tech funds. So I think we'll kind of talk about that as well with our experts, about whether some of those tech funds remain interesting to invest into or no at the current point of time. So that comes firmly in focus. There's some weakness today, I must say, in companies on the tech space by and large, because KPIT Tech, for example, is down about 6%. Remember, it's an expensive stock, so would correct at any given day significantly and shouldn't surprise anybody in terms of, because it is not necessarily only news flow which drags KPIT down. Profit booking could also be one of the reasons. But PSUs are having a Nifty day yet again, because I saw SJVN earlier on in the day and that stock was down about 6-7%, though some like IRFC are bouncing back as well. Let's try and understand what to do about this aspect. Our experts, Ruchi Sankhe and Tarun Birani, are with us on the show. Both of you, thanks so much for taking the time out and being with us on the Mutual Fund Show. Ruchi, I'll start off with you. What's your sense around some of these PSU funds or funds which have got a higher PSU weightage, because they've been the talk of town for the last 2 or 3 years. We are doing an analysis of how the PSU stock index has gained very splendidly over the last 3 years. For the first time, it is starting to see some bit of a corrective move. Is this move to be utilized to invest further into these funds, or would you stay away from these?
So I think you're absolutely right. PSU funds have seen a very good performance over the last 2-3 years. In fact, even if you look at the last 1 year, some of the PSU focused funds like Aditya Birla and ICICI have seen north of 50% returns on just a 1 year return basis. So at this point of time, with a lot of, sort of return captured already by these funds, I would suggest it may be time to profit book and move out of these funds and really position your portfolios elsewhere. So at this point of time, my view is that let's profit book and move out of the PSU funds because of the strong returns that we've seen already in this space.
Okay. Tarun, what's your sense?
Yeah, hi. Good afternoon, Neeraj.
Good afternoon.
And again, as usual, I'm a strong believer of suitability. I think suitability defines what needs to be done by the client. And there's a core and satellite approach, and core approach talks about strategic portfolio, which is there for long-term wealth creation of the client. But from a satellite perspective is where you can look at tactical opportunities from time to time. We have seen the category which you are talking about, PSU, I think from decade has been a under category.
Tarun, I'm sorry, but I've gotten your feed slightly patchy. I can't quite hear you, but I think the earlier part of his answer, wherein Tarun said that he's a strong believer of suitability, would possibly mean, and we'll wait for him to confirm this, of course, but could possibly mean that what he's indicating is that if portfolios are bent towards possibility of taking a little bit of a risk, and a little bit of risk might enable the portfolio to have that desired alpha, and who knows, maybe some of these PSU funds at a right level might be a good idea as well. He is of course speaking about how PSU banks, for example, a lot of reasons and a lot of factors which will help the PSU banks going ahead, and some of the banking PSU bank index or otherwise might not be bad plays as well. He of course believes that there is significant exposure showing some positive signs to some key sectors, and regulatory support and reforms in banking are bolstering confidence. And viewers, if you see the last 5-year perspective of what the PSU banks have done versus how the private banks have done, you will get a sense of how the market kind of recognized it. And for funds which had a higher proportion of PSU banks in their portfolio, they would have done much better. Similarly, PSUs by and large, or having a larger PSU presence, would have meant quite significantly for some of the funds which would have either be PSU centric funds or would have had some PSU exposure. So I think you got to keep that at the back of your mind. Ruchi, I don't know if you are at a liberty to, or if you've looked at some of these PSU funds as well, but is there something that stands out? Is there some fund which by virtue of its past investment practices or the portfolio stands out versus the rest? Can you recommend that at all?
Actually, to tell you the truth, Neeraj, while I did hear on the sector focus, we are definitely straight away from sector focus in my advisory practice, and I do not create a satellite portfolio that will be based on certain sectors. So my information to you was more broad based, but I have not looked at this PSU fund space so much in detail, and I wouldn't recommend thematic or sector funds to my clients. So I'll have to sort of refrain from answering this question to you.
Fair call. Completely understand. But I'm glad you called it out. But I believe we have Tarun back. And Tarun, sorry, you were finishing your point. So can I ask you to finish your point around the PSU funds?
So, Neeraj, is the question for me, right?
Yes, please.
Yeah, so Neeraj, sorry for the network issue. What I was talking about was suitability should define what needs to be there in the portfolio. And as I mentioned that if the client has suitability in terms of liquidity, in terms of taking higher risk, looking at sector specific fund, yes, they need to take it. Right. So from a suitability perspective, safety, stability, aspiration, these are the three metrics we look at. And I feel any high risk investment should come in the aspirational investment, which one can look at concentrated investing only if they have that kind of risk appetite. From a PSU sector as such, if I look at last 10 year, a decade, this sector has not done well, and government is not considered as a great capital allocator, at least from a long-term data if I look at. But last 2-3 years, we are beginning to see a lot of macroeconomic changes, a lot of data is changing for us, inflation, interest rates, as well as we are seeing these PSU companies are allocating capital in a much efficient way. So that is one very big reason we start to see a lot of action happening in terms of their market cap performance also. So looking at that, investors who are ready to look at this story from a 5 to 10 year in their satellite portion of the portfolio can actually definitely look at this opportunity. But I would strongly recommend for anybody who don't understand this space to look at diversified fund, because a diversified fund manager always have a ability to buy any sector what he wants, right? So one can anyway participate there.
Okay, that's a fair call too. Now, the other piece is momentum funds which have been launched recently, and there are a few of them available in the mutual fund space, available in the small cap space, etc. We were looking at the HDFC mutual fund launch of the HDFC Nifty 200 Momentum 30 Index Fund. The larger question, and Tarun, this theme I'll start with you. The larger question, is it advisable to invest in momentum funds under the current market scenario? I don't know if you've looked at this NFO and whether you can recommend a yes or a no, but is it good vis-a-vis some of the other NFO, other funds on the momentum side that might be existing? What is your views?
So, Neeraj, I can't talk specific to any fund, but what I can talk about is this index. And I think this index is a very popular index, which is form of top 200 stocks. And out of those 200 stocks, based on a Z score, and Z score basically calculates the momentum characteristics of a portfolio. Okay, so this Z score identified top 30 stocks. And the theory of momentum investing is what is doing well currently has a certificate of market, and it will continue to do well in future. So it is a kind of investing which looks at current opportunities and which market is favoring currently. If I look at last 20-year data, and there is a lot of data available in momentum investing index, and last 20 years, this index out of 17-year data, in 5 years, it has underperformed Nifty. Otherwise, all the other years, it has outperformed Nifty by a good margin. My call is, if somebody is looking at a good large to mid cap mix in the portfolio, because this index will have top 100 large cap stocks and top 100 mid cap stocks. So it is like I would say, large and mid cap index kind of index. And looking at aggressive investment portfolio, this could be a great addition in their portfolio. This index could be a great addition, but it should be taken with a 5-year horizon, because the rolling return data, if I look at from a 3-year and 5-year, there is a good 97% chances on a rolling return data that this index has outperformed Nifty by a good margin. So I think data is clearly favoring this index. But again, this index with a combination of a low volatility index could also be explored, because it can really smoothen out the investment journey for a client. So if that low volatility index as well as momentum is taken in the portfolio, this can really give a very good client experience from a 5-year point of view.
Okay. Ruchi, you have any thoughts on momentum investing via mutual fund route and this particular one?
Definitely do. Obviously you've seen that passive strategies have really taken, it's a different way of investing. So while we've had active managers, index funds have also now really gained a lot of traction. This strategy is also attracting a lot of flows, and it's good to have a passive investment strategy, like this is basically quant-based strategy also as part of your portfolio from a diversification standpoint. Now, if you were to talk about the HDFC NFO, again, I would say that there is a strategy which is similar, which was launched about 2 years ago by UTI. And obviously, you can see the track record and the history over there. And what's obvious is that when the markets are doing well, obviously this overperforms the market, but the drawdown is also higher when the markets are in a bearish phase. So it is a high risk, high return strategy. You may want to sort of consider that as a small allocation to the portfolio because you want to, sort of diversify by different ways of strategies. But, I would obviously take something which is tried and tested and already there in the market versus something that's getting launched newly. And be careful of the fact that it's not going to be just a one-way kind of return journey, because the drawdowns when the market, it will see much higher volatility when the market is sort of in a bearish phase. So having said that, my view would be, yes, add it. But definitely be careful of the risks associated with it, and look at a tested strategy rather than a new strategy that's getting launched, So those will be, in a nutshell, what my view will be.
Got it. No, fair call. And viewers, please understand, before we take that break though, just remember for almost every single NFO that comes out, the advice is pretty similar, that there are tried and tested strategies existing, whether this category or others, and maybe those might be better. But there's so many queries around NFOs we are forced to ask our guests, but usually viewers, remember, if you don't get advice, most advice is tuned to that look at a tried and tested strategy, might be a great bet, performance is known, portfolios are known, and you can analyze it much better vis-a-vis maybe NFOs. Take a break though, come back, talk more. There are a couple of queries that we have had, so we'll try and ask our experts on those queries as well. Stay tuned.
Presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
फिस्कल डिफिसिट के नंबर को आपने अच्छे से मैनेज कर लिया, तो थोड़ा खर्च करने का रूल था, चाहते थे तो कर सकते थे आप, लेकिन वो उस चक्कर में भी या उस लालच में भी आप लोग नहीं आए. मेरा कहना आपके पास स्पेस था, फिर भी क्यों नहीं किया?
सबके मन में ये जरूर एक भरोसा, कॉन्फिडेंस था कि जनता समझ रही है कि जो योजनाएं हम तक पहुंचा और सरकार जो ट्रांसपेरेंट तरीके से किसी लालच में नहीं पड़ा और कुछ लीपापोती करने का कभी कोशिश नहीं किया, ऐसे सरकार जिसका समर्थन होना चाहिए हम देने को तैयार है, ऐसे मूड में देश है.
In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies, for others, kids mean puppies. Some want a home to settle in the future, some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show. All right, back with the mutual fund show right here on NDTV Profit. We've talked about a couple of key aspects now. Because there are a couple of queries that have come in, we'll try and start off with those and try and help two of some of our viewers today. The first one is Pankaj Pandey. He's aged 41 years. And Tarun and Ruchi, I'd love for you to be able to help out if you can. He says that he's currently investing 50,000 rupees via SIPs in 8 to 10 different regular funds. Most of them are multi-cap or flexi-cap schemes. His question is, what should he do with the accumulated corpus? Should he keep it in regular mode or move it to a direct plan? Should he make additional investments to a direct plan because now he probably knows which schemes he wants to invest in? What would your views be? Ruchi, I'll start off with you on this.
So as an advisor, I would never recommend anyone to invest in a regular plan. In the equity side, especially in the multi-cap and the flexi-cap side, the differences in the expense ratios can be as high as 1 to 1.5%. So you're losing that out of your annual return. Every year, basically, you are losing that compounding effect as well. So definitely all incremental investments need to go in the direct plan. And what he has already invested, he should look at least look at the exit costs. If it is less than a year, sometimes there are exit loads that are associated with it. So one would hold on to those investments and make sure that you cross that exit load, and also look at it from a tax perspective, and then switch it really to a direct plan is what my view would be. So that's in my nutshell. And also look at the portfolio and see that you've got, while you've got multi-caps and flexi-caps, index funds is a great fund, a way to invest in the large cap segment. If you don't have that, include some of those. Also, given the way the markets are today, most of the funds are all growth focused. So if you don't have a value exposure, then look at just adding some value funds as well. And I would just construct a robust portfolio, which will be more on the through a direct route.
Okay, Tarun, I presume that would be a fair deduction with the presumption that he knows how to analyze mutual funds or has an advisor who's advising him, because else he might not know how to switch.
So, Neeraj, I want to add one larger point, and I want to give a message to larger viewers on this point, that people tend to feel that mutual fund, they need to put 8 to 10 funds in their portfolio, 15 funds in their portfolio, always keep adding new strategies based on FOMO, sometime energy sector, sometime PSU sector, sometime this. According to me, it's a operationally nightmare, and it's a very big energy loss. A 3 to 4 good funds portfolio can take care of the job. Now he's talking about a 50,000 SIP. I think a good 2-3 funds SIP, that's it. They don't need anything else. Mutual fund in itself is a very diversified portfolio, 50-60 stocks. And if you start allocating it into 8 to 10 different funds, I don't feel benefits of diversification actually comes, and a lot of overlapping of stocks keeps happening. So to keep it from a long-term perspective, because operationally, if people keep adding new fund based on listening to experts like us, they will always keep adding new funds. And I feel after 3 years, 5 years, they will realize that actually it's not adding any value. Long term, the returns will keep coming, but operationally, it's a nightmare to manage such portfolio.
Fair call. Okay, we just have about 2 minutes left, so slightly shorter answers for the next query. Clinton Ashley Sullivan, 54 years. Interestingly, he's got some 5 funds and he puts 2,000 rupees per month in each fund. So therefore, the next fund will come, same fund will come for repetition only after 6 months, something like that, right? But ICICI approved Sensex, ICICI approved Balanced Advantage, HDFC Balanced Advantage, HDFC Mid Caps and HDFC Focus 30. He wants to invest 10,000 rupees additionally. Asking about what are the funds that he can look at. We have about 40 seconds for each answer. Tanul, I'll start off with you. 40 seconds.
Yeah, so looking at the age, and I can see he's closer to retirement. He has a lot of balance advantage strategies in the portfolio. I don't have his risk tolerance and in terms of his return expectations and all that. But my suggestion would be in looking at the current market environment, large cap strategies, as well as asset allocation, dynamic multi-asset allocation strategies look best. That is where, and maybe the existing funds he should add. He should not try to add more funds.
Okay. Ruchi, what would your advice be?
I would actually concur with Tarun. Look at more large cap strategies and index funds. But I also concur with what he said earlier. That doesn't make sense in adding too many funds for the quantum that he's looking at. So, but large cap and index could be good additions.
Hopefully, all the viewers are listening to this. Thank you so much, Ruchi, as well as Tarun, for joining in today on the show and giving us your advice. Really appreciate your time.
Thank you, Neeraj. Thanks a lot.
Thank you. Thank you. And viewers, thanks for tuning into this leg of the MF show.
Presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
अंतरिम बजट के बाद वित्त मंत्री निर्मला सीतारमण का ये पहला इंटरव्यू है। प्राइवेट नेटवर्क में ये पहली बार हमसे बात कर रही हैं।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Hello and welcome. This is Large Trades. I'm Agam Vakila, and in this show we talk to you about all the stocks which are buzzing in trade, largely on account of volumes, bulk deals and block deals. And of course, we also have a special conversation around earnings, a quick look at the markets at the moment, and we are looking at strength, return, bout of short covering for a handful of key indices, of course, and as far as the Nifty is concerned, advancing by around 0.6%, near days highs, and we did see a little bit of a dip a little bit earlier on in the session, and that's seen a recovery as well. As far as the Bank Nifty goes, once again, we're keeping an eye on how things are panning out there. That's where we have seen further advances, and the Fin Nifty expiry, of course, will also be in focus. Do remember that we have seen we've seen good gains as far as your call premiums are concerned. We'll continue to keep an eye on that one. But very quickly to take a look at how the broader markets are faring, and that's where there's been a little bit of an underperformance. It's been flattish as far as the mid-cap index is concerned, mid-cap 150, and the small-cap 250 index is also now just about in the green, even though it was trending marginally in the red through the course of the session. We continue to keep an eye on that one. But with that, let's shift focus to management that we are getting in on account of earnings. We have Harin Kanani, MD of and Neogen Chemicals, who's joining us on the show. Harin, good afternoon, and thanks so much for joining in. It's been a subdued quarter, Harin, but I reckon that this is on account of a lot of measures that the company has been taking over the course of the last few quarters. And I reckon that based on the capital expenditure going forward, we perhaps will start seeing the performance from those factors come into play as well. Still, if you could in fact take us through all that that the quarter holds and what we can expect going in.
Hi, thank you. Good afternoon, everyone. So I think this was a quarter where we had excitement that our new site for lithium and battery materials, we were able to acquire land. And we also completed the design of our large electrolyte plant with the Mitsubishi's support, MUIS support. So I think these were the positives. Yes, the top line was a bit corrected because if you compare with the same quarter last year, the bromine price and the lithium prices were at its peak, and it was 3 times, 4 times. Whereas, today the lithium prices are maybe 1/5 or 1/6 of what they were in the same quarter about a year ago. So in spite of that, so if you actually correct for that, we have seen a volume increase of around 10 to 15% in spite of lower agro and pharma demand. So I think we are very happy that this we were able to do. Of course, most of the pharma segment is now already recovering. Agro is taking a little bit more time, international agro business. So this has been a bit of a challenge. But we've basically replaced that with more business in the pharma, and we've taken other initiatives with which, we feel we should be again back on track. I think even considering these factors, the numbers have been good. The standalone was more or less in line with the previous quarter. Only in a console basis, our new acquisition, which is N-butyl lithium organolithium manufacturing company called Bulai Chemical. It was hit one time because of a higher price lithium inventory, which we had to sell at a lower price as it's a new business which was setting up. But the positives there are now we have gotten several international customers approvals. The lithium and bromine are almost at their historical bottom prices. So we expect going onwards, there won't be any inventory related hits which we'll have to take. We've already managed that for last 7-8 quarters through this journey. This was one quarter where the new company made it difficult for us to do that. But with that becoming operational, we are excited to basically reach the full utilization level, what we are targeting in FY 25-26 as the organic plant basically improves. And with the battery business where we are investing very heavily. In fact, we saw such a strong demand for the electrolyte salts that we had to increase our capacity, which we had planned for electrolyte salts from 1,000 ton to 2,500 ton in our existing site. And we've maintained the timelines for our long-term capex plans for the greenfield site, which is coming up in 2026. So overall, we are planning still a 1,500 crore capex in our battery material business, which will give us a revenue visibility of 2,500 to 2,900 crore on full utilization basis.
Right. How to stay with us? Let me get in my colleague Varsha as well into the conversation. She also has a whole lot of questions around, the businesses that you spoke about. Varsha, over to you.
Hello, Mr. Kanani. So my first question to you is now regarding this battery chemicals. You said almost 2,500 crores is the peak revenue that you're expecting. So have you been have you acquired any customers for the same?
Yeah, so we've been working with customers over the last 1.5 years and several customers. So that the whole process is you have to first give your samples, they need to get approved. Then there is a larger scale trial. So on the electrolyte side, we have been moving along and we've been adding more customers to the list who have approved our samples and who are now also going for a higher value trial. So last 18 months, we have been supplying electrolytes to various Indian companies. We have worked with more than 14, 15 Indian companies to whom we have Indian and even some international company who have tested our sample or approved our sample. So as their final production plans move closer, and we are expecting at least 2 customers to start in 2024 and more by 2026. So the facility for that is already coming up in this quarter. And most of these customers have visited the sites and are very keen to start consumption from the new site in the next financial year. So this is on the electrolyte side. and we are seeing more and more interest on our electrolyte salts, which is basically used for formulation into making electrolytes in the international market. So we have basically seen interest on that from all the geographies internationally: Europe, Japan, US, Korea. So these are the main non-China geographies. And we've seen more and more customer approve our samples and get more concrete discussions around volumes, which is what has basically required us to increase our initial capacity. So we were planning 1,000 ton of salt and then increase that to another 3,000. So that initial 1,000, we are changing it to 2,500. And overall salt capacity also, we are increasing to 5,500 metric ton as compared to 4,000 metric ton, which we had just announced last quarter. So that increase is based on more deeper customer interaction, which we had in last quarter.
Okay, that's really great. The second question that I have is on your intermediate business, that is advanced intermediate business. Considering the pressure in agrochemicals, where do you see this business going forward?
So we feel this is temporary. There is a destocking which is happening, and Neogen's most of the agro business was international. So of course, as a backup where the demand was not coming in. So again, in agro, we are also targeting majority of the business under CSM, so contract manufacturing mode. So in this, there was few customers who actually, we did our R&D, we did our pilot, we did our first commercial run. But when we were going into annual contract, larger volume annual contracts, they don't have a demand in 2024. Most of them expect demand to come back in 2025 once this inventory correction is over. So second half of 2024, which is basically next year, second half. So June onwards, they will start, preparing for 2025. And that's when we expect the demand to come in. In the meantime, we use this time and the capacity available to get more new molecules through the pipeline. We also targeted more industries. So we got a good response in flavor and fragrance and some specialty applications in specialty materials in Japan market. Also, we started some initial work also related to semiconductors. So I think, this gave us a space to basically expand our product base, customer base. And we expect in the second half of next year, the agro demand will also come in, as well as the other initiatives which we have put in. So that's why we had guided that we'll reach full utilization in our intermediate, basically non-battery business by FY26 with 1,000 crore. So that we still maintain that in FY26, our regular business can reach, let's say, 1,000 crore potential, 1,000 crore revenue at an 18% to plus kind of an EBITDA. So that remains constant. Only we'll have a couple of quarters where we are just adjusting and we are reshifting this demand until the agro demand comes back.
Okay, so correct me if I'm wrong. So in Q4 FY24, the last quarter of this year, you're expecting a subdued demand?
So if you compare with our same, it will be better as compared to this quarter, last two quarters. So if you look last 2-3 quarters, our our revenues have been around 160-165 crores. So we expect better than that because pharma is recovering and some of the initiatives which we have taken will be better. However, as compared to last year, where we had our highest quarterly performance of 200 crore on back of largest volumes and in terms of highest lithium prices. So as compared to that, how we will be, we'll have to see. It depends on how the lithium demand picks up and how the lithium pricing works in the next 2 months. But overall, if we look at our next year guidance and more precisely our FY26 guidance on full utilization of the existing plant, that we still maintain. And by the time we reach full utilization there, the battery business will be growing because our capacity, the large capacity, the initial capacity in our Dahej site is coming online this quarter. So that will start contributing to revenue in next financial year. And the large capacity which we are setting up in the greenfield site, that is coming up in FY26. So beyond FY26, battery will become a sizable contributor to our business.
And so overall in FY25, where I can see your revenue and margins for the same? Overall on a consolidated level.
So I think on the console level, our Bulai Chemical acquisition, we have now started getting approval. Some of the pharma customers who had zero demand in last 6 months are starting in this quarter or next quarter. And we have used that time to get international approvals also for our organolithium compound. So I think next year organolithium compound will be able to use our Bulai Chemical facility fully. So that's going to be a positive as compared to the current year. We also expect pharma has already recovered, so we'll have a better demand in the pharma. Few segments, there's still a bit like lesser demand, and still there's a lot of Chinese dumping which is happening, but we'll be able to manage that. And in the second half, if the agro demand comes on, then we should have a good next year. And on top of that, the battery also will be coming back. So I think if I look at our next year, we should see a performance better as compared to current and even last year in the coming financial year.
All right. So thank you so much for answering the questions. I wish you all the best. Agam, back to you.
Thanks so much for that, Varsha. Thanks for steering us through that conversation. Of course, a very interesting company there and a lot in terms of prospects going forward. But on that note, it's time to slip into a short break. But on the other side, we get you a lot more in terms of stocks. Stay tuned in.
Presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
फिस्कल डिफिसिट के नंबर को आपने अच्छे से मैनेज कर लिया, तो थोड़ा खर्च करने का रूल था, चाहते थे तो कर सकते थे आप, लेकिन वो उस चक्कर में भी या उस लालच में भी आप लोग नहीं आए। मेरा कहना आपके पास स्पेस था, फिर भी क्यों नहीं किया?
सबके मन में ये जरूर एक भरोसा, कॉन्फिडेंस था कि जनता समझ रही है कि जो योजनाएं हम तक पहुंचा और सरकार जो ट्रांसपेरेंट तरीके से किसी लालच में नहीं पड़ा और कुछ लीपापोती करने का कभी कोशिश नहीं किया, ऐसे सरकार जिसका समर्थन होना चाहिए हम देने को तैयार है, ऐसे मूड में देश है।
In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies, for others, kids mean puppies. Some want a home to settle in the future, some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
There are different types.
Welcome back to Large Trades, and we now take stock of how markets are faring. And as I've already mentioned that we are looking at some amount of strength as far as your key benchmarks go. And even though the Nifty and the Bank Nifty have come up by just that bit from day's highs, we're still looking at good gains coming in. The Fin Nifty, of course, is what's going to be in focus on account of the weekly options expiry. And that is also where we have seen choppiness, but advances all the same, up around 1.5%. So, good gains coming in there. Let's talk about the broader markets and see where there is more traction there. Now, I know that, pardon me, while the broader market indices are flattish at the moment, there are a lot of counters out there which are in fact moving quite substantially. Let's pull up something like a Poonawalla FinCorp and take a look at how things are panning out there. We are looking at advances of around 2.3%. On the other hand, we do have some weakness in a handful of other counters, of course, and we'll bring that for you too. We do have Orchid Pharma, which has continued its up run, and Orchid Pharma, of course, has also seen a lot in terms of an up move, especially after it's come out its earnings, and we are seeing an advance of around 4% right now as we speak. We have seen a little bit of a recovery in Vascon Engineering as well, which is up around 2% for now. So keep an eye on that one. And after a sharp knock yesterday for something like a Genesis International is now looking at an up move of around 2% here as well. It's quite a bit in terms of the gainers and losers, but of course, in terms of the market breadth overall, that is something that we're going to keep an eye on as we move into the final hour of trade, because that will perhaps determine a lot. But shifting focus from the mid caps and the small caps to the large cap space, we have Hindalco, where not only did we get an update from Novelis earlier, but we now also have the earnings for that company. And for that, we have Anushi, who's joining us to give us an update on both these aspects. Anushi, a lot of weakness in Hindalco in today's day of trade, the top loser as well. What are you making of all the factors that are coming through?
Right, so starting off with the performance of the stock, if you can just consider that the stock has seen about a 14% decline, and even its volumes were buzzing about 4 times.
Anushi, I'll have to get back to you on that one. We are just going to get back because we do have an audio problem. But Anushi most likely will tell us about how the earnings have panned out. What we have to understand is that we have seen a little bit of a reaction on its earnings. Not as much, a little bit of an up move there from day's lows, but we also have a lot of weakness with this Novelis update. And I think we have Anushi back with us. Anushi, take us through what you make of this.
Absolutely, Agam. So starting off with what was the reason for this 14% steep fall that we are seeing is, again, the Novelis investor presentation which came out, and the conference which was held, in which the company's greenfield project, Bay Minette project, capital cost has been increased from about $4.1 billion now compared to about $2.5 billion it had stated earlier. So this was again a 65% increase here, which is quite a significant increase. And now one is the cost factor, another is the time factor also. So the expected timeline for the project commissioning was in the H2 of FY 2026, which has now been moved to H2 of FY 27. So project cost overrun and the time overrun. So what has led to the delay? A couple of reasons here. First was the initial plan underestimated the civil and construction requirements for the company and for the scope of this project. Again, there was detailed engineering which took place currently, which has led to this revised capex that we are seeing now. So this has resulted in overall up of the project cost. Again, seeing this, a couple of brokerage notes also came out wherein CLSA has downgraded the stock to a reduced rating, seeing the current cost and time overhang as a factor going ahead. Now moving on to Hindalco's results, if you have to look at that, so the street expectations was the company would see about a 6% decline, but contrary to the market expectations, we see about a 0.65% decline to about 52,808 crore in this quarter, while the EBITDA has seen about a 65% jump to 5,865 crore, led by the improvement in the EBITDA per ton that we are seeing. Again, EBITDA margins are more or less in the same range as compared to the market expectations at about 11.1% compared to the market expectation of about 11.6%. However, what missed the expectation was a reported profit where they expected about an 81% jump, but this is lower at about 71% jump at about 2,300 crore. But it is to be noted that this is also on the back of higher impairment loss that happened in the quarter. So this is what needs to be focused for Hindalco in today's session.
Sure. Anushi, a lot to take in, of course. While the earnings are not terribly disappointing, the fact that we've had that disappointment coming in from the novelist's corner is the reason why we are looking at a near 13% correction in Hindalco at the moment as we speak. But from there on, we move on to another company which is buzzing in volumes, and that's Time Technoplast, which also recently posted its third quarter earnings. Well, today, of course, it has also been doing well. In fact, it's currently trading at days highs. Let's get in Mahima to give us an update on this one. Mahima, what can you offer to us this time?
Right, Agam. So as you rightly mentioned, its Q3 results came out yesterday post markets, and if you see, the revenue has grown over 17%, EBITDA has grown over 26%, margins have improved from 13.36 to 14.38, and net profit has grown over 48%. So good results for Time Technoplast. If we talk about the key highlights, the major key highlights were that Pipes has had a healthy order book of 1.9 billion. They are continuously focusing on innovative and tech-oriented polymer products. The capacity utilization stands at 82%. They're also focusing on brownfield expansion in India and overseas for catering the future growth. Their LPG cylinder also has a good potential ahead on account of Pradhan Mantri Ujjwala Yojana, and they've also enhanced their annual CNG cascade manufacturing capacity by 300 cascades, and CNG cascades current order book stands at around 2 billion. So overall, a very good picture for the company. And if we talk about the stock performance, as you mentioned, it touched an intraday high of 14.5% today, and trading high in volumes as well, trading at 6.8 times its 30-day average. So good day for Time Technoplast overall.
Okay, thank you, Mahima, for getting us that update on Time Technoplast. Certainly a very, very interesting company, and well, building a significant amount of momentum in today's day of trade, up as much as 17%. And from there on, we address the final stock on our list, and that's Chemplast Sanmar, which is also in focus on account of a large trade coming through. And let's get back, Varsha, into this conversation. Varsha, what insights can you offer us on this particular counter?
So Agam, if you see Chemplast Sanmar, which is into specialty paste PVC, if you see the volumes, so volume is trading at 3.4x its 30-day average, and stock is down almost 9% in trade today. Now this is on the back of a company posting weak results. So if you see, revenue is down 25%, there is EBITDA loss followed by net loss. Now the reasons why the impact on the performance is due to further correction in PVC prices on account of dumping from China and other countries, and also slow down in other chemicals such as your caustic soda, your hydrogen peroxide and refrigerant gases. This is due to oversupply situation in India. Also there's increase in feedstock which is impacting the performance for the company. But company is expecting boom in infrastructure and real estate sector, which is going to drive demand for PVC, and company is expecting a gradual recovery in prices and margins over 2 to 3 quarters.
All right. Well, thanks for that, Varsha. Of course, those are the three companies that we wanted to address in today's day of trade on the back of volumes. And on that note, we're completely out of time on this show, but don't go anywhere. On the other side, we get you India markets close. Stay tuned to NDTV Profit.
Presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company, some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams.
Welcome, you're watching India Market Close, and it's looking like perhaps the close will definitely be better than the opening. Markets in recovery mode after what has been a range-bound and pretty tough day. So right now, the Nifty and Sensex completely now near the day's high at this point. The Sensex about 500 points up. Let's quickly look at what's happening in the broader markets though, and have broader markets recovered, have PSU stocks recovered to some extent. Broader markets have gone in recovery mode. They're at least not negative, but nothing fantastical happening there. Completely flat on the mid-cap 100. We'll pull up the small-cap index as well and see what's happening there. So you're essentially seeing banks, I would say, carrying the day. Banks and financials carrying the day today. Let's pull up the Bank Nifty as well while we're at it. Yeah, the small cap also completely flat. But let's pull up the Bank Nifty while you're at it, and that's where you see the strength of the day. In fact, let's see the Nifty heat map as well and look at what's happening there, where you saw some pain coming in on the metal side, and of course stock of the day continues to be Hindalco. There's no going away from what we saw this morning straight at opening with its subsidiary Novelis talking about mega projects seeing cost overruns of 65%, and Hindalco has been taking beating since then. Hindalco numbers standalone have also been put out just a short while ago, but no sucker there for the stock. Coal India on the other end of it continues to be the winner of the day, but you're looking at the financials theme overall, whether it's an ICICI Bank, SBI Life, even if I look at the BFSI space, Axis, etc., Kotak Mahindra not doing too badly at all. Auto is not having a great day, whether it's an iShares, Tata Motors, or even an M&M, all of them a bit under pressure. Quick look at the advanced declines before I hand it off to Harsh on specific stocks which have been making news, and wow, just look at that chart. It's telling you how this market is unable to make up its mind. You have seen the zigzag through the day going on and off. So you had a mid-morning recovery of sorts or a midday recovery of sorts. You've slid into negative territory again, and now you are back really to positive territory with that advanced decline gap now reducing. I'm just going to quickly look at the Bank Nifty contributories before I go further, who is contributing or what is contributing to the rise in the Bank Nifty. And yeah, you have PNB, ICICI Bank, all of them doing fairly well on a day like today. PNB up almost 3.5–4%. But you know, the stock specific stories are interesting, and we talked about one stock of the day, Hindalco, Harsh, but there are many more that have been reacting negatively or positively to results as well, isn't it?
Yes, plenty of stocks to talk about today, Tamanna, but I'm going to limit myself. I'm going to start off with a Bharat Forge. We spoke with the management yesterday. The stock continues to tumble in trade today as well. With it, Paytm 2 is down close to 10%. On the back of that Macquarie note, no respite currently being seen on that one either. In terms of the positives, PSU pack has seen a bit of recovery, and with it RVNL as well as Coal India on the back of some positive notes that have come on the back of numbers again, and RVNL emerged as a bidder on another project, and 7% uptick there for RVNL as well. A bit of a bashing that we had seen on some of these PSU counters last 2-3 days seems to be reversing, so that's a positive. In terms of earnings, plenty. Let me first talk of the negatives. HEG, GSK, Pharma as well as SAIL, all of those lower, sharply lower, 3%, 6% each, GSK as well as HEG on the back of numbers. Also, some of the other ones, NRB Bearings came out with numbers again earlier today, and the stock has slid 4%. TVS Sri Chakra, we've seen a bit of a recovery there coming through, and LG down 9% since the start of today. That's the other one. Phoenix Mills and Galaxy. Phoenix Mills, good set versus what was expected, but the stock taking a knock of nearly 5%, and Galaxy surfactants also lower. Let me switch over to the positives. It's a positive day, at least on the benchmark, and let me pull up the likes of a Borosil, a KIOCL, both of which are up and away on the back of numbers. You have MediAssist and Time Techno as well. Again, Time Techno flying away post the numbers. Of course, a block deal also on that one, and MediAssist also higher, at least as we speak. You also have the likes of a Repco Homes, which is trading higher in trade today. So plenty of stocks, but it's a very stock specific, action specific and news specific market, Tamanna.
Absolutely. Just want to pull up MTNL as well. Their numbers were in a little while ago and not very positive. MTNL still about 8% down on that, and you're seeing InfoEdge numbers coming in as we speak. InfoEdge right now in negative territory, though the numbers on the face of it look pretty good. Net profit has jumped up substantially, almost doubled from what I can see at first cut. Revenues have also been quite decent, but the stock performing in negative territory. EBITDA is also up about 7.5%. Perhaps we'll have to see what the estimates are and why that's sort of a negative streak right now. Anyways, let's go quickly now across to our experts for the day. Soni Patnaik, AVP GM Financial Services, is joining us right now. Soni, great to speak with you on the show. We're also speaking with Dharmesh Kant today. He's Head Equity Research at Chola Securities. Dharmesh, welcome. Very good afternoon. Soni, let's begin with you and the sort of recovery that we're seeing right now in the indices. The Nifty back above 21,700. Can it stay put there?
Good afternoon, Tamana. Thank you so much for having me on the show. So I think, we've been seeing Nifty stay quite in a range of 21,500 to 21,800, 850 on the higher side. So even if today's recovery, it is still heading towards the resistance zone of 21,800 to 21,850 in cash level. So the only moment it's able to cross that, then we can see the 22,000, 22,100, coming on the screen once more. As of now, it's looking quite positive. Maybe there could be a positive opening even tomorrow with the sort of put writing that's happening at 21,700, 21,600 put strike prices today. So I think on immediate basis, 21,680 holds as a crucial level for bit above which, the Nifty must close. If that happens, so then perhaps tomorrow should continue as a positive day. I think the only concern would be Bank Nifty. Bank Nifty also has equally, a lot of resistance around 46,000, 46,200. So as long as Bank Nifty is not successively taking out 46,200 on the higher side, we may see some sort of selling pressure on higher levels. So I think that's the key level to watch out for when it comes to Bank Nifty.
All right, key level to watch out for on Bank Nifty. You are seeing a good recovery mode over there. Soni, before we move ahead to Dharmesh's views, dare I ask you about Hindalco? Any kind of relief that you see there on the charts?
I think Hindalco, after what we've seen, 500 is holding its some sort of immediate support. So I think from 500, it can bounce back to 520, 525 odd levels, but not a lot of recovery. There could be continue as a selling pressure on charts, also on the options derivative options chain that I can see. I think it's not very encouraging as of now just to play for a pullback for, just higher levels of 520, 525 as such. But yes, 500 is a good support. It may consolidate in this range for a few days, just not giving out any sort of a directional trend going forward. So I think we just have to bear with this sort of a pain for a few days.
Got it. Dharmesh, let me come to you. I want to try and understand how are you viewing markets at the moment. We've got one day where we have good gains coming through and another day when the markets are taking everyone for a spin. So what's your sense?
Yeah, good afternoon. I think this is the nature of the market, which is likely to be there for some more time. So topsy-turvy kind of a market. Normally, everything is priced to perfection as far as stocks are concerned. And that is what is causing this volatility in the market, because you don't have any elbow room for any of the errors being there. And sector rotation is the game which is going on in the market. And this market is now all about, liquidity. It's not about valuation, because valuations are already being priced in. And to a certain extent, it's on the higher end of the valuation trajectory where most of the stocks are trading. But the type of liquidity flow which you are seeing, almost 18,500 kind of SIP flows, 2.8 million more mutual fund SIP accounts being opened on a monthly basis. So this is a huge inflow of liquidity which is coming. And this money, the mandate is to be deployed into the market. So that will provide the much needed flow. I don't think for next 1 month we can have a breakout of any directional trajectory in the market, whether it is 22,000 plus or 21,000 below. So this is the zone in which the market is likely to oscillate, and thereafter built up to the fourth quarter earnings and elections built up will start. So overall the sense is still positive, though on a heated map we are standing right now, but that is likely to be there for some time to come.
Understood. And Dharmesh, we took, Sony's views with regard to Hindalco. What are your sense? What do you make of the numbers as well as some of the commentary, very interesting commentary that's come through? What do you make of it? Is this like a knee jerk, or do you think there's a fundamentally large shift that's happened?
No, to my mind, it's more of a knee-jerk kind of a reaction which we have seen in Hindalco. And not to forget, Hindalco has run up quite a bit. It's already up more than 25% in the last 3-4 months. So some profit taking was warranted, which has happened on the back of this news flow of the capex expansion. The worry was not about the capex expansion plan, which they have already announced. The worry was the increase of the quantum of the fresh investments which are likely to go under the capex cycle. Hindalco, if you look at the management, they have done it time and again. I have been tracking this company for 15, 20 years. And every time when they announce capex, capacity expansion, it goes in for a negative turn, but eventually after 3 years, it plays out to their advantage. So I will give this benefit to the management. I am very pretty sure after 3 years time frame, this will also play out to their advantage. As far as fresh buying is concerned, I think give it some time, maybe couple of days more of some softness in the stock, 5-7% more down from here, will give you a better margin of safety for an investment perspective. Results were good, nothing wrong with the results. Even the analyst numbers were quite okay. So I think their US counterpart is doing well. Going forward, aluminum and copper both will be needed, and that is the metal for any auto or consumption sector. So this will stay. Nothing wrong with the balance sheet or nothing wrong with the working capital cycle or the operating margins which they are having. And I think that's more of a just a reaction which has happened, and it's time to look forward to implementing this stock. We would be happy if it comes down below 5-7% from here.
Okay, so Dharmesh doesn't think that there is a problem per se, but we put together this bit of data on what exactly has happened to Hindalco today and why it tanked. And Anushi is also joining us with the Hindalco standalone numbers and more details on this. But essentially, the problem is not so much with Hindalco as with Novelis, Hindalco's subsidiary, which it acquired in 2007. They had announced a project in Bay Minette, which is a place in Alabama near the coastline. They're building a recycling and rolling plant there, which will service and make aluminum for beverage cans, EVs, etc. It's an important project because it aims to be carbon neutral for scope 1, scope 2 greenhouse gases. So you need to see that in the context of, if that is the aim, how much do you need to spend to make it? What has astonished the street is that in its con call, Novelis said that the project, which was penciled in at $2.5 billion, will now cost $4.1 billion. So you're looking at a 65% upside. So it's not only going to cost more, it's going to be delayed. The delay in commission could be as much as 12 months. There are also lower returns expected from mid-teens to a double digit. And the reasons for this are also astonishing, to be honest, because this is the management itself that's saying that when they first set out on the project, there was a low level of engineering that underestimated the civil and construction requirements. It was over-ambitious view on how you're going to keep your costs low because it's a construction near the coast. Inflation led to cost increase, but can it be to this extent? And a couple of notes. Largely, I would say the CLSA note that has spooked the market, because they believe that even this double-digit growth is a tough task, and the overhang of this particular project will remain. Now, the question is, to what extent does it impact Hindalco? And Anushi is standing by with those details. Anushi, just explain to us Hindalco numbers, of course, but the contribution of a Novelis to Hindalco's top line.
Absolutely. So as you correctly covered all the aspects of what is the Bay Minette project and the implications of how the growth estimates and the cost overruns and the time delays is going to cost in the terms of guidance and all that. Just a quick note over here that as Novelis is an arm of Hindalco and contributes about 60% of its consolidated or 60% of the total revenue of Hindalco's revenue from operations as of, if we look at the last couple of quarters. Now coming to Hindalco's results over here, so the street expectation was about a 6% decline, but the company managed to surpass those expectations, showing just about a 0.65% decline at about 52,000 crore, which is on the back of the lower aluminium prices that has been going on. Again, the EBITDA was about 65% up at about 5,865, much higher than the street estimates of about 5,500 crores. EBITDA margins mainly remained in line at about 11.1% range compared to the street expectation of about 11.6%. So what did miss the expectation was net profit, which saw about a 71% increase to 2,341 crore. But it is to be noted that this was on the back of a higher impairment loss of about 171 crore, which took place in this quarter, compared to an impairment loss of about 6 crore in the previous year's Q3 of FY23. So this is all the scene that is going on in Hindalco today.
Understood, Anushi. Thank you for that. Tamanna, the other piece also is with regard to how CLSA is viewing this. The guidance that came through from Novelis is they reduced their IRR on the project from mid-teens to double digit, right? Which also, what CLSA believes, is going to be a tough ask.
That's what I highlighted.
Yes.
So your returns are less, your project is delayed and is going to cost more.
Correct.
But having said that, the point that Dharmesh was making, it's an important project.
Yes.
And once it's done, the initial hiccups are done, it will start bearing fruit. But the question is, are you willing to wait 3 years?
3 years, absolutely. Dharmesh, give us some more insights on this 3-year piece that you're talking about. So the capex will probably take a year or two for it to start bearing fruit. So how should a holder of Hindalco approach this from a 3-year horizon perspective? Should one wait for a larger correction to come within the benchmark as well as in Hindalco before they move in, or should you buy at this point and be a 3-year holder?
I think if you break it into the parts, Hindalco is standalone business plus the LRS business plus the Novelis business, and this is in addition to the Novelis business, which is likely to benefit. Why I took a 3-year time period horizon? Because of its full capacity utilization when it will come into play. So the project is already being delayed, and now this CLSA call is more of a subjective call. So they are viewing it that, double-digit growth may not be there after 3 years time frame, which is, it's an opinionated call. We all have our opinions, so they are, full right to do that. But I don't think so. It will be the scenario. And eventually the profits are going to come on the table. And if you are having that positivity and that aspect in mind, my own sense is that's why at the beginning I said 5-7% more price correction from here would be an ideal opportunity to get into it, because all other factors are playing out. There is no wrong, or there is no deficiency or no discrepancy out there. So those businesses will continue to do better and better as the time goes by. And commodity price internationally, if you look at it, last year it was a negative year for all the base metals, and this year so far it has been a negative year, which comes to the benefit of a company like Hindalco, which is not the miners but the producers of B2B segment. So, but that was the reason why I'm, pretty bullish on Hindalco from a long-term perspective. So if you're a holder, keep on holding it. If you want to buy, you can buy now. Why do you even wait for 5-7% or 10% more of a correction if you're looking for a period of 2 to 3 years kind of a time frame? So long-term, I think it's a solid bet.
Right. Hindalco from a long-term view might still be an option you need to look at. Meanwhile, you're seeing BHEL numbers on your screen. The first cut looks like not a very great quarter for the PSU, down 6% already. We're going to take a very short break, but when we come back, we're addressing this slicing that we're seeing in PSU stocks. Will it continue? Can we see some recovery? And what's the road ahead? We're back on all of that after this short break.
Presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
फिस्कल डेफिसिट के नंबर को आपने अच्छे से मैनेज कर लिया, तो थोड़ा खर्च करने का रूल था, चाहते थे तो कर सकते थे आप, लेकिन वो उस चक्कर में भी या उस लालच में भी आप लोग नहीं आए. मेरा कहना आपके पास स्पेस था, फिर भी क्यों नहीं किया?
सबके मन में ये जरूर एक भरोसा, कॉन्फिडेंस था कि जनता समझ रही है कि जो योजनाएं हम तक पहुंचा और सरकार जो ट्रांसपेरेंट तरीके से किसी लालच में नहीं पड़ा और कुछ लीपापोती करने का कभी कोशिश नहीं किया, ऐसे सरकार जिसका समर्थन होना चाहिए हम देने को तैयार है, ऐसे मूड में देश है.
In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams.
All right, the last end of result season is on and you're seeing those numbers coming in. BHEL, we spoke about very, very briefly before the break, and they're not looking pretty. Revenue, okay, seems fine, about 4.5% up. But EBITDA losses seem to have, shrunk to some extent, but not looking great. Your net loss, though, has gone into 149 crores versus a profit of 42 crores year-on-year consolidated numbers. Agam is joining us now for a breakdown of the numbers. Where is the pain point coming from, Agam?
Sure. So, Tamanna, two things that we need to keep an eye on when it comes to Bharat Heavy Electricals. One is that its order book. Its order book is well over 1 lakh crore rupees, but its execution has continued to see weakness, and it's not just a one-off quarter. It's a little bit of a trend when it comes to BHEL, and because of that, its revenues, while they have risen 5% year-on-year, they are still below Bloomberg estimates of around 6,000 crores. That has in fact led to weakness as far as its operations are concerned, and thereby leading to an EBITDA loss of around 63 crores against a profit of 144 crores year-on-year. Well, no prizes for guessing then that the bottom line has also seen a net loss of around 149 crores year-on-year against a profit of 43 crores. Now, do remember that off late, we have seen BHEL run up substantially. In fact, it has been one of the top gainers of late over the course of the last 2 to 3 weeks, largely on account of the several orders that it has got from other government entities. The question really is that while it continues to see its order book burgeon, in terms of its execution, that's where there has been slackness, and that is very evident in the numbers that you've seen in BHEL. Also the reason why we have started seeing that weakness come through, especially over the last couple of sessions. The real question is, can the company really pick up its execution? For now, that doesn't seem to be the case, and that's very evident in the numbers too.
What a succinct and perfect breakup of the problems with BHEL, because it's talking and it's giving you a hint into what the bigger problem is when it comes to PSUs. And yes, you might have seen some recovery in some of those counters, but all right, you are getting the orders. Can you execute them? Can you execute them on time with efficiency? And that's where the whole question comes. I'm coming very quickly to Dharmesh on this, and let me get his view first on BHEL and this whole PSU pack pain that we've been seeing.
Yeah, Tamila, I mean, there cannot be a better way of highlighting this fact that execution is the thing. And the other companies from the PSU pack like Hindustan Aeronautics or Bharat Electronics, they have demonstrated the execution capability. And that is why the premium valuation has come through. BHEL, though it's having order book of more than 1 lakh crore rupees, that is almost 5x of their current run rate. I mean, operating loss is something which should not have been there. I can understand lesser operating profit or the operating margins being lower, but operating loss is something which is definitely not negotiable. And the entire run up to BHEL was on only two counts. One was the healthy order book and increasingly growing order book. And the second was that this company has transformed into a more of a private sector play where execution is, picking up in a better way. So that doesn't look to, prima facie, that doesn't look to be the case. I have to look more into the details of it. But definitely this is not a thing which will go down well with the investors and traders who are, holding BHEL.
Sure. Thanks for that, Dharmesh. Before I come back to you, let me go to Sony. Sony, your views, especially with regard to some of these broader PSU pack, how are they looking on charts, but specifically on BHEL, what's your view at this particular price point?
Harsh, if we just talk about BHEL, then from the options data, I can see that 200 holds out to be a very strong support. Even on charts, it was indicating, because earlier it was a very strong breakout above 200, and the entire of Jan and Feb series, we've seen it continuously holding above 200. There's a lot of aggressive put writing also at 200, even when the result impact has been seeing, and the stock has seen a sizable fall. So I believe that with this support, it can definitely bounce back and head towards 220, 225 odd levels in the coming days. 200 holds a very crucial support, but any break or close below this level can cause some profit booking on a charts basis, and it can see 190, 188 odd levels also. But as of now, the stock is a good buy from dips, keeping a 200 as a stop loss, and look for targets of 220. I think that's how it can bounce back. And speaking about the broader PSU space, we've seen some volatility in this entire space where last 2 days some profit booking has taken place. But obviously the correction that has happened has also given a very good buy on dip sort of a strategy, especially in stocks like NTPC, ONGC, Coal India that you can see. So I think these stocks they've just come to the level where one can reinitiate the longs and ride the momentum again for another 5 to 6% upside.
Wow, very interesting there. Possibility of riding that momentum still on some of those PSU names. But Dharmesh, if I can come back to you with regard to just valuation and comfort, some of these have run up substantially. Thereby somewhere signaling that the market seems to suggest that there is a fundamental shift with regard to how PSUs can now execute, or the perception of execution with regard to PSUs. Now, outside of BHEL, which is, you've voiced your opinion very clearly, outside of BHEL, how do you like some of the other names, the likes of HAL, SAIL, NHPC, BEL? I've given you a mix, power, defense, maybe some railway as well. How do you see valuations in some of these pockets?
I mean, these are the three sectors which have seen the maximum traction. The power sector, the defense sector, and the railway infra segment. So all these sectors seems pretty well poised for further growth. I mean, there is no question mark raised as far as business or execution of the order in hand is concerned. The results which I have seen so far for Q3 has been a very good set of numbers, be it HL. The numbers were good, in line with what the expectation was. And so was the case with, say, in defense, if you look at shipbuilders like Majgaon Dock or Cochin Shipyard, they have also come out with a good set of numbers. RVNL, the case was the stock price has gone up too fast, too soon. So that discounting has taken place. I think the correction has been there. I won't be surprised some more correction is in store for railway infra stock like RVNL. If it comes to around 200 kind of a level, it would be again a very good and a screaming buy out there. So if I want to place my bets, it would be like this: RVNL, Aircon from the railway space. IRFC also merits the bet out there. These three counter from the railway side. In defense, it is HAL, BEL, and Majgaon Dock. These are the three companies which looks pretty attractive. Power sector NTPC is there, it's already has done good. NTPC and Power Grid are already there. But apart from that, from private sector play like JSW Energy, one can go into, and metal and mining coal India is still very cheap. I mean, it's available at less than 10 times of PE multiple based on the TTA basis with ROE more than 56%. So it's very hard you can go wrong. And just you put in context with the thermal power generation capacity expansion, which government of India is planning, is almost 80 gigawatt, and we have seen the volume offtake coming from Coal India. So this trajectory is likely to continue. The profitability has compounded over 30% for the last 5 years. So this is again a good space to be, and maybe NMDC again. So these are the few companies which looks very attractive. If you are holder for long term, no problems out there. But if you are looking for some short term kind of an adjustment, then I do think railway infra can come in for some profit taking. Though today the day has been good, but going forward for 1 month, you can get a better entry point.
Understood. Thanks so much for that comprehensive view with regard to PSUs. Let me also quickly mark out Paytm at lower circuit since the last 15 minutes now. It's sitting 10% lower. We'll speak more about that after this very short break. On the other side, we'll continue to get you specific names and advice, and of course top buy sell recommendations today.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
There are different types of stocks: large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks
on your show, Hot Money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company, some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target, what's good for long term, when to buy, when to sell. How do you stay ahead of all the financial noise to achieve your dreams?
you can accomplish all your financial dreams.
All right, markets continue to be in recovery mode, but I'm going across to Agam now, who's tracking what's happening in the F&O space on the day of Fin Nifty expiry. Agam, are you seeing that same choppiness and volatility?
We most certainly are seeing a lot of choppiness, and while the day may not be focused as much on the benchmarks, we certainly have seen their ups and downs coming through, and that in fact has led to a lot of volatility as far as the Fin Nifty options market is concerned, considering it's the weekly options expiry. But I'll come to that in just a bit to address how the Nifty is panning out, where we are seeing longs coming through, even as we see an open interest increase of around 4%. Moving on to the Bank Nifty futures, that's where once again we are seeing a little bit of strength resume, and now we have taken out all the weakness that we saw last Thursday. The reason why that's important is because last Thursday was where we dropped off from your near-term highs. For now, looking at longs coming in. Pardon me. Of course, this is the option open interest change as far as the Nifty goes. This will take a little more in terms of traction tomorrow and day after, but let's pull up the overall in open interest distribution. And for now, we're still looking at a 500-point range between 22,000 and 21,500 on the lower end based on max OI. Moving on to the Fin Nifty expiry. Now, that's where, things have become a little bit more interesting, because we're currently looking at 20,200, and remember that because of significant amount of calls being written there, and that's being taken out, and now there's a likelihood that we will in fact close somewhere around that mark, is the reason why there has been choppiness. Do remember that somewhere in the middle of the day we had in fact seen a very, very sharp cut as well. That said, overall it does seem like it's turned out to be a good day, at least for positionally long participants. But when it comes to your open interest gainers, we are looking at shorts across, at least in the top 5 open interest movers. Hindalco, MCX, BHEL, Ipca Labs and Bharat Forge, all of them under pressure and looking at shorts. And on the other hand, among stocks which are seeing unwinding in trade, we're looking at short covering for PI Industries, Canfin Homes, Zydus Life and City Union Bank. Keep an eye on these counters, but as we move into trade tomorrow and day after, I reckon all eyes will now be on the Bank Nifty, considering the weekly options expiry, but also the fact that we have recovered a lot of the losses which were made over the course of the last 3 to 4 sessions.
Yeah, Bank Nifty definitely in a recovery mode, and you're seeing that in the entire BFSI pack as well. Just highlighting an important tweet from Prime Minister Modi on the solar energy scheme. Now, a few weeks ago, he had spoken about, in fact, in late Jan, Prime Minister had spoken about this scheme, which is essentially to give solar energy on rooftops to 1 crore homes. Now, in this series of tweets, he is detailing how this will happen. And important thing is, it's the PM Surya Ghar Muft Bijli Yojana. Now, this is the key factor, because that means no one is paying, at least the end user is not paying for this Bijli. This project will have an investment of over 75,000 crores and aims to light up 1 crore households by providing up to 300 units of free electricity every month. So in order to popularize this scheme, local bodies will be incentivized to promote rooftop solar systems. At the same time, the scheme will lead to more income, less power bills and employment generation. So this is going to be the big one to watch out for. Let's see what some of those renewables are doing. And yes, some of them are, everyone's in their own different story, because Borosil Renew, as Harsh was also pointing out, has had generally a good day. Though it has spiked over an hour ago, Harsh, when that tweet came out. Yes. Suzlon has now, come off. But you are maybe going to see a return to some interest in the renewables space, because now it's very clear that it's not just one of those schemes. There is an allocation. You're saying the government is going to spend 75,000 crores on this.
Yes, absolutely. And that, of course, Tamanna, I'm not sure how much of that is factored and how much of that continues to trickle through incrementally. This is, of course, a positive.
In the stock prices?
Yes. So that's
that nobody knows.
Yes, absolutely. So that's something to think of. But let me take it across to Dharmesh. Take some of his views on this one. Dharmesh, what's your sense? Has the run up in some of these stocks already? Are we late to this particular party, or do you think that there is still some juice left in some of these?
No, I firmly believe that we are late to this party. And see how this 75,000 crores over a period of time frame will be allocated is to be seen. I think a strong contender for this, the largest share pie would be BHEL again, maybe NTPC to a bigger extent. But I don't think this larger share will come to the private sector place. Plus, it will, since it's a welfare scheme, so there hardly government of India will leave any margins for the players to make decent profit out of it. It will be a very minimal margin kind of scheme. Secondly, what I'm worried about is one is the solar panels. The second is the per month electricity consumption that is also to be given free to most of these players. So that how it plays out over a period of time has to be seen. But as of now, I think the two biggest beneficiaries to my mind is one is BHEL and the other one will be through NTPC. How and which subsidiary it will be is how to point out right now. Other from the Borosil Renewables or Sterling and Winsell and all, I think the party is more or less done with them on this news flow.
So that's an interesting take, but think about it, your nodal agencies may be, as Dharmesh was saying, BHEL, NTPC, but you need the private sector to come and make the components which will translate into those large numbers. We saw something similar in railways. Maybe the heavy lifting came from government-run companies, but then there was enough work for everyone. Let me get the technical view from Sony. Sony, any of these energy renewable names, despite the pain that a lot of them have been through in the last few sessions, that you think you would like?
I think, Tamanna, just the way I've mentioned NTPC, one can still look for, look at this stock itself, because technically in derivatives data, it has reached a support. The support is around 320, 315, and it's closing also above it. So I think it can bounce back above 330, 335 odd levels. I think this is a stock that can be looked ahead because risk reward is also quite favorable, and there is good call open interest and winding also seen at higher strike prices. So I think NTPC would be the pick from the best from this pack.
Sure, understood. So let's also quickly have a look at what Paytm is up to. Let's go to Paytm first, Tamanna, actually. Okay. Let's have a look at what that one is up to, because of course there was a note by Macquarie, and if we can pull up, because we spoke with Suresh Ganpati, who's obviously the author of that note, and he's downgraded Paytm quite sharply. If we can pull up what he had to say with regard to Paytm, but two key takeaways, at least from my side, with regard to Paytm. One is that he's not really, basis his channel checks and basis Macquarie's channel checks, they don't believe that the 33 crore customer base can be maintained by Paytm, and thereby that will have a knock-on effect on revenue. Also, with regard to loans, they believe that distributors of loans, NBFCs, banks, may not be willing to continue at the same clip at which they've been disbursing loans on Paytm. Both of that will have a knock-on effect on revenue. They've downgraded the revenue estimate by 60%. Let's go across, listen in to Suresh. He was speaking with my colleagues Vishy and Samina earlier today. Have a listen on that conversation.
So I think what we have always been telling here is that the most important business for Paytm continues to be its financial services business, or its lending business. That is the partnership that it has with all the lenders. And they do have a great set of data, and of course technology also, which they used to leverage and act like a good digital DSC and source these customers and give it to the lenders, and the lenders are happy paying them a certain take rate. Now, the problem here is what's happened here is because of the restrictions which are imposed, which have been imposed on the Paytm Payments Bank, there is clearly a worry that there could be exodus of a lot of customers as well as the merchant ecosystem. If that indeed happens, clearly the lenders will have to reevaluate their a decision or relationship with the with 197, which is the parent company of Paytm Payments Bank. Now, our channel checks reveal that indeed is the case. The lenders are reevaluating their position with 197. Could be for a variety of reasons. One of the largest lenders, has already reduced their exposure to Paytm by from 2,000 crores at the peak down to 600 crores now, right? So you have seen significant scale down by the lending partners, and there is a possibility that there are more in the pipeline, and at least some of them have obviously kept lending in a limbo for the time being. So all that is actually will have a corresponding catalyst effect on the entire company and its business model of a profitability model. So the call that we have taken very clearly is the fact that there will be a significant reduction in the distribution business revenue, and that, remember, is the highest EBITDA contributor in our view. And in the issue of the fact that these numbers can come down quite significantly, we of course have changed our view and accordingly cut our target price to $275.
So I would say that's one of two things that has soured the mood even further. Not that it was very positive overall, but has soured the mood even further on Paytm. The second one would be what Governor Shaktikanta Das said yesterday in a press conference when asked about the Paytm issue. He was very, very clear that those who are thinking there will be a review on the RBI's decision on Paytm are mistaken.
और जहाँ तक आपने पेटीएम रिलेटेड क्वेश्चन पूछा, हमने जो कहा था कि हम इस हफ्ते एक FAQ रिलीज़ करेंगे। मेरा अनुरोध रहेगा आप वो FAQ तक वेट कर लीजिए। और हम जो डिसीजन लेते हैं रिजर्व बैंक में बहुत सोच समझ कर लेते हैं। महीनों भर, 1 साल 2 साल एंगेज करते रहते हैं। कोई भी एंटिटी हो, वो बैंक हो, पेमेंट बैंक हो, NBFC हो, कोऑपरेटिव बैंक हो, किसी के खिलाफ अगर हम एक्शन लेते हैं, मैं पेटीएम के बारे में नहीं कह रहा हूँ, मैं जनरली कह रहा हूँ, महीनों उनके साथ इंटरेक्ट करते हैं, सालों इंटरेक्ट करते हैं, कभी कभी 2-3 साल भी इंटरेक्शन चलता रहता है। जब एक्शन नहीं देखते हैं, कोई एक्शन, इफेक्टिव एक्शन हमको दिखाई नहीं देता है, तब हम एक्शन लेते हैं। ये मैंने पहले भी हमने क्लैरिफाई किया हुआ है। तो इसीलिए बहुत सोच समझकर हमने फैसला लिया है और अनाउंस करने के मतलब 10-15 रोज़ के बीच में कोई रिव्यू, वो जो आपने कहा वो रिव्यू की कोई यहाँ पे आई थिंक वो जो वर्ड है रिव्यू अप्रोप्रिएट नहीं होगा। लेकिन मैं उसके साथ साथ ये भी कहना चाहूँगा कि आप जो FAQ हम इशू कर रहे हैं उसके लिए आप वेट कर लीजिए और फिर उसमें जो सारे कठिनाइयाँ हैं कस्टमर्स को, हमारा प्रायोरिटी ये है कि कस्टमर जो है, डिपॉजिटर जो है, उनको किसी तरह की असुविधा ना हो। इसीलिए हमने 1 महीने का टाइम दिया है। एक्शन 31 जनवरी को लिया, 29 फरवरी 1 महीने का टाइम दिया है। टाइम इसीलिए दिया गया है क्योंकि जो ट्रांजिशन है, कस्टमर इंटरेस्ट जो है, डिपॉजिटर जो इंटरेस्ट जो है, वो हमेशा अपर मोस्ट है। सो इसीलिए हमने वो टाइम दिया है ताकि वो जो कस्टमर्स और डिपॉजिटर्स वो मतलब अपना जो फैसला लेके जो एडजस्टमेंट, जो ट्रांजिशन करना चाहते हैं वो कर सकते हैं।
Okay, so very clear words over there reiterating that no deal or no laxity on Paytm. Now, meanwhile, we'll talk about Eicher. The Royal Enfield maker has announced its Q3 results. Profits rose nearly 6% as compared to the expected 30%. That is why you saw a bit of pressure coming in on Eicher. It's recovered though from its dips. Vinay joins us with more details. Vinay, what has not worked for Eicher this quarter?
Yeah, Tamanna, so I would like to correct you a bit there because the profit rose 34% on higher sales, and this was driven by the higher sales of Royal Enfield as well as the sales that they get through the VECV, that is their commercial vehicle arm. So the commercial vehicle sales rose 14% to 20,000 units. So if you look at the Royal Enfield sales, they rose just 3% in the quarter. So if you can see, there was a contribution of price hikes as well in the revenue increase. And as expected, the margin expanded because of the lower commodity cost. And this could be a margin that could be high in terms of last 3-4 years, because 26% is a good margin for the company. And if we look at the sales that I told you already, that 3% is a modest rise in sales, and commentary is awaited on the demand for CVs and as well as the lower end motorcycles, that is down from 350cc for the company Royal Enfield that is there. So analysts will await that what kind of demand outlook is there for the motorcycles in the below 350cc segment and as well as in the commercial vehicle segment as well.
Understood, Vinay. Thank you for that. Of course, Oisha coming out with a decent set, in fact, a slightly better than what the street was penciling in, but the stock is trading lower, marginally lower now. In fact, it was down 1% just till a few minutes back. But let me quickly take it to both our guests with regard to Oisha first. Sony, if you can give us your views with regard to Oisha on charts. How are charts looking? What would you suggest to clients?
I think on charts, there was a resistance around 39.50. Today's low, today's high is also around that level. It was not able to cross. So any fresh longs that has to be initiated must only happen above this level. So above 3950, you can see some sizable short covering taking place up to 4020, 4050 odd levels. On the downside, of course, we've, the support was around 3800. It has broken on intraday basis. The closing is important. If it's able to close above 3800, it can consolidate from this level till 3900, 3950 on a higher side. So not a lot of movement can come, but until and unless either side of the range is not broken. So just look forward to breaking above 3950 from after which you can add your longs for targets of 4020, 4050 odd levels. And once it has happened, so I think if it just breaks above that level, then one can place a stop loss around 3900. But as of now, it's just a wait and watch for the levels to come.
Right. Dharmesh, let me take it to you. Some amount of pressure forecasted with regard to CV. Some commentary, of course, awaited. We'll have to wait and watch for that. But Royal Enfield seem to be doing quite well. That's where a chunk of the margins come from. Your views with regard to Oisha?
If you look at the quarterly numbers of Royal Enfield, that was not great as compared to, say, Bajaj Auto or Motor. Though the segments are not exactly comparable as of now. But my own sense is Bajaj Auto looks to be a better, option at the current market juncture, because both valuation-wise, both are equally priced, but the return ratios are also the same, the margin profiles are similar. But Bajaj Auto has an advantage of overseas market picking up. So if that picks up, it will definitely be in a sweet position. Plus, it's a rollout of Triumph and Hero MotoCorp's Harley rollout. So that will definitely have some impact on the sales. So 3% was what the quarterly run rate was there on the Royal Enfield, and that for 1 or 2 quarters will be under some cloud. In the entire auto pack is enjoying the benefits of low commodity prices, so the margins have been improving. That is likely to be seen because this year also commodity prices are not going anywhere. As of now, it's still year till date they are down only. So I think Bajaj Auto should be looked into rather than Eicher Motors on a relative scale basis.
Understood. Got it, Dharmesh. Dharmesh, I also, while I have you, want to understand your views with regard to Paytm and how are you advising clients on their positions in Paytm from a slightly medium to longer term perspective. How do you view the business on the back of recent developments that have happened? Also, I want to try and also break down how you're looking at valuations, because 130 rupees in terms of cash that Paytm currently holds per share versus the 380 rupees stock price. How should one look at this business now?
Yeah. So I mean, Tamalna, maybe she remembers last week, same day, we were having the same conversation when Paytm hit the low circuit and was recovering that day very fast. So my take was same. I was never a buyer in this business. And whichever clients comes for advice, we have said very clearly that this is not a sustainable business model. And after the developments which happened, because this financial DSA was the thing which was being the turnaround for Paytm, and that is where the maximum profit contribution was coming from. And but that has now gone for a toss. I mean, if you hear Mr. RBI's Governor, Mr. Saktikanta Das, he was very clear in sounding out the word transition. So the moment you said you are giving clients or customer a time period to transit yourself, that means that business itself is likely to be locked down completely. I mean, and they said that it's months and years of conversation which has been happened over a period of time. So again, this is too blatant non-compliance which has happened over a period of time. And I admire the courage for such kind of a non-compliance to be there for such a long period of time. So this business is now on a shutdown space. Coming on the valuation point, you pointed out right now that 130 rupees is the cash in the balance sheet. To my mind, that's the valuation of the Paytm which should be happening.
All right, yeah, Dharmesh, I do remember that conversation on Paytm, and yes, you were absolutely very clear that you wouldn't go anywhere near it. I mean, actually, I wouldn't even ask Soni her view on it, because fundamentally it seems to be in trouble right now. You would agree, Soni?
Absolutely, Taman. I think quite in sync with the technical and derivatives view also.
All right. Meanwhile, the story this afternoon is a recovery that we saw building up midday as well, which is the one in public sector stocks. And this has been a conversation, we've been having on NDTV Profit. In fact, if you tuned in this morning, we also saw how you will see perhaps some recovery. Maybe we've gone into oversold territory. There will still be pockets of pain. But, even as we speak, the Nifty PSE not doing too badly at all. NLC is having a great day. NHPC, Cochin Shipyard, all of them doing fairly well this afternoon. So that's one big theme that you're seeing. The other one would be banking. Banking stocks also having a good day. The pain points though continue on metals, and yes, the drag is coming from Hindalco, but even if you see a SAIL, an NMDC, and Nalco, all of them showing that kind of listless day completely. Soni, I just want your take on some of the metals names, and this has been an unclear territory so far. Is there anything that you would pick at this point?
I think metals, we've seen the stocks had actually picked out quite well, a lot of stocks, but perhaps because of peer impact like Hindalco's results, we've seen some stocks coming out to a good correction. So from the current level, Tata Steel is a very good pick. So Tata Steel, it has, made a low of 134. 130 is its main support. So any small declines from current level till 136 can be bought. Keep a stop loss of 130. It should bounce towards 145, 148 once again. So I think for a better pick would be Tata Steel for the pack.
Tata Steel is the pick of the pack for Soni. But thank you so much, both of you, Soni as well as Dharmesh, for giving us your views through the show today. Thank you for that. We're very close to closing, and let's quickly have a look at where markets are really settling at close today. There you go. The Nifty Bank is leading the pack 1% higher, but the Nifty 50 up around 0.75% or thereabouts. We'll have that number shortly in front of you. When I'm looking at the broader markets as well, very little to complain about, especially where we're very close to close, and there you go. Broader markets too doing fairly well after a tough day. It's been a bit of a flip-flop, 1/3% higher on both the Nifty mid-cap as well as the Nifty small-cap indices. Let's have a look at the heat map to see where we're settling in and what pockets. See, there you go. The breadth of the market, especially on the benchmark, looks quite good. You're looking at just about 13 to 15 stocks in the decline, but outside of that, it's led by Coal India, UPL. Some of the stocks which have suffered both last week as well as this week. ICICI Bank is doing fairly well in trade. There you go. Markets have closed. We also have two banks, ICICI Access, which have done fairly well. Let me also pull up the list of contributories to try and get more perspective as to where the gains have come from. ICICI Bank, there you go. Reliance Industries has done fairly well, even though it's been in the green through the day. A fairly decent day for Reliance as well, and Axis Bank and Coal India leading the pack. Among the drags, Hindalco was the key drag. Is drag markets by around 25 points. Out of 43, that's a major chunk which Hindalco has taken. Let's also have sectoral indices to quickly get more perspective. There you go. The Fin Nifty is what has driven markets higher, and the Nifty PSE. Let's mark out those two. Let me first pull up the Nifty Bank and its constituents, if we can do that very quickly. There you go. You have PNB, Axis, ICICI, all of which are in the green. Only Bandhan and AU were in the red. Now if we can have the Nifty PSU Bank to give it more perspective and angle, and what you'll realize is the Nifty PSU Bank was a shade of green today, except for probably Indian Bank and UBI. You had pretty much all banks trading in the green, which is a positive again after what we saw yesterday. That's definitely a positive. And last off, let me pull up the Nifty PSE basket to kind of highlight. There you go. You have the likes of an NHPC, Coal India, Engineers India, REC recovering very, very well. 2.5% plus in terms of gains on all of those. NBCC, SAIL, BHEL and SAIL on the back of numbers. A bit jittery, but otherwise you've seen a decent day from the PSE pack. But that's all that we have for you on India Market Close today. We'll see you tomorrow morning, of course, as markets open. But for now, from all of us who put the show India Market Close together, Tamanna, myself, thanks so much for watching.
अंतरिम बजट के बाद वित्त मंत्री निर्मला सीतारमण का ये पहला इंटरव्यू है। प्राइवेट नेटवर्क में ये पहली बार हमसे बात कर रही हैं।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right. Some believe in swiping right. Some run away from risk. Others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the stock.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
और जहाँ तक आपने पेटीएम रिलेटेड क्वेश्चन पूछा, हमने जो कहा था कि एक हम इस हफ्ते एक FAQ रिलीज़ करेंगे। मेरा अनुरोध रहेगा आप वो FAQ तक वेट कर लीजिए। और हम जो डिसीजन लेते हैं रिजर्व बैंक में बहुत सोच समझ कर लेते हैं, महीनों भर 1 साल 2 साल एंगेज करते रहते हैं कोई भी एंटिटी हो, वो बैंक हो, पेमेंट बैंक हो, NBFC हो, कोऑपरेटिव बैंक हो, किसी के खिलाफ अगर हम एक्शन लेते हैं, मैं पेटीएम के बारे में नहीं कह रहा हूँ, मैं जनरली कह रहा हूँ, महीनों उनके साथ इंटरेक्ट करते हैं, सालों इंटरेक्ट करते हैं, कभी कभी 2-3 साल भी इंटरेक्शन चलता रहता है। जब एक्शन नहीं देखते हैं, कोई एक्शन, इफेक्टिव एक्शन हमको दिखाई नहीं देता है, तब हम एक्शन लेते हैं। ये मैंने पहले भी हमने क्लैरिफाई किया हुआ है। तो इसीलिए बहुत सोच समझकर हमने फैसला लिया है और अनाउंस करने के मतलब 10-15 रोज़ के बीच में कोई रिव्यू, वो जो आपने कहा वो रिव्यू की कोई यहाँ पे आई थिंक वो जो वर्ड है रिव्यू अप्रोप्रिएट नहीं होगा। लेकिन मैं उसके साथ साथ ये भी कहना चाहूँगा कि आप जो FAQ हम इशू कर रहे हैं उसके लिए आप वेट कर लीजिए और फिर उसमें जो सारे कठिनाइयाँ हैं कस्टमर्स को, हमारा प्रायोरिटी ये है कि कस्टमर जो है, डिपॉजिटर जो है, उनको किसी तरह की असुविधा ना हो, इसीलिए हमने 1 महीने का टाइम दिया है एक्शन।
Hello and welcome to NDTV Profit. I'm Smina Nalwala and with me is Vishwanathan Nair and you're watching NDTV Profit, and the big story once again this morning is Paytm. Well, the stocks of Paytm, Rishi, are down over 6% when I last checked after foreign broking firm Macquarie downgraded 197 Communication to underperform and sharply cut the target price to 275 from 650 rupees. This is a 33% discount from yesterday's closing price. It's up 400 now on Paytm. Vishy, not looking good. Even, I mean, the report that Suresh Ganapathy has put out, the header says, downgrade, fighting for survival.
Yes, that's right. So, fighting for survival is the theme for Paytm at this stage. Things are not looking so great on the business front. Jan 31st, the Reserve Bank of India comes out with a set of strict restrictions, business restrictions on Paytm Payments Bank, which is a key associate of 197 Communications, the Paytm parent. Paytm Payments Bank is asked that after 29th of February, you will not add fresh deposits to the customer accounts. You will also not be allowed to conduct any kind of credit or top-up transactions. Customers are allowed to use their existing balances, but beyond 29th of February, it looks highly unlikely that things are going to go in Paytm's favor. We reported Paytm Payments Bank might be losing its license. That's probably where the Reserve Bank of India is headed to. Since then, a lot has happened on Paytm. People have gone to the government. Vijay Shekhar Sharma has approached the government to try and get some kind of easing of this restriction. Didn't really work out. But here we are, and we heard the RBI governor just now saying that...
just to talk about timelines, on 31st of Jan is when they imposed the major business restriction on Paytm Payments Bank. As of 12th of Feb, which was only yesterday, Paytm's payment operator, 197 Communication Board, formed a group advisory committee chaired by the former SEBI chief to work towards strengthening the compliance and regulatory matters. But no matter what Paytm or the parent company is currently doing, the markets don't seem pleased, the regulator is definitely not pleased, and brokerages as well are still coming out and cutting target prices. But we've got Suresh Ganapathy on that note of Macquarie Capital. Suresh, good morning. What a morning, right? You put out a report, the stock gets beaten down, and the header of your report says fighting for survival. You've not only just cut the target price, but you've said that they will be struggling. You want to just take us through the interns of why have you cut the price down to 250 from the current around 400 rupees? So that's a 35% downtick from yesterday's close. What are the key concerns here?
Sure. So I think what we have always been telling here is that the most important business for Paytm continues to be its financial services business, or its lending business. That is the partnership that it has with all the lenders. And they do have a great set of data, and of course technology also, which they used to leverage and act like a good digital DSC and source these customers and give it to the lenders, and the lenders are happy paying them a certain take rate. Now, the problem here is what's happened here is because of the restrictions which are imposed, which have been imposed on the Paytm Payments Bank, there is clearly a worry that there could be exodus of a lot of customers as well as the merchant ecosystem. If that indeed happens, clearly the lenders will have to reevaluate their decision or relationship with the with 197, which is the parent company of Paytm Payments Bank. Now, our channel checks reveal that indeed is the case. The lenders are reevaluating their position with 197. could be for a variety of reasons. One of the largest lenders, has already reduced their exposure to Paytm by from 2,000 crores at the peak down to 600 crores now, right? So you have seen significant scale down by the lending partners, and there is a possibility that there are more in the pipeline, and at least some of them have obviously kept lending in a limbo for the time being. So all that is actually will have a corresponding catalyst effect on the entire company and its business model of a profitability model. So the call that we have taken very clearly is the fact that there will be a significant reduction in the distribution business revenue, and that, remember, is the highest EBITDA contributor in our view. And in the issue of the fact that these numbers can come down quite significantly, we of course have changed our view and accordingly cut our target price to $275.
Right, Suresh, this is Vishwanath here. The question that I think a lot of people seem to be wondering is the future of the parent app with regard to where the payments bank is. But your report mentions the lending part, which of course you detailed just now. I wanted to get a sense as to, when the restrictions came in, the company came out and said 300 to 500 odd crore worth of hit on EBITDA. But it seems that the hit or the pain is going to be far more, far deeper and far widespread than previously anticipated when they spoke to the analysts.
Our view, obviously the company's view could be different, but note that at the end of the day, the impact is based on certain things which you can't do. But what about the impact which is coming from the fact that in future you will lose customers and you will lose certain proportion of your lending business? That obviously no company can quantify and be more futuristic, and that's the call of analysts like us, right? So we are taking a call that there can be a reasonable exodus of customers as well as merchants, and that could have a significant implication with respect to their lending abilities, and consequently that this segment of the revenues will also get affected, and consequently profitability. So the 300 to 500 crore impact doesn't take into account a lot of futuristic developments which could very well play out, not necessarily as per the management's expectations, right?
The one part that came out, we reported here as well as some other news reports out there talking about compliance specific issues. What seems to be playing out is also a reputational problem, apart from, of course, the financials and the impact of these norms on the customer base. The reputational hit, of course, also impacts future business relationships. Just take us through what could maybe hit Paytm through because of this reputational problem.
It's already seen in the case of the fact that the lenders are relooking at the portfolio or the relationship that they have got, right? And also the fact that because of whatever issues that has happened and Paytm Payments Bank operations have been severely restricted by the Reserve Bank of India, what's happening here is any new onboarding of customers will also require a very detailed KYC check to be done. So it is not that tomorrow Paytm can get up and sell their crore merchants to the banking players, right? Any bank who is going to take, for example, the nodal accounts from Paytm Payments Bank, they will have to do their own significant due diligence and KYC of each and every customer or merchant that they are onboarding. That makes the entire process cumbersome. And that's a function of some of these regulatory actions and, as you said, the reputational issues which have been brought to the fore.
29th February deadline then seems very tight considering the task at hand, right?
Yeah, of course. Yes, it's a difficult. I mean, that's what we don't know. The media was speculating. You guys were speculating that he went and met Reserve Bank of India and Nirmala Sitharaman, Finance Minister. So obviously, I guess that close shows the gravity of the situation as to why, I mean, those kind of meetings, as per the press reports, were required because maybe there's some relaxation that they sought out for. But clearly today also, Reserve Bank of India governor has gone ahead and said that there is not going to be any rethink on the decision and it's final, right? So.
Right. Suresh, so all of this that you mentioned, you obviously don't believe is already in the price, right? And hence you've downgraded the stock to levels of 250 odd. Yeah. When you looked at the valuations of this, up until the early Jan, you could get multiple businesses for 197 communication in terms of pricing and valuation. From where it stands right now, and when you value the company or value 197, is that 250 rupee price per share only valuing or taking into consideration the UPI app that may be untouched or may survive for now at least?
No, first, my target price is 275, not 250. Just the technical correction
Thank
there.
you.
But yeah, no, but look, I think we were always of the view that whether it is UPI or whether it is wallets or whether it is various other commerce services and soundbox services that they provide for their merchants, everything at the end of the day boils down to, more like an EBITDA neutral kind of a position, because obviously they also have to make a lot of tech investments. And that helps them to retain the customers in the overall ecosystem. And on top of that, they build their lending business, right? So the call here is that you actually monetize your lending business in a big way. And obviously the other businesses are just barely breaking even. The highest margin is on the lending business. Now, the fact that, customers may come to the app for using UPI, which is still allowed, that's not, nothing stops them from using just like a Google Pay or a Phone Pay, except that at the sponsor bank level, there may not be Paytm Payments Bank and maybe some other bank which is there, which is the case with Google Pay and Phone Pay. But then my point here is then how you are different, right? At the end of the day, your competitors are also doing something similar. You're just aping them in a way. And you of course had a great advantage of being a two-way ecosystem player between the merchants and the consumers. The fact that you can no longer maybe sustain that to the same level as you had before this payments bank restriction makes life even more difficult with respect to getting the right kind of customers to monetize or leverage and sell it to your lending partners. That's where the challenge lies in.
Suresh, now let's do this, right? Let's do a little more forward-looking discussion here. A few quarters out, assume the dust settles, the stock continues to correct, goes on all the way to 270, 300. Now at that stage, does it then become a buy? A, and B, in the interim when it goes down all the way from 400 to 270 or even sub 270, what would it take for you to reconsider your rating on this one? Could there be any option or opportunity of a re-rating for Paytm? You've also talked about a bull case and a bear case, and in the bull case the implied valuation from what I see is 540 rupees. So there is still that chance, is there?
No, of course. Look, I think let's look at it in this way, right? Numbers, what the investors should look at. They generated about 600 crores of quarterly revenue for the distribution side of the business, which is the distribution of financial services, predominantly loans. Now, if you were to annualize it, that comes out to be 2,400 crores. Our numbers take into account a 50% reduction or 50 to 60% reduction from that level. Now, the call here is how much can you sustain that? And if you see 2-3 quarters down the line, them touching a bottom and then again starting to grow that number 20, 30% or 40%, then there is obviously a turnaround, which means the lending, they're able to monetize the data, they're able to retain some customers in the ecosystem, the lending partners are happy lending that. So the critical number you have to look at is this quarterly run rate of 600 crores, which they reported for third quarter in terms of distribution business revenue, how much sustainable that is, that is going to come down now in the interim and then post 2-3 quarters, can that recover back, is ultimately going to determine the eventual outlook on Paytm and obviously the eventual target price post that.
Right, Suresh, we'll quickly slip into a break. We'll come right back, continue this conversation on Paytm, and also we'd love to talk about HDFC Bank. So give us a couple of minutes, we'll be right back with you.
फिस्कल डिफिसिट के नंबर को आपने अच्छे से मैनेज कर लिया, तो थोड़ा खर्च करने का रूल था, चाहते थे तो कर सकते थे आप, लेकिन वो उस चक्कर में भी या उस लालच में भी आप लोग नहीं आए। मेरा कहना आपके पास स्पेस था, फिर भी क्यों नहीं किया?
सबके मन में ये जरूर एक भरोसा, कॉन्फिडेंस था कि जनता समझ रही है कि जो योजनाएं हम तक पहुंचा और सरकार जो ट्रांसपेरेंट तरीके से किसी लालच में नहीं पड़ा और कुछ लीपापोती करने का कभी कोशिश नहीं किया, ऐसे सरकार जिसका समर्थन होना चाहिए हम देने को तैयार है, ऐसे मूड में देश है।
In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back. You're watching The Big Story and we are with Suresh Ganpati, MD Head at Macquarie Research. Suresh, thank you. In the first segment, you highlighted for our viewers what is concerning for you on Paytm and of course the rationale behind the reduction in target price. I want to go from one that you're concerned about to one that you're very optimistic about. Starting with HDFC Bank, are you buying HDFC Bank in the current price? I believe you've reiterated your outlook on the stock and continue to like this. So I'm taking a cue from that and assume that you'd be recommending a buy on the stock.
It really depends upon the time horizon, right? So if it's indeed going to be 6 months, I think the stock is a dead money for the next 6 months because we actually need to see the actual improvement in performance with respect to margins and overall that flowing into core PPOP growth or earnings growth, right? My call here is very clearly from a 18 to 24 month perspective. We are confident that the bank would engender a process of consolidation, which means loan growth will be below deposit growth. And that could result in improvement in margins and eventually improvement in earnings growth. So that's how I'm looking at the outlook from a longer term perspective. But that process is going to be a slow recalibration exercise where you're not going to see immediate gratification coming into numbers in the next couple of quarters.
On the business front, HDFC Bank, this third quarter numbers were not exactly very exciting. I just wanted to get your sense as to what you picked up as maybe potential positives.
I think if you look at particularly in the third quarter numbers, they did somehow manage to protect margins. But having said that, clearly, I feel the issue has also been in terms of, let's put it this way, over guiding and under delivering, right? So that has been, the communication has been an issue which has resulted in such a sharp reaction by the markets. Having said that, I guess the predominant concern in general for everybody in the system has been tight liquidity, and HDFC Bank is also not immune to it. Unfortunately, the timing of the merger has been pretty inappropriate because it has come at a time when liquidity in the system has tightened very significantly, which has had a corresponding effect on them. The call very clearly is how well they can actually replace the HDFC high-cost liabilities with low-cost liabilities and manage to improve margins in coming quarters.
Right. Suresh, one area that I want to talk to you about, in fact, I'll break this down, is first talk to me about retail deposits. Now, HDFC Bank has led from the front in this space, but they clearly are being or have been facing challenges in the last few quarters from what we've seen. How do you expect the retail lending to move going ahead? Do you think there could be a turn in the space? There could be some sort of positive triggers that could drive the retail book for HDFC Bank?
Retail deposit accretion, 3Q was maybe weak, but 9-month number is still pretty strong, right? So you'll have to look at it more in terms of 9-month number here rather than looking at quarter, because there will always be quarterly fluctuations. 4Q is usually very strong, so we do expect a strong 4Q for them in terms of deposit accretion. I think from a overall deposit accretion standpoint, the bank has done a good job from a standalone flow perspective. The problem here is the requirement or ask rate is so high because of the acquired stock from HDFC Bank is that it makes life a bit more difficult for them. As far as lending is concerned, they have been a bit more cautious compared to the other banks in the ecosystem. Their unsecured loan growth has been a bit weaker, and that's because they're far more conservative in terms of their underwriting standards and approach towards this. So I guess the retail lending will grow faster, and it should grow faster than the corporate book, and that should be relatively margin accretive over the course of next 12 months. So these are some of the things which they will have to do it on the ground to manage the overall profitability.
Right, Suresh, you mentioned the communication issue as far as the management is concerned. I'm trying to understand this overpromise, underdeliver. Is this a temporary sort of an issue? Have they, in their commentary to analysts, have they sort of figured that maybe commentary needs to be slightly more realistic for the market to appreciate what they're doing at the bank?
No, for that we'll have to wait for the next quarter, right? Currently, the results are over. We'll have to wait. What is the change in stance after the third quarter? So when they report their full year numbers or fourth quarter numbers, we will have a clarity as to what are they looking at it, what is the revised set of guidance going forward. So it's a bit too early for me to actually take a call on that the communication has changed. We'll have to actually wait for another quarter for us to get that confidence that maybe they are on the right track, both in terms of execution or at least in terms of the thought process, and eventually that translating into better communication to the overall market.
Suresh, while we're talking about deposits, managing costs, not enough branches being open, lack of communication potentially from the new management, the 5-year returns on HDFC Bank are not much to write home about either. So while the merger could have just been a couple of years, even before that, the underperformance was fairly obvious for most people to see. What, in your opinion, is going to take for HDFC to do the heavy lifting and actually start moving up? Because this was the darling of D Street for many decades together, right?
Yeah. So they have to get the core PPOP growth right. It's very clear. Unless and until that happens, core operating profit, as we said. What exactly happened is even during the earlier years, as you pointed out, their operating profit growth started coming down. Because of the fact that they focused more on corporate loans. Corporate loans were low margin, so operating profit got affected, but at the same time, provisions were low. So the market, unfortunately, disregarded the ROA that they reported and focused more on operating profits, right? So they have to get the mojo back, and for that, they will have to get back the operating profit growth going ahead. And that will singularly drive re-rating for the stock.
So you think it's fairly valued at this price, Suresh, in that case?
Well, if it is 2 standard deviation below historic averages, how much more can it go down?
That's the question. That's the big question that we all want to know.
Yeah, so it's valued at 12 times PE for a conservative 14-15% earnings growth. So I guess it's still obviously pretty. I never thought I would say this in my entire lifetime, but I'm still saying HDFC Bank right now is the best value stock to own in the banking space.
Makes sense, Suresh. But that's all the questions that we had for you today. Thank you so much for joining us, taking your time out and speaking to us about all these different topics. Thank you so much, Suresh, for joining us, and thank you so much for watching.
So Suresh is aggressively bullish on HDFC Bank and aggressively negative on Paytm. Those are two extreme views coming in from Suresh Ganpati. Both the stocks in focus. 197 is seeing the rout this morning again. Sub 400 on the counter. A re-rating on HDFC Bank can be likely only if a couple of parameters are fulfilled. With that, completely out of time, Rishi, but do you want to quickly wrap this up for our viewers?
Yeah, so looks like survival for the period for Paytm. Does not look like their business is coming out of this unscathed by any manner. Payments, lending, both sides, there's going to be a deep sort of a hit, and that's what Suresh was also mentioning, that apart from the business hit, there's also a reputational problem, because some of the other lenders who are partnering with Paytm for their payments as well as the lending business will be reviewing their relationships. The 29th February deadline that the RBI has set looks really, really tight to sort of manage these problems and come out of it healthily. That's where we are, Samina. But on the HDFC Bank front, of course, things are looking extremely, extremely promising.
I'm just so confused, Rishi, because, you have loyalists, right?
Yeah.
Who will stick their neck out and bet on a bank. It just makes me wonder that, is it time for change? And I think with the way things have been moving, we've seen it in the earnings, we've seen it in the new management commentary, and the stock is a gross underperformer. It's not 6 months, it's not 1 year, it's not even post-merger. The fact remains this has been 30% returns in 5 years, and the markets have, literally shot out of the roof. But we are only here to break that information down for you. But on the sidelines of the Axis Harun event, Arun Chaudhary of Axis Bank expressed that Paytm is an important player in the fintech fintech industry, and that the bank is in constant talks with Paytm regarding new business opportunities. Listen into what Arjun Chaudhary had to say.
देखिए ऐसा है, पेटीएम पेमेंट सिस्टम्स में और फाइनेंशियल सर्विस में एक काफ़ी बड़ा प्लेयर वैसे ही है. नो प्रॉब्लम. सो बिटवीन देयर एक्वायरिंग बिजनेस, बिटवीन वॉलेट्स, बिटवीन फास्टैग, बिटवीन एमसी, वो काफ़ी कुछ ऐसी चीज़ें मैंने अभी बात करी कि फिनटेक्स कैसे इकोसिस्टम को बढ़ाते हैं, नए कस्टमर्स को उसके अंदर लाते हैं. तो पेटीएम भी ऐसा ही एक रोल अदा कर रहा है उसमें. तो उस दौरान हम लोग की बातें वैसे ही चलती रहती हैं उनके साथ. ये जो हेल्प आउट की जो बात आपने करी वो उस संदर्भ में नहीं, लेकिन वैसे भी नॉर्मल बिजनेस के संदर्भ में हमारी उनसे बातचीत चलती रहती है और चल रही है. ऑब्वियसली जो अभी डेवलपमेंट्स हुई हैं 31 जनवरी को, उसके बाद से कुछ नए डिस्कशंस भी शुरू हुए हैं और वो चल रहे हैं. लेकिन अभी कुछ इस तरह का कोई एक स्ट्रेटेजिक व्यू अभी नहीं बना है. हम लोग बिजनेस बाय बिजनेस जाके सिस्टमैटिकली रेगुलेटर की सलाह भी लेकर ये देख रहे हैं कि हमको कैसे उनके साथ काम करना है. हमारा उद्देश्य ये है कि कस्टमर्स जो हैं उनकी लाइफ में, या चाहे वो मर्चेंट्स हों, चाहे वॉलेट होल्डर्स या फास्टैग होल्डर्स या जो भी हों, उनकी लाइफ में डिसरप्शन नहीं होना चाहिए. तो एज अ लार्ज बैंक उस उद्देश्य को लेके हम लोग क्या रोल प्ले कर सकते हैं, वो हमारा प्राइमरी पर्पस है. और हाँ, उनसे बातें चल रही हैं और चलती रहेंगी. There's nothing to confirm. We have been working with them in the past on various things, and those aspects continue. New aspects which have come up as a result of the recent developments are also under discussion. So there's nothing to really confirm.
I mean, subject to regulatory, forbearance and regulator allowing us to work with them in specific areas based on whatever regulators decided, of course we'll continue to work with them. They are an important player in the fintech industry. I mean, that's a fact.
Benchmarks rebound after the one-day fall. Broader markets also close higher. Nifty Bank, the top gaining sector, led by PNB and ICICI Bank. And Tata Motors slashes EV prices by up to 1.2 lakh rupees as the company expects battery prices to soften. Passenger vehicle sales hit record high in January on the back of new launches. Paytm hits fresh record lows after Macquarie Capital slashed its target price to 275 rupees. Macquarie's Suresh Ganpati says Paytm stares at customer exodus after the RBI curbs on payment bank. Go First gets a 60-day extension in its insolvency process by NCLT. The new deadline is now set to April 5th. Resolution Professional shares the buyer's interest with NCLT. Prime Minister Modi begins his two-day visit to UAE, where he'll inaugurate the first Hindu temple in Abu Dhabi and address the Indian diaspora there. And Prime Minister Modi launches PM Surya Ghar Muft Bijli Yojana with an aim to light up 1 crore households and an investment of over 75,000 crore rupees. And police used tear gas to disperse protesting farmers at the Haryana-Punjab Shambhu border, where farmers from each state are trying to head to Delhi as part of their Delhi Chalo call. Agri Minister tells NDTV that the government is ready to hold talks, but some are trying to hijack the farmers' march. Hello and welcome. You're watching The Reporter on NDTV Profit. I'm Smriti Chaudhary. This show aims to bring you the market headlines along with national and international news. But before we move on to the show, let's see how the markets fared today. Nifty and Sensex ended in the green with metals leading the pack. I have my colleague Harsh Saita joining us for a quick wrap on the markets.
Right, it was a flip-flop of a day. We started off slightly in the red, but we've closed very well in the green, 0.6% higher on the benchmark. Also, if you can pull up the Nifty Bank, yes, that's the one that really pulled weight today, 1.4% higher, and within that, it was the slightly smaller banks which pulled weight, as well as the Nifty PSU bank pack, which really did well in trade. Let's put up the heat map to try and get more perspective on the Nifty itself. There you go, you have the likes of a Coal India, a UPL, an Axis Bank, and ICICI Bank. There you go. So two of the private banking players, Axis and ICICI, up 2% plus, which aided the Nifty Bank. Coal India and UPL doing well. UPL has been on a bit of a back burner, and that 4.5% gain will do it some good. Coal India also doing well. Among the top losers, you had Hindalco and Grasim. Hindalco on the back of the Novelis numbers as well as its own numbers, doing quite poorly in trade, 12.5% lower. If we can have the contributories as well, and what you'll largely see is the weight was pulled by ICICI Bank, RIL, Axis, and Coal India when it comes to the positives. The negatives largely Hindalco. Outside of that, nothing much to complain about. Let's have a look at the advanced decline ratio, and what you'll see there therefore is it was the market not being able to make up its mind. I'll quote Tamanna here. The market wasn't able to make up its mind for a large period of the day, but nonetheless we ended 1:1, so not bad in terms of the breadth either. Let's quickly have a look at a couple of sectors. One is the Nifty PSU Bank, because that pack was a buzz today, and you have all of the constituents pretty much in the green outside of Union Bank and Indian Bank, and very solid gains across the board. Let's also have a look at the Nifty PSE pack, because that was the other one in focus. NHPC, Coal India, Engineers India, REC led the pack there, and outside of that it was just some earnings which kind of caused some jitters. Quickly onto sectors, and you'll get a larger frame of what has happened. The Nifty Metal was 2% lower, but outside of that it was a good day for markets, up around 0.6%. Of course, have to wait and watch where we go tomorrow.
Well, thanks Harsh for that. Let's quickly talk about the auto sector. While the Nifty Auto Index closed flat, Tata Motors closed in red. But there's major news around Tata Motors. It has reduced prices of its EVs by up to 1.2 lakh crore rupees. The move comes as the battery prices are expected to drop in the future. My colleague Vinay Khulpe joins us with more details on this. Vinay, how do you think this will impact Tata Motors' margins, even though this is kind of a positive for its customers?
That's right, Smriti. So the company has already said that the EV business is already at the break-even point, and they have reduced the prices even lower now. As you said, that they are going to reduce prices up to rupees 1.2 lakh rupees. So the company has said that the reason behind this is that battery prices have remained softer in the previous months, and it is continuing to going to be soft in the future as well. So what this will do to their portfolio is that Tiago.ev, the base variant of that model will cost 70,000 lower, and Nexon.ev is going to cost 1.2 lakh lower. So this is for long range variant of Nexon.ev. The company has still commanding over 70% market share in the electric passenger vehicle market of India. So this is significant because we are yet to see whether other companies will follow the suit that are going to reduce the prices of other models as well in the electric vehicle space. We have seen that MG Motors has already reduced a week back the prices of Comet. And if we look at the outlook of the battery prices, Bloomberg NEF says that battery prices may fall to a record low of $133 a kilowatt per hour in 2024, and before this year, the fall in prices of batteries were attributed to technological innovations or higher scale of manufacturing. But this time around, the primary reason is expected to be rise in capacity, while the demand is not doing so well globally. So that is going to put the downward pressure on battery prices, and that is the result that we are seeing on Indian market as well.
Well, thanks, Vinay, for that. Now, battery prices, you rightly mentioned, we may see a fall in that. But on the Tata Motors front, the EVs will cost you 1.2 lakh rupees less now. So that's a positive for the customers. However, we're yet to see what kind of impact this is going to have on the top line of Tata Motors. But shifting focus to Paytm, that hit a 52-week low after Macquarie Capital slashed its target price to 275 rupees from 650 rupees earlier. Let's go across to Vishwanath Nair for more on Paytm's decline. Rishi, tell us a little bit more about what Macquarie had to say about Paytm.
197 Communications share dropped to about their 52-week low at about 380 rupees on the day when Macquarie Research released a report saying that Paytm is fighting for survival. Paytm, of course, since the 31st of January has been facing a lot of regulatory glare simply because the RBI has blocked fresh deposits as well as credit and top-up transactions in Paytm Payments Bank accounts. This is primarily because the RBI have noted severe compliance issues as well as supervisory concerns at Paytm Payments Bank. Now, what Macquarie has said in its report is that it is cutting the target price for Paytm from 650 rupees to about 275 rupees a share. It's also cut down its target from neutral to underperform for Paytm. Essentially, what Macquarie is saying is that because of the strictures that have come into Paytm Payments Bank, Paytm, the parent app, is going to face severe business problems itself, primarily because lenders who have been working with Paytm so far will try to relook at their relationships, which will have a direct impact on its business as well as its earning capacities. Primarily, what Macquarie is estimating is that there's going to be a 50% cash burn at Paytm, primarily because of these restrictions, as well as Paytm's ability to continue its business going ahead. And unless it finds adequate replacement for Paytm Payments Bank for its payments business, these problems are not going to go away anywhere. Essentially, at this point in time, there is a 29th February deadline. We are not sure if Paytm will be able to find adequate banking relationships to continue payment services after the 29th of February. That's what Macquarie is going to watch out for as to what happens after the 29th of February and whether Paytm is able to manage its business adequately. At this point in time, the share is down about 10% and this stock is stuck at a 52-week low, as we said earlier. And going ahead, we need to see what happens with Paytm.
Thanks, Vishy, for that. A lot of uncertainty around Paytm and come 29th of Feb, and we'll understand how this will play out further. But let's now shift focus to the Red Sea crisis. We've seen this prolonging conflict that appears to have impacted exports of Indian basmati rice to regions like European Union and Egypt. Our reporter Janani Janardhan is joining us with more on this. Janani, talk to us a little bit about the impact of the Red Sea crisis and how is that playing out?
That's right, Smriti. Like you said, right now the impact is being felt on basmati rice exports, on fruits like grapes and even buffalo meat. Now, these are some of the export items that we know of. One has to also understand that this is not a broad-based impact particularly. A majority of India's export market, when it comes to rice at least, is actually the Middle East and the Gulf countries. So from government sources, APIDA, which is the Agricultural Export Promotion Authority, has also told Delhi media today that, in fact, while there is some impact because of the Red Sea crisis to the export of basmati rice, it is also to be noted that a majority of India's export destination is actually in the Gulf countries. So why is this playing out so differentially? There are two contributing factors to this. One also being the fact that geographically the Middle Eastern countries do not need to take the Red Sea route. Any changes or any impact that they are facing is primarily due to the increased freight rates, is due to the other costs and the timing that it's taking to get exports from India to the coasts of the Gulf countries. Another thing to be noted is items like grapes. Now, these are primarily going more to the European Union, to countries there which, in fact, export a good quality of, a good quantity and quality of Indian fruits. Now, APIDA also notes that while the value has not particularly changed and the order demand still remains as is, there is a decline in volume or a moderation in volume that might be observed going forward. Of course, the exact figures we will know when the trade data release comes later this month. But as for now, what we're getting to hear is that some impact is being felt on these two items.
Well, thank you, Janani, for that and for being so comprehensive about the situation around basmati rice and even grapes. Moving on to the airline company Go First, that has received a 60-day extension from the NCLT from its corporate insolvency resolution process, with 3 parties expressing interest in taking over the airline. We have Charu Singh joining in with more on this.
Hi, so what has happened is that the National Company Law Tribunal, as you said, has extended the insolvency process time that was given to Go First. A 60-day extension has been given. This is in addition to a 90-day extension that was given in November last year, which ended on February 4th. And now the current extension, that is for 60 days, will be counted from February 4th and will continue till the date of April 5. But we have to understand that this is the last time that such an extension can be given. NCLT is not authorized, as per the law in force, to give a longer extension or to give another extension or to adjudicate on the matter any longer. If this extension does not work out, the company might be facing liquidation. Apart from this, the only reason which is available as to why the extension was given seems to be that the resolution professional submitted before the bench that there are 3 parties which have shown interest in Go First. So as a last resort, as last chance to the airline, this has been given. These 3 parties include SpiceJet, and the other 2 are the Africa-based company Safric and Sky1, which is an aviation firm headquartered in Sharjah. Let's see how the insolvency process finally unfolds after almost 1 year of going under.
Well, Safric, Sky1 and SpiceJet vying to take over Go First. Let's move on. The Prime Minister Narendra Modi will be inaugurating the first Hindu temple in Abu Dhabi on February 14. My colleague Maria Shakil, who visited the Babs temple, is getting us a report on that, and we'll be sharing some interesting insights about it ahead of the inauguration. Maria, what's so special about this temple and what are you picking up from there?
This is the beautiful Babs temple, which will be inaugurated by Prime Minister on 14th. It is spread over 27 acres. The land was given by the government of UAE, and that perhaps makes it very special in terms of that cultural connect, the connect also of civilization, one may say. This temple inauguration will be seen as also the crowning glory in what has been Prime Minister's image as Hindu Hriday Samrat. Let's try and get more details of this temple and what makes it so special. With me is Mitali, who works as a volunteer, and she'll be doing a guided tour for us.
Absolutely.
Mitali, what makes it special? I believe there are 3 temples in UAE, but what makes this Babs temple so unique?
So behind us we can see the BAPS Hindu Mandir. What makes this very, very unique is that this is going to be the first temple of its kind in the Middle East. The temple has been built according to the ancient Indian scriptures, the Shilpa Shastras. This is a stone temple and the first of its kind in all of Middle East.
Okay, so it's first of its kind, and these carvings. Yes. Where is the stone from? I believe it is from Rajasthan. Yes. And where did the artisans come from?
So on the outside of the mandir, you can see it is pink sandstone, which also blends beautifully with the color of the sand in the deserts around us. That's right. On the inside, you can see white, pristine white Italian Carrara marble, which has been carved. Let me also show you a very beautiful carving on the outside. The story of the mandir began in 1997 when Pramukh Swami Maharaj visited the United Arab Emirates, and he sat in the desert of Sharjah and he said, may there be a temple in Abu Dhabi that will be a symbol of global love, peace and harmony. This is the carving that depicts that story.
Thanks, Maria, for that. But it's time to slip into a short break. But stay tuned. We have lots more lined up for you on the other side.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the stock.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
Welcome back. You're watching The Reporter and NDTV Profit. Now, police has used tear gas to disperse protesting farmers at the Haryana-Punjab Shambhu border, where farmers from each state are trying to head to Delhi as part of their Dilli Chalo call. We're joined by our colleague Vedanta Agarwal to give us more updates from the ground. Vedanta, what's the situation like there?
Well, I come to you from the Singhu border, which essentially is the border between Delhi and Haryana. Now, this is a crucial national highway where I come to you from, and the security arrangements are absolutely unprecedented and never seen before. In fact, multiple companies, almost 20 companies of paramilitary forces have been deployed here. There you can see CRPF Jawans have been camping here for almost over 24 hours now, and you have senior DCPs, senior police officials also camping here. In fact, as we speak, there you can see the Rapid Action Forces actually performing a mock drill ahead of the farmers' protest, and the farmers currently at the Shambhu border, which essentially is the border between Punjab and Haryana, and they're expected to march towards Delhi starting this evening, though they haven't really been able to breach the border there. But of course, the preparations here are absolutely unprecedented. There you can see big cement blocks also put in. In fact, the bid of the Delhi police is actually to create an over 20-layer security. So there are barbed wires, sandbags, cement blocks, boulders that have been used here to make sure that the farmers cannot breach the security cover. That essentially is what the Delhi police is trying to do. Remember, when we spoke to senior officials of the Delhi police, they said that they've learned a lesson from the historic farmers' protests. A couple of years ago, I was on the ground when that farmers' protest happened. But this kind of security is really shocking and something that Delhi hasn't witnessed earlier. In fact, if I can ask my camera person to pan to sort of zoom and show you these spikes here as well. This is the kind of preparations that the Delhi police has made. In fact, this entire border, this is a national highway, the Singhu border, which is a key route between Delhi and Haryana. This entire border has been sealed. There you can see neither entry nor exit is allowed as we speak. And here, unprecedented deployment of security forces, paramilitary forces as we speak, and this is only expected to get this is only expected to intensify because the farmers are trying to breach the Shambhu border and head towards the national capital.
All right, tight security seen at Shambhu border, but let's shift focus to the primary markets. 3 companies will list on the bourses tomorrow. Rashi Peripherals, Capital Small Finance Bank and Jana Small Finance Bank are set for a debut tomorrow. Let's go across to Saloni Kothari for more details on this. Saloni, tell us about what kind of subscriptions these IPO got, and they're set to debut tomorrow. Tell us a little bit about that as well.
So, Rashi Peripherals, Capital Small Finance Bank and Jana Small Finance Bank are expected to list on Wednesday. They are, two from the financial space for that matter. Talking about Rashi Peripherals IPO, it's priced at rupees 311 per share and it was subscribed over 60 times. The issue was of rupees 600 crore, which was a mix of offer for sale as well as fresh issue. Now, Rashi Peripherals is expected to list at a premium as per the GMP indication, but let me tell you that that's not the right indication to have, but still expected to have a decent premium. Talking about Capital Small Finance Bank, it is priced at rupees 468 per share and it was subscribed about 4 times, and the issue was of rupees 523 crore. Now, another from the small finance space is Jana Small Finance Bank, again listing on Wednesday. It is priced at rupees 414 per share with the issue of rupees 570 crore and it was subscribed over 19 times and is expected to have a flat debut. Now, if you actually look at the listing premiums or debuts of the small finance banks in 2023 as well, have been somewhat flat or muted debut. So, it'll be interesting to see how they all list.
Well, thanks, Saloni, for that. Now, with Valentine's Day just around the corner, our colleague Sesha spoke to Ferns and Petals Managing Director Vikas Kutkutia here. Here's what he had to say about the company's business outlook for Valentine's Day. Listen in.
I think the consumerism and the taste of people keep changing over the years, and when we started as a flourish. Today we have 30,000 odd products on our site, which as you said, which encompasses almost anything and everything. But yes, flower does remain one of our strong percentage gifting option. Then of course followed by cake, chocolates, plants. Personalized is becoming big for us because people want some thoughtfulness to be part of the gifting they're doing. So now AI is playing its role. We are doing virtual gifting. Maybe a celebrity can come and sing a song for you or maybe give you a birthday message. So there's a lot on the cards.
Well, Franklin Templeton's 2 flagship funds, Franklin India Blue Chip Fund and Franklin India Prima Fund, have completed 30 years milestone. My colleague Saloni spoke to the president of the India operations about the return of 19% CAGR. Listen in.
The 30-year journey, as you can imagine, is never easy and it's never a linear path. There's always ups and downs, and you could say the same thing for the fund performance. What I would say is that when you look at the actual result at the end of 30 years, a 19% plus compounded annual growth rate, it is actually something to be very proud of because that's how you create true wealth. So I think with the ups and downs, if you have a long enough time horizon, you do create very good returns.
All right, that's all the time we have on this show today and on this edition of The Reporter. But stay tuned to NDTV Profit for more news and updates.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the stock.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Good morning. You're watching Ask Profit. I'm Smriti Chaudhary, your host. And for the next 30 minutes, we'll take all your stock-related questions. You can write to us on any of our social media channels or through the YouTube live chat. You can also message us on the WhatsApp number that's flashing on your screen right now. Or it will. There it is. And before we begin, let's take a quick look at the markets. Nifty 50 is about 0.4% higher. We started off on a bit of a choppy note in the morning, but no complaints there as of now. If you look at the constituents of the Nifty 50, we have the likes of Coal India and UPL that were losing yesterday in trade, but are up today. Coal India up over 4.5% in trade. UPL on the other hand, close to 4% up as well. If you look at the point contribution, if you can go back and look at the point contribution again for the Nifty 50, we have 100 points up and contributed by the likes of Reliance and ICICI Banks. Reliance contributing about 30 points alone out of the 100 points. We have RIL, Coal India, L&T as well. Now, if you look at the losers within the Nifty 50, the biggest loser in trade today is Hindalco. That's down 13.5%. We'll discuss more on this in a bit. Other than Hindalco, we have Grasim, that's down 3%. After this, there's Adani Enterprise and Divi's Lab that's losing less than 1% in trade today. If you look at the broader